Hello friends, welcome back. So I hope you have enjoyed learning direct taxes. Now we'll start our discussion with indirect taxes syllabus. So indirect taxes, as you all know, indirect taxes is the remaining portion which you have. Under indirect taxes you have your Hello friends, welcome GST back. As well as customs, so correct? I hope you have enjoyed learning once again. Yeah. So we'll start the discussion now. Okay. The common point is, what do you mean by tax? Is there in GST as well as direct taxes also? Tax is one of the important source of revenue to the government. So government needs money to do various different activities, and that money which government needs, government is taking from us in the form of tax. Now tax are basically of two types: direct taxes and indirect taxes. Direct taxes, the incident impact is on same person, meaning the person who is paying the tax and the person who is earning the income and paying the tax are the same person. Whereas in case of indirect taxes, the incident as well as the impact is on two different person. One person is making the sale of the goods, he will collect the taxes from some other person and pay to the government. Direct taxes is tax on income, whereas indirect taxes is the taxes on goods and services. Direct taxes, there is a concept of shifting of burden happening over here. In case of indirect taxes, there is no shifting of burden, meaning in case of direct taxes, there is no shifting of burden. In case of indirect taxes, there is a shifting of burden happening. What do you mean by this, sir? In case of direct taxes, I am earning the income and I will only have to pay the tax to the government. So the person who has earned the income is me, and the tax is also paid by me only. So the burden is on the same person. Whereas in case of indirect taxes, the burden is shifted. So if a manufacturer is selling the goods to the wholesaler, manufacturer will collect the GST amount from the wholesaler and pay it to the government. Similarly, wholesaler, when he makes the sale to the retailer, he will collect it from the retailer and pay it to the government. So what is happening? The shifting of burden is happening. Each and every person is shifting their burden to the next person. And direct taxes are progressive in nature, indirect taxes are regressive in nature. What is this point, sir? Direct taxes are progressive in nature means as and when your income is increasing, the amount of tax which you have to pay will also increase. Who says this? Direct taxes. Indirect taxes says, I don't care how much you are earning. Irrespective of how much you are earning, the amount of taxes which you have to pay will remain same in case of indirect taxes. Then what are the features of indirect taxes, sir? What are the features of GST? What are the features of any type of indirect taxes? It is RCB will win, sir. A, who is going to win the IPL this year? RCB will win, sir. R for important source of revenue to the government. C for taxes on commodities and services. B for shifting of burden. W for it has a wider tax base. I for it is inflationary in nature. N for there is no perception of direct pinch. S for it promotes social welfare, and R for it is regressive in nature. So these are the different features of indirect taxes. Now, before starting the actual discussion on indirect tax provision, let us understand some constitutional provisions with respect to indirect taxes. So there are some points which is given in our constitution. What are those constitutional provisions talking about indirect taxes? So constitutional provision with respect to taxation, Article 265 says no tax can be levied or collected unless there is an authority of law. Meaning what, sir? If you want to levy any taxes in India, if you want to collect any taxes in India, first you should take permission. The permission which will be given from whom, sir? By the government of India. So the constitution basically should have a provision with respect to that law. Only if the constitution is telling you to make any kind of law, you can make such kind of law. Then Article 246. Article 246 has a schedule called as Schedule number 7. This Schedule number 7 has three lists: union list, state list, and concurrent list. Now whatever items are contained in this union list, with respect to that, only the central government has the exclusive power to make the law. Similarly, whatever matters are listed in this state list, with respect to that, only the state government has the exclusive power to make the law. And in concurrent list, whatever items are there, with respect to those items, both central government and state government can jointly make the law. Correct? Now, before discussing again with respect to that, Article 245 says the central government has the power to make law for whole or any part of India. Similarly, the state government has the power to make law for whole or any part of that particular state. Yeah. Now coming back to this Article 246, Article 246 has a schedule called as Schedule number 7, which talks about three lists. Correct? Now, as I told you, what whatever things are there in this union list, also called as list number 1, in respect of that, who can make the law, sir? Only the central government. So the different items which are there, for example, income tax is there under union list, excise duty is there under union list, service tax is there under union list, custom duty is there under union list, meaning who can make law with respect to these types of taxes? Only the central government has the power to make such the law. And what, sir? The amount of income tax which you are paying, who will take that amount of income tax, sir? Central government will take. Custom duty, who will take? Central government will take. Who has the power to levy custom duty? Central government has the power. Similarly, state list has different activities or matters with respect to which only state government can make the law. Here, central government cannot come and interfere telling, hey, state government, please don't make such kind of law. No, here only the state government has the exclusive power to make the law. Sir, which are those points? With respect to value added tax or sales tax, with respect to tax on alcoholic liquor for human consumption, with respect to lottery, the taxes on lottery, betting and gambling, etc. Then entertainment taxes, which is collected by state government. Correct. With respect to these items, who can make the law? Only the state government has the exclusive power to make the law. Now, concurrent list does not basically talk about any tax laws. Meaning, concurrent list gives the power to both central government and state government to make the law, but it does not talk about any tax law. It talks only about some general laws which can be made by both central government and state government. Therefore, sir, why did we discuss this point, sir? Because we are going to start discussion on a topic called as goods and services tax. Now, goods and services tax is a tax which is collected by central government and state government jointly. Correct. So if a tax is collected by central government and state government jointly, there should be a power given to both of them to collect the taxes jointly. Now, none of the article in our entire constitution, nowhere in our entire constitution, it was given, the power was given to both central government and state government to jointly come together and collect the taxes. Now, because there was not even one single point in our entire constitution which gave the power to both central government and state government to collect the taxes, what happened, sir? They made an amendment in our constitution. Since there was no article in the entire constitution which gave the power to both central government and state government to jointly collect the taxes, there was an amendment made in the constitution. There was a change which is required to be made in the constitution. Now, the Constitution 101st Amendment Act 2016 was passed. So they wanted to make the change in the constitution. Why, sir? Because GST is a tax which is collected by central government and state government. So if GST is required to be collected by central government and state government jointly, I should first make the power. Correct? No. So I should first make such kind. I should first give such kind of power. To give such kind of power, what did they do? They amended the Constitution of India. How did they amend? They amended the Constitution of India by bringing up Constitution's 101st Amendment Act 2016. Using this amendment act, they added different articles in our constitution. Article 246A, Article 269A, Article 279A, all these different articles were added. Now, as you all know, if I want to make any act in India, first in the parliament, they are going to present a bill. That bill, once it is discussed in upper house and lower house of parliament, and once it is signed by the president of India, it becomes an act. So the bill which was introduced in the constitution was Constitution's 122nd Amendment Bill. This bill later became Constitution 101st Amendment Act. Now, as I told you, these were the different articles introduced. Now, what is the significance or importance of this article, sir? Article 246A gave the power to both central government and state government to jointly make the law in respect of goods and services tax. Which article? This article 246A. Please note, we had article 246, but a new article called as 246A was introduced, which gave the power to both central government and state government to jointly come together and make law with respect to goods and services tax. So it gave the power to both central government and state government to jointly make law in respect of goods and services tax. And central government has exclusive power to make law in respect of interstate supply. And this article also told what, sir? That the central government has the exclusive power to make law with respect to interstate supply. What is interstate supply? We will see all those things. As of now, understand that it was Article 246A, very important. It was Article 246A which gave the power to both central government as well as state government to jointly come together and make law with respect to goods and services tax. Meaning, this article gave the power to central government and state government, telling you guys both come together and make provisions with respect to goods and service tax and start collecting this tax called as GST. And it also told one point that I will give exclusive power only to central government to make a law with respect to interstate supply. So interstate supply, with respect to that, who has the exclusive power to make the law? The government, central government, that is the government of India or Union of India or Union government. Now, let us understand the concept of GST. Sir, what about these articles, sir? We will study about these articles later during our discussion. Let us understand what? Concept of GST. Concept of GST. Now, what is GST basically? Let us take an example wherein there is a manufacturer. So we are taking example of a supply chain which consists of a manufacturer, wholesaler, retailer and final consumer. So a manufacturer is manufacturing a product. For simplicity, we will take the rate of GST to be equal to 10%. Let us take the GST rate to be equal to what, sir? 10% for simplicity, for easy calculation. Now manufacturer has manufactured a TV for 100 rupees. Now this TV which is manufactured by him, he will not keep it for himself. What is he going to do? This TV which is manufactured by him, he is going to give it to someone else. He is going to sell it to someone else. So at the time of sale of this TV, he will collect something called as GST. Correct? So total sale price will become cost plus GST 110 rupees. Now this 110 rupees manufacturer is going to collect from whom, sir? Wholesaler. So wholesaler, because he is purchasing the TV from him, he will collect what, sir? 110 rupees. Wherein 110 rupees, out of 110 rupees, 100 rupees manufacturer will keep for himself and 10 rupees he is going to pay as GST to the government. Then wholesaler has purchased the TV for 110 rupees. Now for him the cost is 100 rupees and the tax which is paid is 10 rupees. Now when the wholesaler is selling this product, don't you think he will also add his own profit on this product, and therefore he is going to sell this profit after adding profit? So to his cost of 100 rupees, he added a profit of 20 rupees. And therefore his cost of goods sold became how much, sir? 120 rupees. His cost of goods sold became 120 rupees. On this, he is going to add a GST of 10%, again 12 rupees. So his sale price will become 132 rupees. So who is going to pay 132 rupees to the wholesaler? Sir, it is the retailer. So retailer, at the time when he is making the payment, he is going to pay total 132 rupees, wherein in this 132 rupees, wholesaler will keep for himself 120 and 12 rupees is the tax which he has to pay to the government. Now please understand this carefully over here. The liability, the output tax liability of the wholesaler, the tax which the wholesaler has to pay on his outward supply is 12 rupees. This is his liability. This is the amount of tax which he has to pay on his sales. At the time when he pays the taxes on his sales, no, government says, wait wholesaler, don't pay me 12 rupees. Do you remember that you purchased the TV from the manufacturer? When you purchase this TV from the manufacturer, you already paid him 10 rupees as GST. When you purchase this TV from the, what is government telling? Government is telling wholesaler, when you purchase this TV from the manufacturer, to the manufacturer you paid 110 rupees. This 110 rupees which you paid includes 10 rupees of GST. Now because you have paid this GST on your purchases, for you it will become an input GST or input tax. Now your output tax liability is rupees 12. So you have to pay 12 rupees on a sale which you have made. Now on whatever sales you have made, you are liable to pay 12 rupees. Government is telling, please take the benefit of taxes paid by you on your purchases. So at the time when you are making a sale, you are liable to pay some amount of tax to me. Now this tax which is there, no, you please take the benefit of taxes which is paid by you on your purchases and pay only the differential amount to me. This concept of taking benefit, of taxes paid by me on my purchases at the time of making the payment of taxes on my sales is called as input tax credit.
Okay, so what will wholesaler do, sir? Whatever his liability is there, he will subtract 10 rupees out of that. 10 rupees, why is he going to subtract 10 rupees, sir? This is the taxes which is paid by him on his purchases, and therefore differential amount will be paid by him to the government. Okay, so this is the amount which he has to pay to the government. Same thing will happen to the retailer also. Retailer on his sales is liable to pay 14 rupees. He will take the benefit of taxes which is paid by him on his purchases to the wholesaler, and he will pay only the differential amount. Why is this only differential amount is what I have to pay to the government, sir? Because GST says GST is a value added tax. What is GST, sir? GST is a tax on value addition, meaning at each and every stage of supply chain, whatever value addition you have done, only on that amount you will have to pay taxes. For example, if you see wholesaler had his cost of 100 rupees and his value addition was only 20 rupees. What is the rate of GST, sir? 10% is the rate of GST. Now his value addition is how much? 20 rupees. You apply 10% on 20 rupees, which will come to 2 rupees. Correct, not correct? This will come to 2 rupees. This 2 rupees is the tax which he has to pay to the government. Correct, no? So why, sir? Because GST is a tax on value addition. Similarly, if you see retailer also made a value addition of only 20 rupees. Now on 20 rupees, if you apply 10%, you will get how much? 2 rupees. This is the amount of tax which is paid by him to the government in cash. So what is the first concept which you understood about GST? GST is a tax on value addition. Only if you make a value addition, you will have to pay GST. Then under GST, there is continuous tax credit available at each and every stage of supply chain. Meaning at each and every stage of supply chain, whatever taxes you have paid on your purchases, you can take the benefit of those taxes. This concept is called as input tax credit. So what are they telling? Under GST law, there is continuous tax credit available at each and every stage of supply chain. Then GST eliminates cascading effect. Meaning what, sir? Under GST law, there is no concept of tax on tax. Before GST, what used to happen? There was tax collected on the tax amount. Because there was tax on tax collected, the price of the product was increasing. Now under GST law, I get the benefit of taxes paid by me on my purchases. Now because I get the benefit of the taxes which is paid by me on my purchases, I will have to pay taxes only on the differential amount. What am I taking over here? I am taking input tax credit benefit. So what are they telling? GST eliminates the cascading effect, the tax on tax. Then GST is a burden on final consumer. Under GST law, no one is paying taxes from their own pocket. If you see manufacturer, whatever tax he is paying to the government, he is collecting it from the wholesaler. Wholesaler is collecting from the retailer, and retailer is collecting from the final consumer. So who actually has the burden to pay the taxes, sir? It is the final consumer. So what is this point telling, sir? GST burden is on final consumer. The burden of payment of taxes is on whom, sir? The final consumer. Then India follows dual GST model. So there are various different models of GST. Canadian model, Australian model, correct? So India follows which model, sir? Dual GST model. Sir, what is the dual GST model? Dual GST model is a model wherein both the central government as well as state government will jointly come together and they will collect taxes. So in India, whenever you make a sale of goods or supply of services, then tax will be collected. Who is collecting tax, sir? Both central government and state government are jointly collecting the taxes. Both of them are jointly collecting the taxes. And India follows destination based principle. Now one of the questions which they ask is, what is the principle followed under GST? We follow a principle called as destination based principle. Meaning what, sir? The tax will be going to that state where the goods are destined to. Or GST is a consumption based tax. They also say GST is a consumption based tax, meaning the tax will be collected from that person where the goods are finally consumed to. And that government only where the goods are consumed, that government will get the tax revenue. Now, next concept for our discussion is the nature of supply. Supply can be have two natures. One can be, supply can either be an intrastate supply or the supply can be interstate supply. Sir, what is this intrastate supply and interstate supply? Intrastate supply means you are supplying goods or services or both within the same state or within the same union territory. Whenever you are making a supply of goods or services or both within the same state or within the same union territory, it is called as intrastate supply. What do you mean by interstate supply, sir? Interstate supply is a type of supply wherein you are making a supply from one state to another state, from one union territory to another union territory, from one state to one union territory. We will see the actual definition of interstate supply and intrastate supply in a chapter called as place of supply. But as of now, you just understand interstate supply means two different. One state to another state, one union territory to another union territory, one state to one union territory. Intrastate supply means what, sir? Supplying within same state or within same union territory. Now, whenever you supply to different states or different union territories or one state or one union territory, meaning whenever it is an interstate supply, the tax which you have to pay on that is called as IGST. What is the tax which you have to pay in case of interstate supply? IGST. And whenever it is an intrastate supply, the tax which you have to pay is called as CGST and SGST if the supply is within the same state. CGST and UTGST if the supply is between same union territory. Now, sir, you said union territory. What is union territory, sir? Now, there are some places in India which are termed as union territory, where the power is of whom, sir? Mostly central government. Central government will have direct control in these places. Now, there are totally 8 union territories in India, correct? Which are these, sir? Puducherry or Pondicherry, Delhi, Jammu and Kashmir, Andaman and Nicobar, Lakshadweep, Ladakh, Diu Daman, Dadar Nagar Haveli, and Chandigarh. Now, please note, these are the 8 union territories which are there in India right now. Now, out of these 8 union territories, there are 3 union territories which can make their own government. There are 3 union territories which can make their own government because they can conduct election over there and they can make their own government. These 3 union territories are regarded as state for the purpose of GST law. Because in these union territories they can make their own government, they are called as state for the purpose of GST law. So in these 3 union territories, we are going to levy CGST and SGST. Normally, if you make a supply in the same union territory, the tax which you have to pay will be CGST and UTGST. But however, there are 3 union territories which can make their own government. In these 3 union territories, if you make the supply within the same union territory, the tax will be the tax which you have to pay will be called as CGST and SGST because they are treated as state for the purpose of GST law. Now, the definition of state under GST law says state includes union territory with legislature, meaning state will include all those union territory which can form or make their own government. Then, so sir, then these union territories, if I make a supply, I will levy CGST and UTGST, sir? Yes. So in these, the remaining union territories, if you make a supply, the tax which you have to pay will be what, sir? CGST and SGST. Okay. Now we'll take 1, 2, 3 examples. So supplier, recipient, nature of supply, tax. From Bangalore to Chennai, if I'm making a supply, it is an interstate supply. Tax levied is IGST. From Chennai to Coimbatore, if I make intrastate supply, CGST, SGST. From Delhi to Ladakh, it is interstate supply, IGST. From Bangalore to London, outside India, inter, therefore IGST, etc. Sir, what if I make supply from Andaman to Andaman, intra, CGST and UTGST? Now, whenever it is an intrastate supply, we all know that we have to pay tax called as CGST and SGST. When in CGST will go to the central government and SGST will go to that respective state where the supply is made. So, if the supply is from one person in Karnataka to another person in Karnataka, then who will take that SGST revenue, sir? Karnataka will take that SGST revenue. But the question arises in case of interstate supply. The difficulty arises in case of interstate supply. I am making a supply from Karnataka to Tamil Nadu. I am making a supply from Karnataka to Tamil Nadu. Now I know that it is an interstate supply, therefore IGST will be levied. Now, whenever IGST is levied, this entire IGST amount will go to central government, and then central government is going to divide this between itself and give 50% to state government. The question over here is, which is the state government which is going to receive the 50% revenue? Now 1 lakh rupees, we know that central government will take 50,000, state government will take 50,000. But which is the state government where the revenue is going to go? This is where that concept becomes important. GST is a destination based tax or consumption based tax. So where are the goods consumed? The goods are consumed in Tamil Nadu. So though goods are supplied from Bangalore, the place from where they are making the supply is not important. The place where the consumption is happening, that is important. The consumption is happening in Tamil Nadu. Therefore, who will take this revenue, sir? Tamil Nadu government will take the SGST part of that revenue. Now, sir, are there any deficiencies in existing indirect tax law? Meaning the tax law, why was GST introduced, sir? We already had many types of taxes which were collected by the government before GST came into existence. Correct, no, sir? When we already had so many different types of taxes which was collected by the government, then why again GST came into existence? There were already so many indirect taxes there, no, sir? Now, lawmaker says there were some deficiencies in those laws. Yeah, sir, but what are those deficiencies? The deficiencies in existing means before GST law, indirect tax law, are certain transactions were taxed as both goods and services. Meaning there were some transaction on which they used to collect taxes as by calling them as goods as well as services. Meaning there were some transactions which were called as goods also and services also, and by calling them as goods as well as services, they were collecting taxes. Meaning central government also was collecting taxes, state government also was collecting taxes. So there was no clarity whether a particular transaction is treated as supply of goods or supply of services. Then multiple taxes were collected by the same state government. Now if I'm staying in one state, let us say the state of Karnataka or Tamil Nadu, whichever state, that state should at least collect one tax, no? See, if you're one single state, in your entire state you should collect one single tax, no? In the entire state also, if you're collecting multiple taxes, that is wrong. But lawmakers, before, what used to happen, one single state government only was collecting many different types of taxes. They were only confused what to collect on this particular transaction. Then SENVAT was not integrated with state level VAT. So SENVAT is central value added tax, and state level VAT is value added taxes collected by the state government. They were both not integrated. They were both not interrelated. Meaning what, sir? SENVAT had their own provisions. The central government used to make the provisions with respect to SENVAT, and state government used to make the provision with respect to state laws. And each and every state government was making different types of law. Taxes on services is not integrated with taxes on goods. Here also same thing. The taxes on services taxes was collected by central government, and on goods taxes was collected by state government. There was no integration. Correlation only was not there. Then CST was not VATable. Whenever you used to make a supply from one state to another state before GST law, okay, they were collecting something called as central sales tax. This central sales tax was not VATable, meaning whatever CST you would have paid, that CST benefit you were not able to take under VAT system. Now, these are the deficiencies of existing or pre-GST taxes. Now, sir, GST came into existence, no, sir. So, I heard, sir, there are many taxes which got merged with GST, sir. Is it true? Yes. So there were many taxes which was collected before GST law. Now all those taxes have been removed and one single tax is getting collected. Now which are the taxes which got subsumed with GST or merged with GST, sir? The taxes which got subsumed with GST are central taxes as well as state level taxes were subsumed. Which are the central taxes which got merged, sir? Central excise duty was collected before. Now it is part of GST. central sales tax, services tax, CVD and special CVD collected under customs law, countervailing duty and special countervailing duty, excise duty on medical and toilet preparations was collected before GST law, and all other type of surcharge and cess which was collected by the central government on supply of goods and services. For example, Krishi Kalyan cess, Swachh Bharat cess, all these cess were collected before GST law. Surcharges and cess which was collected before GST law on goods and services. These all taxes collected by central government is now merged with GST. Similarly, there were many state taxes also which was collected before GST law. Many state taxes which was collected before GST law is now merged into GST. Sir, which are those state taxes, sir? State value added tax. Then entertainment taxes, except those collected by local authority. When you go watch movies, no, they used to collect something called as entertainment taxes. That is now merged with GST. Tax on lottery, betting and gambling. Whatever taxes they were collecting on lottery, sale of lottery or betting activities, gambling activities, now that is not collected, that is now merged with GST. They will collect GST on that. Purchase tax or entry taxes was collected. Then all other type of surcharge and cess which were collected by state government got subsumed with GST. Sir, are there any taxes? You told that there are some taxes which got merged with GST, sir. But are there any taxes which did not get merged with GST? Meaning, are there any taxes which are still being collected by the central government and state government respectively? Yes. Excise duty on alcoholic liquor for human consumption. Alcoholic liquor for human consumption, on that only the state government has exclusive power to levy the taxes. So that alcoholic liquor for human consumption which is there, no, on that whatever taxes was collected before, still now also that is getting collected, and that is getting collected by whom? State government only. Similarly, basic custom duty. Whenever you import or export anything from India or to India, then if you're importing anything to India or exporting something from India, then the central government was collecting something called as basic custom duty. That basic custom duty which central government was collecting on import and export is still getting collected. They are still collecting that amount. That is now not merged with GST. That is still there. Property tax and stamp duty. So if you have a property, no, if you have a land or building, etc., on that you will have to pay something called as property tax. And when you buy and sell property or land, building, etc., you will have to pay something called as stamp duty. That is still getting collected. Then electricity duty is collected. Some states collect electricity duty. So they collect tax on electricity. That is still getting collected. And entertainment taxes which was collected by local bodies. Local bodies are still collecting that entertainment taxes. Now, few important points are there. There are some goods, for example, tobacco and tobacco products. On tobacco and tobacco products, GST as well as pre-GST taxes are collected. Oh, sir. On tobacco and tobacco products, whatever GST is there, that GST as well as whatever was collected before GST law, pre-GST law, that both are getting collected still today on tobacco and tobacco products, because government does not want people to consume more tobacco and tobacco products. Therefore, they are collecting GST on that as well as pre-GST taxes. By that, price will increase for those products and consumption will decrease. That is what government is thinking. Okay, opium, Indian hemp, and other narcotic drugs, etc. On that, GST as well as pre-GST taxes are still getting collected. Then on alcoholic liquor for human consumption, very important. On alcoholic liquor for human consumption, GST can never be collected. So this is one item on which GST can never be collected. It has been completely kept outside the purview of GST. And then we have HP man. HP man means what, sir? High speed diesel, petroleum crude, motor spirit, aviation turbine fuel, and natural gas. On this HP man, HP man is presently outside the purview of GST. Meaning what, sir? On this HP man, as on today, there is no GST collected. On these 5 products, as on today, no GST is collected. Can GST be collected on these items? Yes, it can be collected on a future date. Please note, there is alcoholic liquor for human consumption on which GST can never be collected. There is HP man on which as on today GST is not collected. Can they collect the GST on a future date? Yes, once the government decides whichever date it wants to collect it. Then, sir, are there any advantages? Sir, you are telling that GST was introduced, there were deficiencies under pre-GST law, sir. But sir, because of introduction of GST, is there any benefit which you have got? Is there any advantages? Yes. What are those advantages? Advantages of GST. Mitigation of ill effects of cascading. So first and foremost, biggest advantage is the cascading effect. The tax on tax is no more happening. One of the biggest advantage of GST is what, sir? It has mitigated the cascading effect. Now, because of introduction of GST, there is only one type of taxes which is collected in entire India. Now, because there is only one type of taxes, there is no tax on tax happening. Then, there is a certainty in tax administration. What do you mean by this point, sir? There is a certainty in tax administration. Now, throughout India, wherever you go, the tax on a product is same. So each and every state, wherever a person is going and doing business, purchasing or selling any goods, he knows what is the tax rate which will be applied at that particular place. Before, a same product was taxed at different rates at different state because the power was given to state government. Now, GST is beneficial to small traders and entrepreneurs. Meaning what, sir? This says because of introduction of GST, the small businessmen and entrepreneurs, they will be more happy. Because under GST law, the limit for taking registration is 20 lakhs. So if you are a small businessman, you don't have to take registration at all. You will not have to take any registration at all. Now, if you are a small trader or businessman, you will not have to take any registration at all. Sir, how is this beneficial? Before GST law, the limit for taking registration was 1 lakh and some states it was 5 lakhs. So can I say every person who is doing business would have come under the tax? Therefore, now what is happening, sir? Small traders and entrepreneurs, they are least bothered. Up to 20 lakhs, if you are doing business, no problem, enjoy. Then, GST reduces compliance cost. Before GST law, what was happening? The same government was collecting multiple type of taxes. If government is collecting multiple type of taxes, that means you will have to file multiple type of returns. If you have to file multiple type of returns, that means your compliance cost will also increase. Because of introduction of GST, that compliance cost is reduced. Sir, how, sir, it is reduced? Because only one type of taxes will be collected now, which is GST. Now, because only one type of taxes is collected, your compliance cost is reduced. You will have to file only one type of return, which is GST. Then enhance investment and employment. Because of GST, actually what is there is, in over 167 countries throughout the world, they follow indirect taxes. Which indirect taxes are GST as the indirect taxes in their country. So almost how many countries? 167 countries throughout the world, they follow indirect taxes. Which indirect taxes? GST as their indirect taxes. Therefore, a person who is doing business in France now, if he wants to come and do business in India, he will not hesitate because he knows that in India also it is GST only. There may be some changes in the law, but he knows the essence of the law will remain same. There was no multiple type of taxes getting collected. By that, what will happen? The foreign companies also will come and invest in India. So if they come and invest, what will happen, sir? Employment opportunities will be created. Then creation of unified national market. What is this point, sir? Creation of unified national market. Because of introduction of GST, now entire India, there is only one type of tax system which is collected. Therefore, one single tax, because of one single tax system which is there in entire India, we have one single market now. Ease of doing business. Because of introduction of GST, the business doing has become very easy. Before GST law, because each and every state had their own power to make the law for that particular state, each and every state was taking its own liberty. They were taxing the product at different rates. Some state, for example, a calculator, in one state the calculator was taxable at 5%. In the same calculator in other state was taxable at 12%. Same calculator was taxable at 18% in different states. Therefore, what was happening? So same product was taxed at different rates in different states. Now that is not going to happen. under GST law, it is same across India. So business doing is very easy. So if I am a person who is doing business in Bangalore, now I will not hesitate to go to Tamil Nadu, I will not hesitate to go to West Bengal, I will not hesitate to go to Uttar Pradesh and do business over there, because for me, the law which I have to follow everywhere will remain same. And GST will boost Make in India initiative. Because of introduction of GST, no, the Make in India initiative of government will be boosted. Automated procedure with greater use of IT. Before GST law, if I had to file return, I had to physically go to the department and file my return. But because of introduction of GST, everything is online under GST law. If everything is online, will I have to go to the department to file returns? No. If I want to take registration, I will do it offline. If I want to online, meaning there is a website, okay, so using that website I will file my returns. Using that website I will take registrations. Using that website I will pay the taxes, etc. So completely automated procedures are there. Next, GST common portal. So what is this GST common portal? Now because for entire India, one single tax system is supposed to be introduced. For introducing this one common system, we had to have a very good technological base. So that technological base which we have, or a single place wherein all these people across the India can come and meet. That place is this common portal. GST Common Portal, it is a website which is designed, developed and managed by a company called as Goods and Services Tax Network, GSTN. GSTN is a Section 8 company. What is Section 8 company? A not-for-profit organization. Sir, what do you mean by GSTN? GSTN means Goods and Services Tax Network. GSTN means what, sir? Goods and Services Tax Network. Then GST. Sir, what is this common portal, sir? This common portal is this website, gst.gov.in. This is that website. Now, how do I access to that next website? I am a taxpayer. How will I access to this next website, sir? So I will, if I want to access to this website, I am using what, sir? Internet to access this. So this website which you are seeing right now in front of you, this is this GSTN or GST Common Portal. This is designed and developed by whom, sir? A company called as Goods and Services Tax Network. Next, what are the functions of Common Portal? One theory question which they ask over here is, what are the functions? What are the different things which you can do in your GST Common Portal? I can file the returns. I can apply for registration application. I can generate payment challan. I can act, this GST Common Portal acts as a clearing house for settlement of IGST, and it also generates business intelligence for the government record purpose. Then we have two more points. One is Article 269A. Now we saw somewhere that in case of interstate supply, central government will collect the taxes. And we also saw in Article 246A which told that central government has the exclusive power to make law with respect to interstate supply. Who gave that power, sir? It was this article, Article 269A. This talks about levy and collection of GST in case of interstate supply. What does it say? It says central government has the power to levy and collect taxes on interstate supply. So whenever you are making interstate supply, who can collect taxes on interstate supply? The central government. And IGST will be collected on that interstate supply. On interstate supply, which tax will be collected, sir? IGST. IGST will be apportioned between central government and state government. Whatever IGST the central government is collecting on interstate supply, that will be given to central government as well as consumer state. And central government has the power to formulate. So whatever rules, regulations, policies, principles are required to be made with respect to interstate supply, who has the power to make? Only central government has the power to make. Most important point in your first chapter is Article 279A. Article 279A talks about what, sir? GST Council. Article 279A says, the Article 279A, the Constitution 101st Amendment Act which was introduced, that said, that introduced an article called as 279A. which said that within 1 month of the passing of this act, the President of India should form a council called as GST Council. So the provisions of this act came into existence on 29th of September and GST Council was formulated on 15th of September. So GST Council, which is there, it consists of the chairperson, head of the GST Council. Who is the head of GST Council, sir? The Union Finance Minister or the Finance Minister of India. Then it also contains other members. These members are who, sir? The union ministers in charge of revenue and finance, the ministers of finance and taxations nominated by different state government, meaning members are the other people from the different states and central government who will be the members. The head of the GST Council will be the chairperson, which is Finance Minister of India. Now these members can elect one among themselves to be a vice chairperson. Then what, sir, what is the use of this GST Council? What will this GST Council do? This GST Council is going to give recommendation. What kind of recommendations, sir? It is going to give recommendations with respect to what are the different types of taxes, duties, surcharges, cess, which are required to be subsumed under GST law. What are the different types of taxes which is required to be merged with GST law? What are the taxes which is not required to be merged or subsumed with GST law? What is the GST rates for different goods and services? What is the GST rate I should collect for different goods and services? And what are the different goods and services which will be exempted from GST, on which GST will not be collected? What are the principles for determining the nature of supply? How will I determine whether a particular activity is intrastate supply or interstate supply? So what are the principles for that? All this, who will give recommendations, sir? This GST Council will give the recommendation. What type of law is required to be made? All the recommendation will be given by GST Council. How will I classify different goods and services? How will I come to know that this is a goods, this is a services? Then what should be the threshold limit for taking registration under GST law? Then what who are the persons who will be exempted from taking registration, who will not have to take registration? What are the special provision which you are going to make for 11 special category states? These 11 special category states are Sikkim, Nagaland, Manipur, Assam, Arunachal Pradesh, Meghalaya, Tripura, Himachal Pradesh, Uttarakhand, Mizoram and Jammu and Kashmir. And which is the date from which GST will be applied to HPMAN, high speed diesel, petroleum crude, motor spirit, aviation, tobacco fuel and natural gas. So on these items, law can be, meaning whatever decision, recommendation can be given by GST Council. Now, sir, you said recommendation will be given by GST Council, decision will be passed by GST Council. How will they pass decision? They will come and do meeting. So meeting will be happening. The quorum of that meeting, quorum means minimum number of members who are required to be present in the meeting to be called as valid. The quorum of the meeting is half of total number of members. So decision of GST Council, majority of not less than 3/4 of weighted votes of members who are present and voting. How is a decision going to be passed under GST Council, sir? By taking a majority. How will I take this majority? Majority of not less than, meaning at least 3/4 of weighted votes of members who are present and voting. I'll take at least 3/4 of weighted votes of members who are present in the meeting and voting. And how will I assign the weight, sir? The weight assigned to central government is 1/3 and the weight assigned to state government is 2/3. So weighted votes they have told no. So what is the weight for central government? 1/3. What is the weight for state government? 2/3. So this is all about your first basic chapter, which is which chapter, sir? Introduction to Indirect Tax Law, which is Introduction to GST. One of the most important chapter in your GST law is your supply topic, because this is the first chapter of GST law, basic chapter of GST law. This is something which is important to understand entire GST. Now, we have different acts under GST law: CGST Act, SGST Act, UTGST Act, IGST Act, GST compensation cess. Unlike income tax we had only Income Tax Act, correct? No. So, but here GST law we have so many different types of act. Should I study all these acts, sir, for my examination purpose? Lawmaker says no. For your examination purpose, you have to study majorly which act? CGST Act. Meaning 90% of your syllabus is what, sir? CGST Act. And only here and there one chapter is there called as place of supply. Only that place of supply is coming from your IGST Act. Apart from that, everything which we are going to see over here in this chapter is going to come from CGST Act. So then I don't have to study SGST, UTGST, GST compensation cess. No, you don't have to study those different acts. At intermediate level, definitely you may have to study at final level, which is this act, but SGST, UTGST, that is also not there in final level. Now, supply under GST. Supply under GST. Section 7 gives the meaning of supply under GST law. Sir, we are going to start with section 7. Yes, section 7 gives the meaning of supply. Section 7 of which act, sir? CGST Act. Sir, what about section 1, 2, 3, 4, 5, 6, sir? See, section 1 of any act normally talks about title, extent and commencement. What is the title of this act? Central Goods and Services Tax Act. From which date did the act commence from? Where does the act extends to? This act extends to whole of India. And from which date this the act commenced from? It has commenced from 1st of July 2017. And in the state of Jammu and Kashmir, it commenced from 8th of July 2017. And section 2 talks about definitions. As and when definitions are required, we are going to see all those definitions. Section 3 to section 6 talks about who are the different officers, what are their hierarchy, what are their powers, roles and responsibilities. Okay. Now, therefore, these different points which are there, section 1 to section 6 not relevant so much. What is most important, sir? Section 7. Section 7 talks about supply under GST. Sir, but why supply? What is supply, sir? See, basically, for any type of tax to be collected by the government, there will be a reason. Now, for example, government is collecting income tax because you are earning an income. Government is collecting custom duty because you are importing any goods from outside India. Correct? No? So, there is a reason why government is collecting taxes from you. That reason under GST law is supply. So supply is what, sir? Supply is the taxable event under GST law. What is the taxable event under GST law? Supply of goods or services or both. Meaning GST will be collected by you from you by the government if you make a supply of goods or services or both. Only when there is a supply of goods or services or both, GST will be collected. Sir, what if there is no supply, sir? If there is no supply, no GST. Sir, what do you mean by supply? Supply meaning is given in section 7. So now we'll discuss entire section 7 and understand what the meaning of supply with respect to different provision which is given over here. Section 7 says supply includes all forms of supply of goods or services or both. What is it? Supply will include all the different forms of supply of goods or services or both, such as sale, transfer, barter, exchange, lease, license, rental, disposal. So what is it telling? There are many different forms of supplies. For example, such as, sale, transfer, barter, exchange, lease, license, rental, disposal. These are some examples of supply. Supply will include all these things and of course other things also. Supply will include all the different form of supply of goods or services or both, such as sale, transfer, barter, exchange, lease, license, rental, disposal, made or agreed to be made, which you are making or which you agree to make, which is made or agreed to be made by a person for a consideration in the course or furtherance of business. Sir, repeat. Supply will include all the different forms of supply of goods or service or both, such as sale, transfer, barter, exchange, lease, license, rental, disposal, made or agreed to be made by a person for a consideration in the course or furtherance of business. Sir, what do you mean by this? For example, I have a business called as Priya Sarees. Now, let us say say you came to Priya Sarees and you purchased a sari. The sari which you purchased is worth rupees 10,000. Okay, so you purchase a sari worth rupees 10,000. You give me 10,000 rupees. Now, question is whether this transaction is treated as supply. If I want to call this transaction as a supply, there are 5 elements which are given in section 7 subsection 1 clause A. All those 5 elements should be there. Which are these 5 elements? There should be a supply of goods or services. Can I say here there is a supply of goods? Goods are getting supplied by Priya Sarees to you. Correct? No. Then that supply should be made or agreed to be made. Can I say you have purchased the goods from me, therefore I have made the supply to you? Then that supply should be by a person. Can I say I am a person who is making the supply to you, and that supply should be for a consideration? Can I say I am collecting some consideration from you, and that supply should be in the course or furtherance of business? Can I say it is my business to sell sari? Can I say all the 5 elements are getting satisfied? If all the 5 elements are getting satisfied, this transaction is treated as supply and therefore GST is applicable. Yeah, okay, not okay. Therefore, what, sir? GST is applicable. So supply includes all form of supply of goods or services or both made or agreed to be made. So even if you enter into a contract to supply goods or services to someone on a future date, then also it will be treated as supply by a person for a consideration in the course or furtherance of business. Now, sir, what do you mean by goods, sir? Goods means every kind of movable property. So whatever type of movable properties you see, they are all treated as goods other than money and securities. Meaning money and securities, though they are movable, they will not be considered as goods. But goods will include actionable claims, growing crops, things attached to or forming part of land which can be further supplied. A goods means what, sir? Every type of movable property or every kind of movable property. So whatever is movable on this earth is treated as goods except money and securities. However, goods will also include what, sir? Actionable claims. Goods will also include your growing crops, things which are attached to land or forming part of land. Your trees, etc., minerals, oils, iron ores, etc., they are all forming part of land. They will also be treated as goods if they can be further supplied. And they say services means anything other than goods, money, and securities. What is services? Something which is not goods is service. Something which is not money and securities is service. And it will include, what will include? Services will include activity in relation to use of money or its conversion for which a separate consideration is charged. I repeat, sir. Services will include that activity in relation to use of money or its conversion. AC, please note, money is not a goods nor a services. But if you are undertaking any activity in relation to use of money, or if you are undertaking any activity in relation to conversion of money, then I will call it as services. If you are charging some consideration for this, sir, can you please give some service example, sir? See, for goods, example is this calculator which is there. This calculator, can I say it is a movable property? See, can it be moved? Can it be moved? Yes, sir. This is a movable property. Therefore, calculator is treated as goods. Every kind of movable property other than money and securities. Now, money and securities which you have, money and shares and securities which you have, though they are movable, they will not be treated as goods. Then, growing crops, these crops which are growing crops, this tree, fruits, etc., are they all goods, sir? Yes, they are all goods. They will all be treated as goods. Then, what is services? Anything which is not treated as goods is treated as services. What do you mean by this, sir? For example, what am I doing right now? I am teaching you. Correct? No. Am I selling any goods over here? No, sir. Am I selling any goods over here? No, sir. I am giving you services. So, after the class, I'll be going to my home. So, when I'm going home, I'll be taking an auto to go home. I'll be taking Ola, Uber to go home. What am I doing, sir? I'm taking services. So, services. Goods means every kind of services means anything other than goods, money, and securities. However, services will include activity in relation to use of money or its conversion for which a separate consideration is charged. AC, please note, I give you 1 lakh rupees, you give back me 1 lakh rupees. Is that goods or service? Nothing. But if I give you 1 lakh rupees with a condition that when you return this 1 lakh rupees, you will have to pay me an interest of 500 rupees. Now I am charging a separate consideration for this money which I gave you. Now it will become service. Similarly, you have 1 lakh US dollars. Now you want to convert that into rupees. Now when you are converting dollar into rupees, what is happening, sir? There is a service component involved in this. There is what, sir? Service component involved in this. Next, consideration definition. Consideration. Now we understood that supply which you are making, that supply should be for a consideration. What is consideration, sir? Consideration under GST law says, consideration definition says, consideration includes payment in money or otherwise by the recipient or any other person, but it shall not include the subsidy given by central government or state government. So whatever payment you are making in money or otherwise, whatever payment you are making in money or otherwise, whether that payment is made by the recipient or any other person, it does not matter. Any payment made in money or otherwise, whether it is made by the recipient or any other person, it does not matter. That will be treated as supply. That will be treated as what, sir? That will be treated as consideration, payment in money or otherwise by the recipient or other person, but it shall not include subsidy given by central government or state government. For example, you came to Priya Sarees, you purchased a saree worth rupees 10,000. You paid the money in cash, UPI, net banking, check. They are all consideration. So you are making the payment to me in money. Now I gave you 1 kg wheat, you gave me 1 kg rice. Here there is a consideration in the form of, is it in the form of money? No sir, it is in other forms. For example, I purchased a mobile phone wherein I gave 20,000 in cash and my old phone. 25,000 phone I purchased, wherein I gave 20,000 rupees cash and old phone. Now what is happening over here? Consideration is in money and otherwise. Correct, not correct? So consideration can be in money or otherwise it can be paid by recipient or any other person. For example, I sold goods to Karina, sarees worth rupees 10 lakhs. I sold goods to Karina sarees worth rupees 10 lakhs and I told Karina told me, Dilip, I will pay you 2 lakh rupees. Balance 8 lakh rupees will be paid by one of my customer, Anushka. Now what is happening over here? Here the recipient paid me only 2 lakh rupees. Consideration received by other person was 8 lakh rupees. So what is the total consideration? 8 plus 2, 10 lakh rupees. Next. So consideration can be by whom, sir? Recipient or any other person. But consideration shall not include subsidy given by central government or state government. Now sometimes what may happen is for a particular product, central government or state government can give you some subsidy. If they are giving subsidy for any product, no, that subsidy amount should not be treated as consideration. Okay. Now in this case, whatever total money you have received, from that you should exclude the value of subsidy and that differential amount only will be taken as consideration. Now consideration will include monetary value of any act or forbearance, whether by the recipient or any person, but shall not include subsidy given by central government or state government. Sir, what is this monetary value of any act or forbearance, sir? Monetary value of any act or forbearance means sometimes what may happen, some people may do a particular act. Instead of giving any goods or services, instead of giving any money, they will do some kind of act. For example, I may tell you, sir, you do one thing. You are attending my classes. For my classes, no, don't give me money. You prepare a material for me. Now, I will see what is the monetary value of that act which is done by you. That will be taken as consideration. Now, very important is, sometimes in different types of transactions, what happens is, refundable deposits will be given. For example, when you take a house on rent, when you take a PG on rent, you will have to give them some deposits. 2 months rent, 10 months rent, etc. You will have to give them deposits. These deposits will be given back to you when you vacate the house. They are called as refundable deposits. Refundable deposits will not form part of consideration unless they are adjusted as consideration. Then, sir, what do you mean by recipient, sir? Because we saw this word also many places. You said consideration can be by recipient or any other person. Sir, what is this recipient, sir? Recipient means what, sir? Consideration can be by recipient or any other person. Recipient, if for a particular transaction of supply of goods and services, if there is a consideration involved, if there is a money consideration involved, then the person who is paying such consideration will be treated as recipient. For example, for attending a class, you are giving money. Who has given the money? Have you given the money or your parents have given the money? Your parents have given the money. Now, though you come to the classroom and sit in the classroom, who will be treated as recipient? Your parents will be treated as recipient. Because for a particular transaction of supply of goods and services, there was a consideration involved. Who is the recipient, sir? The person who is paying such recipient. Sir, what if there is a transaction where there is no consideration involved? If consideration is not involved, for goods, the person to whom the goods are delivered. For services, it is the person to whom the services are rendered. For example, this particular transaction which we are having. Can I say this is a transaction wherein there is no consideration involved? Is there any amount which is getting paid? Sir, yes sir, consideration is there. No sir, we are giving our time to you. Yeah, of course, that is there. But then apart from that, is there any monetary consideration involved over here? No sir, there is no monetary consideration involved. So who will be treated as recipient? Now this is services. For the services, recipient will be the person who is receiving the services. Okay, so you are receiving the services from me, therefore you will be treated as recipient. Then section 7 subsection 1 clause B. So we understood first meaning of supply 7.1a, next 7.1b. So what is this 7.1b talking about, sir? 7.1b says supply will include importation of services for a consideration. What will supply include? Supply will include importation of services for a consideration, whether it is in the course of business or not. Meaning, if you are importing any services, lawmaker says, if you are importing any services, whether you are importing that services for your business purpose or your personal purpose, I don't care. Lawmaker says what, sir? If you are importing any services, whether that services are imported for your business purpose or for your personal purpose, it does not matter. That importation of services will be treated as consideration. A importation of services will be treated as consideration, whether it is imported for your business purpose or not. Sir, what is this importation of service, sir? First you tell us that, sir. A importation of services means the supplier of services is located outside India. The recipient of the services is located in India. And the place where the services are supplied is in India. The place of supply is in India. So repeat. Importation of services means a transaction of supply of service where the person who is supplying the services to me is located outside India. The place where the services are supplied is in India, and the services are, the place of supply is in India and the recipient also is in India. Supplier outside India, recipient in India, and place of supply is in India. Then I will call that particular activity as what, sir? Importation of services. These three conditions should be satisfied. For an example, I want to start my sari business in London. Therefore, I take services from an advocate in London. Now, in this case, what is happening, sir? The person who is giving the services to me is the advocate who is there in London. So he is the service provider. I am the service recipient. Where am I located? In India. Service provider is located outside India. Service recipient is located in India. And what is the place of supply of these services? India. Therefore, this transaction will be called as importation of services. Now we'll come back to the point. What is the point telling? If you are importing any services, what is this point telling, sir? If you are importing any services, and if that services are imported by you for a consideration, then it will be treated as supply, whether it is imported for your business purpose or not. Sir, I didn't understand this point, sir. This point says, if services are imported by you, if you are importing any services, and for importing that services, if you are paying any consideration, whether that services are imported by you for your personal purpose or business purpose, it will not matter anymore. Because there is a consideration involved for importation of services, you will have to pay GST. If you are importing any services, and if that services are imported for a consideration, whether it is in the course of business or not, it will be treated as supply. Okay. For example, I want to start business outside India. Therefore, I took a services from an advocate and I paid him $1,000. So this is importation of services for a consideration. It is a supply as per 7.1b. For example, I want my daughter to do her education outside India. Therefore, I take services from some person outside India about the education facilities or opportunities which are there outside India. I am taking services for my personal purpose and I am paying some consideration for this. It is treated as importation of services for a consideration for personal purpose. Therefore, supply. So, if you are importing any services, in simple words, if you are importing any services for a consideration, whether it is imported for your personal purpose or business purpose, it does not matter. It will be treated as supply. Now, section 7, subsection 1, clause C. Section 7, subsection 1, clause C talks about different activities which will be treated as supply even if there is no consideration involved. So now we are going to see a few things. These things will be treated as supply even if there is no consideration involved, meaning even if there is no money involved over here, all these different activities will be treated as supply. Which are these activities, sir? Activities specified in schedule 1 shall be treated as supply even if there is no consideration. Sir, repeat. There are few activities which are listed in schedule number 1. These activities which are listed in schedule number 1, they will all be treated as supply even though there is no consideration involved. Even though there is no consideration involved. Also called as schedule 1 activities. Meaning, please note, I'll repeat once again. As of now, we studied 7.1a and 7.1b. In both of these, what was most important, sir? Consideration. 7.1a told supply includes supply of goods or services or both for a consideration by a person, etc. So consideration was there. 7.1b told if you are importing any services for a consideration. So in both 7.1a and 7.1b, what was important? Consideration was important. Now we are seeing 7.1c, which says there are some activities listed in schedule number 1. There are some activities listed in schedule number 1. They will all be treated as supply even if there is no consideration. Okay. So here whatever we are going to see now, there are totally 4 activities. All these 4 activities will be called as supply even if there is no consideration. What are these activities? Which are these activities? Permanent transfer or disposal of business asset provided input tax credit has been availed on such business asset. If there is a permanent transfer or disposal of business asset on which you have taken input tax credit, then it will be treated as if there is a permanent transfer or disposal of business asset on which you have taken input tax credit, then that will be treated as supply even if there is no consideration involved. Sir, repeat. If you are permanently transferring any of your business asset on which you have taken input tax credit, then that permanent transfer of business asset will be deemed as supply. For example, I had purchased some computers, okay, when I started my CA practice. Now there were around 20 computers, etc., which I had. Now I thought of replacing all these computers with laptops. Therefore, instead of selling these computers, I thought of giving it to a government school for free. Now, at the time of purchase of this computer, I had taken input tax credit. Now, I am giving all these computers for free to a government school. Lawmakers are telling, though you are giving it for free, I will call it as a supply, Mr. Dilip, and therefore you will have to pay GST on this. Then, point number 2, supply of goods or services or both. Supply of goods or services or both between related person or between deemed distinct person as per section 25(4) or 25(5) if it is made in the course or furtherance of business. Sir, purle sir. It's supply of goods or services or both between distinct person or between related person if it is made in the course or furtherance of business. If you are making any supply between your related person or between your distinct person, whether it is made in the course or furtherance of business, if it is made in the course or furtherance of business, then it will be treated as supply. Please note, I am supplying something for free to my relative. Say for example, I am supplying something for free to my wife. Lawmaker says it is a supply. Now, this transaction, though it is for free, there is no consideration involved, it will be treated as supply. Similarly, if you supply anything to your distinct person referred to in 25(4) or 25(5) for free, then also it will be called as supply. Now, in both the cases, when you are making the supply to your related person or deemed distinct person, that supply should be made in the course or furtherance of business. Then only it will be called as supply. If it is not in the course or furtherance of business, sir, then the transaction will not be called as supply. Sir, what do you mean by related person, sir? Related person means what, sir? Related person means if you are officer and director of one another's business, you will be called as related person. If you are legally recognized as partners of a partnership firm, you will be called as related person. If you are an employer and employee, you will be called as related person. Then, if you are what, sir? If you are directly or indirectly holding 25% or more outstanding shares or voting rights in a company, you will be called as related person. If you are directly or indirectly controlling one other's business, if you are directly or indirectly controlled by someone else, then you will be called as related person. Similarly, if you are members of same family, you will be called as related person. Now here, family does not mean the family which you normally feel is your family. Under GST law, family means spouse and children's. So for me, my wife and my children's will be family. Income tax law, we studied some different definition of family. For me, my children's, my parents, my brother, sister, my spouse, my spouse's parents, my spouse's brother. Here, no such concept. Here they say, for Mr. Dilip, Dilip's family is Dilip's spouse, Dilip's children's. Dilip's brother, sister, father, mother will be Dilip's family if they are dependent on me. If they are not dependent on me, my father, mother, brother, sister are not my relative or family. So what is this point telling? If I am supplying anything for free to my related person or to my distinct person, and if that supply is made in the course of business, it will be treated as supply. For example, okay, I supplied sarees worth rupees 10 lakh rupees to my wife. For free I give. My wife came to Priya Sari, she took a sari worth rupees 10 lakhs. Is it a supply? Is it a supply, sir? Lawmaker says you gave it for free. Your business is selling sarees, therefore this transaction is supply. Now here one very important point is that, what is that important point, sir? That important point is proviso. This says provided that any gift given by employer to employee, if the value of the gift is not exceeding 50,000, then it will not be treated as supply. However, if the value of the gift exceeds 50,000, then the entire value, the whole value will be treated as supply. So if any gift is given by employer to the employee, and if the value of the gift is not exceeding 50,000 rupees, it is not a supply. If it exceeds 50,000, the entire value, full amount will be treated as supply. Sir, you said deemed distinct person referred to in 25.4 or 25.5. What is this deemed distinct person referred to in section 25.4 or 25.5, sir? Now, section 25.4 says, where a person has obtained or is required to obtain more than one registration. So, if you have obtained more than one registration in a state or a union territory, then each of those registration will be deemed as distinct person. If you have taken more than one registration in a state or an union territory, then each of those registration will be called as distinct person, will be deemed as distinct person. Section 25.5 says, where a person has an establishment registered in a state or an union territory and also has another establishment registered in another state or another union territory. Meaning what, sir? If you have an establishment which is registered in a state or union territory, and you also have another establishment in another state or another union territory, then these establishment will be deemed as distinct person. This establishment will be deemed as distinct person. Sir, purile sir, I didn't understand this, sir. Easy, please note. Priya Sarees. Dilip has Priya Sarees in 4 different locations in Bangalore. Now for all this, I have taken one single registration. Therefore, they all, though it is a different business, though it is a business at different location, they will all be treated as same person because the registration is not different. However, if all these different business which I have different location, if they have all taken separate registration under GST law, now they will be called as distinct person as per section 25.4. They will all be deemed as distinct person as per section 25.4. Now what is 25.5 telling? 25.5 says, if you have one establishment which is registered in a state and another establishment is there in another state, whether that another establishment is registered or not, they are distinct person. For example, I have Priya Sarees in Bangalore, Priya Sarees in Chennai. They both are registered. They are treated as distinct person as per 25.4. Why? 25.4 condition is they should be registered separately. I have Priya Sarees in Bangalore, Priya Sarees in Chennai. Bangalore is registered, Chennai is not registered. Now still they both will be treated as distinct person as per section 25.5. Okay. Section or point number 3 in this 7.1c read with schedule 1, We are seeing point number 3, para 3. If you are supplying goods by principal to his agent or vice versa. Sir, repeat. If goods have been supplied by principal to his agent or vice versa, wherein the agent is undertaking further supply of goods on behalf of principal in his own name. Whose name? Agent's own name. Then it is treated as supply. For example, principal is making supply of goods to his agent, and the agent, when he's selling the goods to customer, the agent is giving the invoice to the customer in the name of the principal. In the name of the principal. Now, whatever goods are supplied for free by principal to the agent is not a supply. Case number 2, principal is supplying some goods to agent for free. Agent is supplying these goods to the customer in his own name. Whose name? Agent's own name. Now, whatever is supplied free of cost by principal to the agent will be treated as supply, and therefore GST will come into picture. Then, importation of services by a person from his relative outside India or from his another establishment outside India if it is made in the course of furtherance of business. Importation of services by a person from his related person located outside India or from his another establishment located outside India if it is made in the course or furtherance of business. If I am importing any services from one of my relative located outside India or from one of my another establishment located outside India, even if I am importing it for free, it will be treated as supply, provided I should import it for my business purpose. Next, section 71A is done, 71B is done, 71C is done. There is one more section called as 71AA. This is just a small time pass section which says if any activity or transaction is undertaken by a person other than individual to his own members. So if any person is supplying any goods or services to his own members for a consideration, then it will be treated as supply. Next, 7.2, negative list of supply or no supply, also called as schedule 3 activities. Activities which are neither treated as supply of goods nor supply of services. Section 7.2 says there are some activities which are notified by the government which will neither be treated as supply of goods nor be treated as supply of services. Sir, which are those activities which is notified by the government which is neither supply of goods nor supply of services? Activities performed by panchayat or municipality under article 243G or 243W. So there are different work which can be undertaken by panchayat. There are different work which can be undertaken by municipality. So whatever work can be undertaken by panchayat under article 243G and municipality under article 243W, though they are going to charge some money, that will be not treated as supply. Similarly, grant of liquor license by state government. If the state government is granting liquor license to any person who wants to start liquor business, then for that license, the state government is going to collect some money. That will not be treated as supply. Schedule 3 activities. What is the Schedule 3 activities, sir? We will see the Schedule 3 activities, important activities. Schedule 3 activities are those activities which are neither supply of goods nor supply of services. Please note, Schedule 1 activities which we just now saw. Now the Schedule 3 activities which we are going to see. These activities, they can ask you a separate descriptive question for 4 marks or 6 marks telling what are the activities which are not a supply at all. Or list down Schedule 3 activities. That time you will have to answer this. And similarly, what are the activities which will be treated as supply even if there is no consideration? Or list down the activities which are supply even if it is made without consideration. Or what are Schedule 1 activities? Then whatever you studied before this, that is required to be written this. Okay, now we are seeing no supply, negative list of supply. Schedule 3 activities, services given by employee to the employer in the course of employment. If any services are given by employee to the employer in the course of employment, then it is not a supply. If employee is giving the services to the employer, and how is employee giving the services to the employer? In the course of employment, then that services given by employee to the employer will not be treated as supply even though there is a consideration paid by me to you. It is not a supply. But if you give service, you are my employee, if you give services to me outside the course of employment, for example, you are an advocate. Apart from being my employee of Priya Sarees, you are an advocate. You are helping me file a case. Now, you are giving services to me. No. Is it in the course of employment? No. These services are given by you to me because you are my acting as my advocate. Therefore, this is not in the course of employment. Now, whatever money I pay you, that will be treated as supply. Services given by court or tribunal. Now we have the Supreme Court, High Court, etc. They are all listening to our cases. So whatever cases we are fighting, to all those cases, the Supreme Court and High Court, they are listening to us, and therefore accordingly they are giving their judgment. Now in this case, lawmaker says what, sir? In this case, Supreme Court and High Court are listening to you. They are listening to you. They are what, sir? Hearing your case. So because they are hearing your case, they are going to charge something called as hearing fees from you. They are going to charge something called as what, sir? Hearing fees from you. This hearing fees which is charged by them is not liable to GST. Then services given by MLA, MP, President, Prime Ministers, Chairperson of GST Council, etc. Now, the President of India, is he government employee, sir? No. The President of India is not government employee. Similarly, the chairperson of GST Council, etc., they are all not government employee. Now, because they are all not government employee, what will happen, sir? Because they are all not government employee, whatever services are given by them to different departments of government, they are all not supply. Though they are getting money for that, it is not treated as supply. Then, services by way of funeral, burial, cremation, mortuary, including transportation of deceased, meaning they are all dead body related services. If any person is taking services by way of funeral or burial or cremation related services or mortuary related services, including what, sir? Including the services with respect to transportation of dead body, on all these services you will have to pay money for that. It will not be given for free. For all these services there will be no GST applicable. Then sale of land, and sale of building subject to para 5b of schedule 2. Now if you are selling a land, then for sale of land, though you are receiving some consideration for the sale of land, it is not a supply. Similarly, if you are selling a building, and if that building is sold as per the para 5b of schedule 2, then it will not be treated as supply. Sir, what is this para 5b of schedule 2? Para 5b of schedule 2 says, if the consideration for the sale of building is received before completion certificate or before first occupancy, then it will be treated as supply. If the consideration for the sale of building is received after completion certificate or after first occupancy, then the transaction will not be treated as supply. Then actionable claims except lottery, betting and gambling. So if you are dealing in actionable claims, it is not a supply. What do you mean by not a supply? Meaning no GST will be applicable. If you are dealing in actionable claim, there is no GST applicable. However, if you are dealing in specified actionable claims, which are the specified actionable claims? Like lottery, betting, gambling, online money games, casino and horse race, then it will be treated as supply. You will have to pay GST. If you are dealing in these things, you will have to pay GST. Which things, sir? Lottery, betting, gambling, casino and horse racing. But if you are dealing in any other type of actionable claims, no GST. Similarly, if you are doing high C sales, sir, what is this high C sales? High C sales means what, sir? Without the goods reaching the Indian boundaries, say you have imported some goods, without the goods reaching the Indian boundaries, only you are selling it to someone else. That is called as high C sales. The transaction of high C sales is also not a supply. Similarly, warehouse sales. What is this warehouse sales? Now the goods have been imported by you and they are kept in customs warehouse. These goods are kept in customs warehouse. These goods which are kept in customs warehouse are sold by you before you taking the actual delivery of those goods. On these goods, there is no GST applicable. Then out and out sales. Sir, what is this out and out sales, sir? A goods has been, if you are purchasing a goods from Japan and selling it to USA without the goods coming to India. You are selling the goods from Japan to US without the goods coming to India. This is called as out and out sales. On this, GST is not applicable. Now, that is with respect to section 7, which is supply. Next, we'll see section 8, taxability of composite and mixed supply. There is something called as composite supply and there is something called as mixed supply. Now, how are this composite supply and how are this mixed supply taxed? We are going to see in this particular discussion. Composite supply and mixed supply. Now, what do you mean by composite supply? Composite supply means supply of two or more taxable goods or services or both which are naturally bundled in ordinary course of business. You are supplying two or more taxable goods and services are both which are naturally bundled in ordinary course of business. They are supplied in conjunction with another and one of which is principal supply. Meaning what, sir? There are two or more goods and services which are supplied to you by you together. And please note, you are supplying it together because they are naturally bundled with each other. Meaning normally, in normal course of business, they are supplied together only. In that cases, and these goods which you are supplying together, one among them is the major supply, important supply or the principal supply. Then that kind of supply I will call it as what, sir? Composite supply. If it is a composite supply, the tax on the composite supply which you have to pay will be at the rate of principal supply. On that composite supply, you will have to pay tax at what rate, sir? Rate of principal supply. And we have something called as mixed supply. If it is a what is a mixed supply? Mixed supply means you are supplying two or more individual or separate goods and services. You are supplying two or more individual goods and services which are not naturally bundled in ordinary course of business. If you are supplying two or more individual goods and services which are not naturally bundled in ordinary course of business, and if they are supplied by you together for a single price, then I am going to call it as mixed supply. If it is a mixed supply, I am going to tax it at what rate, sir? At the highest rate in that mixture. A composite supply means two or more taxable goods and services are naturally bundled. They are naturally bundled in ordinary course of business and therefore you are supplying it together. And one among them is important or principal supply. Mixed supply, they are not naturally bundled. You are creating a bundle. You are purposefully mixing 2-3 items and selling it together. Mixed supply. Mixed supply is taxed at highest rate. In that mixture, what is that product which is taxable at highest rate? At that rate, it is taxable. And composite supply is taxable at what rate, sir? Composite supply is taxable at the rate of principal supply. For example, if I supply mobile phone with calculator, what type of supply is this? Is it naturally bundled anywhere? No, sir. It is not naturally bundled. Therefore, what type of supply is it? It is a mixed supply. What if I supply with this mic, I supply this headset, etc. Now what will happen, sir? Is it a composite supply or mixed supply? Now they are required to be supplied together. Without this, I cannot talk. I mean, I can talk, of course, but the sound will not come over here. Correct? Not correct. So what type of supply is this now? This is composite supply. They both are naturally bundled. I can purchase this separately. If I want, I can purchase this separately. Can I purchase this separately, sir? Yes, I can purchase this separately. But I am purchasing it together because they are normally supplied together. I am purchasing a laptop and I am getting charger free. Now what is this, sir? Composite supply. Here what is the important supply? Laptop. Are you purchasing this particular product, laptop, because oh wow, what a beautiful charger, very long charger it is? No. Therefore what type of supply it is? Composite supply, wherein the principal supply is the laptop and the rate of principal supply will be applied. However, if I am purchasing say toothpaste and I am getting brush free, is it important, sir? Is it important? Is it necessary to sell a toothpaste? You should sell the brush also along with that. Not necessary. Correct? No. So now this transaction will be treated as mixed supply and it will be taxed at highest rate. Similarly, say for example, I am purchasing a TV. I am getting remote free. Can I say with TV remote is needed? No. So it is what's a composite supply. I am purchasing washing powder. I am getting a bucket free. Sir, washing powder, if you purchase bucket is required. No, sir. How will you wash clothes? Hey, washing powder, if I purchase bucket is compulsory. Yeah, no, sir. Therefore, it is a mixed supply. What rate will I apply? Highest rate. That is all about your topic number 1 under GST law, which is supply under GST. Next is what, sir? Charge under GST. charge under GST. Section 7 and section 8 we have discussed under GST. Now we are going to section 10 and section 9 and section 10, charge under GST. Now, the charging section is the section because of which the tax is collected. Like under income tax law, we had different charging section. Just like your charging section, we have what, sir? We have a charging section under we had charging section in income tax law. Different heads had different charging section. Under GST law also we have charging section. It is this section which is telling you to pay GST. What is the charging section under GST law? The charging section under GST law is section 9. Section 9 of CGST Act is the charging section of CGST. Section 9 of SGST Act is charging section of SGST. Section 7 of UTGST Act is charging section of UTGST, and section 5 of IGST Act is charging section of IGST. Sir, repeat. Section 9 is the charging section of, you don't have to remember the section numbers anyways. Section 9 of CGST Act is charging section of CGST. You are paying CGST because this section is telling you to pay. What is this section 9 of CGST Act telling, sir? It says, we'll study that. Before that, some basic points before we start actual section 9. See, under GST law, sales are called as outward supplies. What is sales called under GST law? Outward supply. And whatever tax you pay on your sales is called as output tax. Under GST law, purchases are called as inward supply, and tax paid by you on your purchase is called as input tax. Then under GST law, tax is paid under two systems. One is called as, there is two mechanisms for paying the taxes. One is called as forward charge mechanism. Another one is called as reverse charge mechanism. There is two mechanisms for paying taxes under GST law. One is called as what, sir? Forward charge mechanism. Another one is called as reverse charge mechanism. Sir, what is this forward charge mechanism, reverse charge mechanism? In case of forward charge mechanism, the person who is supplying the goods and services is the person who is going to make the payment of tax to the government. And in case of reverse charge mechanism, the person who is receiving the goods and services is going to make the payment of taxes to the government. Meaning what, sir? For example, you come to Priya Sarees, I supply the sarees to you, you pay me the saree amount along with GST. I will pay this GST to the government. What is this? Forward charge. This is what, sir? This kind of transaction is called as forward charge. What has happened in forward charge, sir? I am the person who has supplied the goods to you and I am only paying the tax to the government. This is forward charge. What is reverse charge? I supply the goods or services to you and you are required to pay the taxes to the government. You are required to pay the taxes on that particular supply to government. Then it is called as what, sir? Reverse charge. It will be called as reverse charge. When is it reverse charge, sir? If I make the supply to you and you pay the taxes to government. Now we will see section 9. Section 9 is what, sir? Section 9 is the charging section under CGST Act. So just like that, we have charging section under different act like SGST Act, UTGST Act and IGST Act. The provisions of charging section is similar in all these different acts. Now just a second, give me a 2 seconds break. Or you take a break for 10 minutes, we'll come back, meet back after 10 minutes.
Charge under GST we are discussing. Section 9, subsection 1.
What is this 9 subsection 1 talking about, sir? 9.1 is talking about charging section under CGST Act. What does it say? It says what? Subject to the provision of subsection 2, there shall be levied a tax called as Central Goods and Services Tax on all intrastate supply of goods or services or both, except on alcoholic liquor for human consumption. Basically, what are they telling? They are going to levy a tax. What will be the tax called as? They are going to levy a tax called as Central Goods and Services Tax. Now, when will they levy Central Goods and Services Tax? Whenever you make an intrastate supply of goods or services or both. So whenever you make an intrastate supply of goods or services or both, they are going to levy a tax which is called as Central Goods and Services Tax. This will be levied on all the different types of goods and services except on alcoholic liquor for human consumption. Except on what, sir? Alcoholic liquor for human consumption. Except this, whatever different types of goods and services is there, on them they are going to levy a tax called as CGST. When will they levy? Whenever you make intrastate supply. Sir, okay, I understood. Whenever I make an intrastate supply, they will collect a tax called as CGST, except on alcoholic liquor. On all other goods, they will collect, sir. Correct, sir? Correct. On what value will be collected, sir? On the value which is determined under section 15. If you want to know on what value, on what amount that CGST, tax will be collected, then you will have to go refer to the provisions of section 15. You will have to see the provisions of section 15. It will be levied at the at the value determined under section 15. Okay, sir. At what rate will they levy, sir? The rate will be notified by the government, meaning government will tell you what are the different products. On that product, what is the GST rate applied. And for our examination also, whenever they are asking a question, for that question what is the GST rate, they will only tell us. Okay, on the rate notified by the government not exceeding 20%. Oh, what do you mean by this, sir? Meaning the rate will be notified by the government. The government is going to tell you what is the rate at which you have to pay the taxes. Whatever rate is told by the government should not exceed, whatever rate is told by government should not exceed 20%. Meaning maximum amount of GST which they can collect is how much from you? 20%. As of now, the 20% rate is not collected. Please note, we are studying CGST. Correct? No. So as of now, CGST 20% is not correct. As of now, highest CGST rate is 14%. But this 14 can be increased up to 20%. Meaning government is going to give the different the rates for different goods and services, and whatever rates are they whatever rates they are giving now, maximum will be how much? Among that, maximum will be 20%. It will be collected in such manner as be prescribed, and it shall be paid by taxable person. Government is going to collect the taxes from you, and you are going to pay the taxes on what, sir? Taxable. Who has to pay the taxes? Taxable person has to pay the taxes. Now there are different rates of GST which are there. Do you have to remember the rates of GST, sir? Answer is no. Just remember that the maximum rate of GST which they can collect, CGST which they can collect is 20%. So 20% CGST if they can collect, then 20% maximum SGST also they can collect. So how much is the maximum IGST which they can collect? 40%. Okay. Normally CGST plus SGST is equal to IGST. Now, who has to pay the taxes? Taxable person has to pay the taxes. Sir, what do you mean by a taxable person? Taxable person means a person who is registered or he is liable for registration under section 24 or 22. So, if you are a person who is registered under GST law, you will be called as taxable person. And even if you are liable for registration, meaning you are not yet registered, but you are liable for taking registration, then also you will be called as taxable person. A person who is unregistered is a person who is not registered under GST law is called as unregistered person. A person who is registered under GST law is called as registered person. Now, taxable person is a person in between them. That person who is registered and liable for registration. So there is section 22 and section 24 which talks about who are liable for registration under GST law. If you fall under that category, you will be called as taxable person and you have to pay the taxes. Can I say all the people who are registered under GST law have to pay the taxes because they are all registered person? Yes, sir. Now, those people who are not registered under GST law will still have to pay the tax under GST law if they are liable for registration. Section 9.2. Normally, GST is levied on all different goods and services except on alcoholic liquor for human consumption. Correct? No? That is what we studied in 9.1. However, on HP man, what is HP man, sir? They have given list of some goods and services. They have given list of some goods and services. Which are those goods and services which they have listed, sir? These goods and services are HP man: high speed diesel, petroleum crude, motor spirit, aviation turbine fuel, etc. On these goods and services, as on today, no GST is collected. On these goods and services, what is happening, sir? As on today, GST is not collected. GST will be collected from a future date as may be notified by the government. So 9.2 is telling on HP man, government will tell you from which date GST is going to be collected. As on today, GST is not collected on HP man, but will it be collected on a future date? Yes. What will be that future date? That will be notified by government. 9.3 and 9.4 talks about scenarios where tax is required to be paid by you under reverse charge. 9.3 and 9.4 talks about different scenarios wherein you as a recipient will have to pay the taxes. As I told you, there is two way of paying the taxes. One is forward charge mechanism, one is reverse charge mechanism. What is forward charge mechanism? I am making the supply to you and you are liable to pay the taxes to government. Forward charge. Reverse charge mechanism is what, sir? I am making the supply to you and you give the taxes to me, I pay to government. That is forward charge. Reverse charge, I make the supply to you. On that supply, you are paying the taxes to government. That is reverse charge. Now, 9.3 and 9.4 gives the scenarios wherein reverse charge is applicable. 9.3 and 9.4 gives different categories when tax is required to be paid by you as a recipient under reverse charge. CGST on intrastate supply of notified goods and services shall be paid by recipient of such goods and services under reverse charge. So there are some goods and services notified. Okay, there are some goods and services which are notified. On these goods and services which are notified by the government, who has to pay the taxes? The person who is receiving those goods and services will have to pay the taxes. Similarly, 9.4 gives the list of different scenarios where the CGST on intrastate supply of notified goods and services shall be paid by recipient of such goods and services under reverse charge. Now 9.4 says what, sir? I am going to give you the list of goods and services. If these goods and services are received by an notified registered person from an unregistered person, then that unregistered person will have to pay taxes under reverse charge. Sir, I'm getting confused over here. Now please note, there is 9.3 and there is 9.4. 9.4 says what? I am going to give you the list of goods and services. Whoever is receiving these goods and services, only he will have to pay the taxes. Always. However, 9.4 says, I am going to give you the list of goods and services. If these goods and services are purchased by you from an unregistered person. And who is purchasing these goods, sir? A notified registered person, not all type of registered person. If these goods and services are purchased by a notified registered person, that notified registered person is required to pay under reverse charge. At intermediate level, at executive level, at the inter level, basically 9.4 is not applicable, 9.3 is applicable. Okay, 9.4 is something which we'll discuss in final. Now, before going to what are the different items on which I have to pay taxes as a recipient under reverse charge, we will discuss a section called as 9.5 and then we'll go to 9.3 again. 9.5 talks about important section. Under section 9 series, 9.5 is very important. 9.5 talks about what, sir? Supply through e-commerce operator. Supply through e-commerce operator. If you are supplying notified services, if you are supplying what? Notified services, through whom are you supplying these notified services? If you are supplying notified services through an e-commerce operator, then the tax on that supply is required to be paid by the e-commerce operator. If notified services are supplied by you through an e-commerce operator, the tax on that supply is required to be paid by e-commerce operator. Provided that if the e-commerce operator does not have physical presence in taxable territory, then any person who is representing that e-commerce operator in taxable territory will have to pay the taxes. Further, if the e-commerce operator does not have physical presence in taxable territory and he does not have a representative in taxable territory, he will have to appoint a person in taxable territory to pay such taxes. Sir, can you please explain, sir? For example, Ola is an e-commerce operator. Okay. Ola is what, sir? Ola is an e-commerce operator. Now, what is this point telling? I am a person who is having mobile phone. In my mobile phone, I have Ola application. I click on Ola application. I select my present location. I enter my drop location. And it will show me the fare. And once I confirm the fare, the message will go to Ola. Once I confirm the request, the message will go to whom, sir? Ola. Ola will send the message to all the nearby drivers. One of the driver will accept the ride and he is going to come to me and drop me to the final location. Now here, who is giving the services to me? Driver is giving the services to me. Who is receiving the services? I am receiving the services. Now in this case, can I say driver is giving services to me through e-commerce operator? Did I directly call the driver? No. I booked this cab using an electronic platform. Using this Ola application, using e-commerce operator, I have booked this flat. Now this cab was booked by me using e-commerce operator. Therefore, these services are provided by this cab driver through whom? E-commerce operator. He is not directly giving the services. He is giving the services through e-commerce operator. In this case, section 9.5 is applicable. What is 9.5 telling? Now the cab driver, though he is giving the services to you, Mr. Dilip, he is giving it through the e-commerce operator. For this transaction, whatever amount you are paying on that, GST will be paid by the e-commerce operator and not the cab driver. Though the cab driver is the service provider, he will not pay the taxes. Who will pay the taxes? E-commerce operator will pay the taxes. Sir, what if it is not Ola, it is Uber, sir? Meaning, sir, what if Ola, the e-commerce operator, does not have an office in India? See, Ola to has office in India. You said e-commerce operator has to pay the taxes. What if e-commerce operator does not have physical presence in a taxable territory? Then any person who is representing the e-commerce operator in India, Ola will be having some representative in India, no? That representative will have to pay the taxes if e-commerce operator does not have physical presence. Sir, what if representative is also not there? Then lawmaker says, hey Uber, if you want to do business in India, if you don't have a representative also in India, you will have to compulsorily appoint a person in India to pay the taxes. You will have to appoint someone to pay the taxes. This is what is there in section 9 subsection 5. Very important section. Sir, what are those services which are covered under 9.5? Are all the services covered? No. They have given list of 4 services. Only if these 4 services are supplied through e-commerce operator, the tax is required to be paid by e-commerce operator. One of the services we just now saw, transportation of passenger services. That in case of transportation of passenger services, who has to pay the taxes, sir? Again, e-commerce operator will have to pay the taxes. Accommodation in hotel in guest house services. Accommodation in hotel in guest house means Ola, this Oyo or Make My Trip, etc. Housekeeping services, urban company. Then restaurant services, Zomato, Swiggy, etc. In these cases, in these 4 services, I am supplying services. See, in case of Zomato, what is happening? There is a restaurant who is supplying food to me. You through whom, sir? Zomato. So they are getting orders through Zomato. Correct. So in such cases, there are services supplied through an e-commerce operator. If the services are supplied through an e-commerce operator, tax is required to be paid by e-commerce operator. Now, lawmakers have given one small clarification. What is that, sir? In case of these 3 services, which services? Accommodation in hotel in guest house, housekeeping services, and restaurant services. In case of these 3 services, the tax is required to be paid. In the case of these 3 services, the tax is normally required to be paid by the e-commerce operator. However, if the service provider is a registered person under GST law, meaning if the hotel room which you are booking, if that hotel is registered under GST law, if the restaurant from whom you are ordering food, if that person is registered under GST law, then that supplier will have to pay the taxes and not the e-commerce operator. I'll repeat once again. In case of these 3 services, if the supplier is registered under GST law, then the supplier has to pay the taxes and not the e-commerce operator, and not, sir, who? And not the e-commerce operator. Okay. In case of transportation of passenger, even if the driver is registered under GST, if he is providing services through Ola, who has to pay the taxes? Ola, Uber will have to pay the taxes. Now there is one clarification given with respect to Ola and Uber. They are telling if the services provider is what, sir? If service provider is a body corporate, then body corporate will have to pay the taxes if body corporate is registered. Now, this is about your 9.5. Sir, what do you mean by e-commerce operator? E-commerce operator definition says, e-commerce operator means a person who is owning, operating, maintaining, managing electronic platform. Any person who is owning, operating, maintaining, managing electronic platform. For what purpose is he owning, operating, maintaining, managing electronic platform? For electronic commerce. Then he will be called as what, sir? He will be called as e-commerce operator. He will be called as what, sir? He will be called as e-commerce operator. Now, we will see what are the different items covered under section 9 subsection 3 reverse charge. So we saw that there are few items there on which the recipient will have to pay taxes under reverse charge. Now what are these items on which the recipient will have to pay the taxes under reverse charge, sir? We are going to see those points now. Section 9 subsection 3 says supply of services under reverse charge, notification number 13/2017. If a GTA, if a goods transport agency is giving services to these 7 notified persons, then these 7 notified persons will have to pay the taxes under reverse charge. Who are these 7 notified persons, sir? If a goods transport agency is giving services to a factory, if a goods transport agency is giving services to a society, if the goods transport agency is giving services to a cooperative society, if the goods transport agency is giving services to a registered person, if the goods transport company is giving services to a body corporate or a partnership firm or a casual taxable person, and if these people are all located in taxable territory, and if they are all located in taxable territory. Please note, GTA is giving services to a factory, society, cooperative society, a registered person, body corporate, partnership firm, or a casual taxable person, and if they are all located in taxable territory, then these people will have to pay the taxes. These people will have to pay the taxes and not the service provider, that is GTA. Okay, in case of GTA services. Now, GTA also has an option to pay tax under forward charge. For that, GSTA will have to take registration to GST law, and it will have to intimate the service recipient that it is willing to pay tax under forward charge. Now, please note, factory, society, cooperative societies, etc. Even these people, if they are not registered under GST law also, they'll have to take registration and pay the tax under reverse charge. Then, if services are supplied by an individual advocate or a senior advocate or a senior advocate by way of legal services directly or indirectly, meaning if an advocate basically is supplying legal services to a business entity, then that business entity who is receiving the legal services from the advocate, no, that business entity will have to pay the taxes under reverse charge. If legal services are given by whom, sir? If legal services are given by business entity to an advocate, then who will have to pay the taxes? The advocate will have the business entity who is taking the legal services from an advocate will have to pay the taxes under reverse charge. Then arbitral tribunal is giving services to a business entity. So just like advocate, we have advocate are members of Bar Council of India. We have arbitral tribunal. Now many times what happens is, instead of going to the court, instead of going to the actual high court, supreme court, district court, etc., the people who are under any dispute can try to settle the matter before going to the main court by going to which place, sir? Arbitral tribunal. So arbitral tribunal is giving services to these people. So if arbitral tribunal is giving services to a business entity, then that business entity who is receiving services from arbitral tribunal will have to pay the taxes under reverse charge for this particular transaction. Sir, I am not understanding this point at all, sir. Reverse charge. See, for example, you are an advocate. I am a business entity. I am Priya Saris. I am a business entity. So you as an advocate, you are giving services to me. Correct? You as an advocate, you are giving services to me. Therefore, on your services, lawmaker says RCM is applicable. Meaning, you supplied services worth rupees 1 lakh to me. On these services, RCM is applicable. Who is required to pay the taxes? Normally, supplier has to pay the taxes to the government. But in case of reverse charge, what will happen? I being a recipient, I will have to pay the taxes to the government. Now, I'll do one thing. Instead of studying from this chart, this point, I mean this table, I'll study from the explanation which I have provided. Okay, like for example, legal services given by advocate to a business entity. Who has to pay the taxes? Business entity has to pay the taxes under reverse charge. Now, for example, advocate is giving legal services to a business entity, Priya Saris, who is registered in GST law. Is RCM applicable? Yes. Advocate is giving legal services to a person who is an individual. Is RCM applicable? No, sir. Advocate is giving services to Chandrika Saris, who is not a registered person under GST law. Because he is not registered under GST law, is RCM applicable? Yes, because lawmaker says advocate is giving services to a business entity, then business entity has to pay the tax under reverse charge. However, you should also refer to your exemption provision. Exemption provision says if advocate gives services to a business entity whose turnover is less than the registration limit, then it is exempt. Okay, so if a person is not registered because his turnover is less than the limit of registration, then RCM may not apply. But however, that we will discuss in that chapter. Then arbitral tribunal is giving services to a business entity. Who will have to pay the taxes? Business entity will have to pay the taxes under reverse charge. Similarly, sponsorship services. Sponsorship services means what, sir? I am sponsoring some particular event. Say some sports day is happening in your college. I am giving, Priya Sadis is giving money for that sports day. So we are giving what services? Sponsorship. We are getting advertisement. You'll put everywhere. You'll write our names, etc. For example, award functions you would have seen. There are a lot of sponsors. Any TV show you see, they say this program is co-sponsored by, or IPL you see, IPL is sponsored by whom, sir? Tata IPL. They say Tata IPL. No. Why Tata IPL? They say, sir, because Tata is sponsoring the IPL. Correct? Title sponsors. Now, sponsorship services given by any person to a body corporate or a partnership firm. That body corporate or a partnership firm who is taking the services from them should pay the taxes under reverse charge. They should pay the taxes under what, sir? Reverse charge. Then, very important, any services given by any type of services. Here there is no criteria about what type of services. Any services given by any services given by government. Who? Government means what, sir? Central government, state government, union territory and local authority. Any services given by central government, state government, union territory and local authority to a business entity. To whom? To a business entity. That business entity will have to pay the taxes under reverse charge. So I, being a business entity, if I take services from government, then for the services which I am taking from government, I will have to pay the tax under reverse charge, except in case of these services. Meaning, in case of these 6 services, reverse charge will not apply, forward charge will apply. Hey, normally, if I am taking services from a government, then what will happen, sir? If I am taking services from government, I, being a business entity, I will have to pay tax under reverse charge. But if the services taken by me from government is these 6 services, then will RCM apply, sir? No. Now, for example, there is a hoarding. I am taking this hoarding belongs to state government. I am taking services from state government for advertising advertisement services I am taking. Now, in this case, can I say state government is giving services to me? Who I am a business entity. Therefore, lawmaker says, Priya Sadis, you being a business entity, you have to take you will have to pay taxes under reverse charge. Okay. However, in case of these services are given by me to government, is RCM applicable? No. Which are these services, sir? Renting of motor vehicle services. Which services, sir? Renting of motor vehicle services. Renting of renting of immobile property services. Renting of what, sir? Renting of immobile property services. What is this renting of immobile property services, sir? Renting of immobile property means I am taking a place on rent. The place where I am doing my business, no, Priya Sadis, that place is taken by me on rent from government. Now, is RCM applicable? No. Government will only collect the taxes from me. Services given by Department of Post. What is this point telling? Services given by whom, sir? Department of Post. I go to a post office, I take speed post services from them. Is RCM applicable? Lawmaker says no. Similarly, I am taking services from Indian Railway. So there are many business houses in Indian Railway. So Indian Railway, if you see railway station over there are a lot of people who are selling products, etc. They are taking services from Indian Railway. For whatever services they are taking from Indian Railway is only charging GST. Then services in respect of aircraft and vessel in port as well as airport. So if you see the airport, do you think the airline Indigo, SpiceJet, etc. they are all owning the airport? No, the airport is not owned by them. But still they are getting services from that airport, no? Parking services they are getting. They are getting services of landing, taking of services, etc. So for whatever services they are getting from this airports and ports, the airport and port is going to charge some money. On that money, the airport and port only will collect GST and pay to the government. Then services of transportation of passenger and transportation of goods. Sir, what is the services of transportation of passenger and transportation of goods, sir? Services of transportation of passenger and transportation of goods. You take services from any government bus, etc. The person who is supplying the services, they will only collect GST from you. Similarly, passenger transportation, goods transportation services I am taking from government, that will only collect the taxes. So in case of these items, what will happen, sir? In case of these items, is RCM applicable? No. In case of this item, it is always forward charge. Now, renting of immovable property services by government to a registered person. Now, if government, normally just now we saw, if renting of immovable property services is given by government to a business entity, who has to pay the taxes? Government only will collect the tax under forward charge. However, very important. However, if the renting of immovable property services is given by a government to a registered person, to whom, sir? Registered person. Here, they did not use the word registered person. Here they are telling if you are giving services to a business entity, then you will have to pay the taxes. But here what are they telling? If renting of motor vehicle immovable property services are given by government to a registered person, then that registered person will have to pay the taxes under reverse charge. Now, here there is a division of business entity. Let us say this particular premises which you are seeing belongs to government, and there are different shops available over here, and government is renting these shops. Government is renting this shop. Shop number 1 is rented to a business entity who is a registered person. Is RCM applicable? Yes. Shop number 2 is rented to a business entity but not registered under GST law. Is RCM applicable? No. Then what is applicable? Forward charge. Shop number 3 is rented to a non-business entity but he is a registered person. Is RCM applicable? Yes, because this point which we studied just now says if government is renting it to a business registered person, it does not matter whether it is business entity or not. If you are registered person taking services, RCM is applicable. Non-business entity taking renting of government is giving services to a non-business entity and who is not registered under GST. Is RCM applicable? Factory who is not registered under GST, RCM applicable? No. Why? Because RCM to apply, the person who is receiving the services should be a registered person. Then newly amended provision, very important provision. Many people are nowadays getting notice because of this provision. Renting of residential dwelling to a registered person. Renting of residential dwelling to a registered person. So if residential dwelling is rented to a registered person, then that registered person will have to pay tax under reverse charge. If renting of residential dwelling is happening to a registered person, then that registered person will have to pay tax under reverse charge. Now, what is this residential dwelling, sir? Basically, residential house. If you are renting this residential house to a registered person, then the registered person will have to pay taxes under reverse charge. Now, for example, renting of residential dwelling, you can rent it to a residential use or for commercial use. Now, for what use you are renting, that is also important over here. If you are renting residential use for a residential dwelling for a residential use to a registered person, RCM will apply. If you are renting the same residential dwelling for residential use to an unregistered person, no RCM is applicable. It is exempt under GST law. No GST at all is applicable. However, if you are renting commercial dwelling, whether to a registered person or unregistered person, okay, if it is rented to a registered person, then RCM will apply. Commercial dwelling rented to a registered person. If it is rented to an unregistered person, then it will be forward charge mechanism. It will be taxable under forward charge. Then, services given by director of a company to the said company. The company is giving services to whom, sir? Director is giving services to whom, sir? Company. If the director of the company is giving the services to that company, then what will happen, sir? RCM will apply. Now please note, very important concept this is. Director of a company can be divided into two categories. One is employee director, one is non-employee director. One director who is an employee of the company, another director who is not a employee of the company. If you are an director who is employee of the company, as we all know, services given by employee to the employer in the course of employment is not a supply, therefore no GST will come. But if I am a director of a company and if I am a non-employee director, lawmaker says then to it is a supply. Because it is a supply, GST also will come into existence. GST also will come into picture. Because it is a supply, GST will come, and therefore GST will be payable under reverse charge. If GST is coming, if services are taxable, director services are taxable, then they will be taxable under reverse charge. Okay. Now, very important amendment is made in this provision. Now, lawmaker says, if the director of the company, one part you understand first. Okay, then we will see the other part. You please understand one part first. If you are a director of the company, irrespective of whether you are an employee director or a non-employee director, I don't care whether you are an employee director or non-employee director. If you are director of a company and if you are giving services to the company in your personal capacity, If director of the company is giving services to the company in personal capacity, then it is always taxable under forward charge. Please understand this carefully. Please see the mark point. If you are a director of the company, whether you are an employee director or a non-employee director, it does not matter. Whatever services you give to the company in your personal capacity, is always taxable under forward charge. They are always taxable under forward charge. Then services are given by director, whether you are an employee director or non-employee director, in your personal capacity. Who has to pay the taxes? Forward charge is applicable. Always director will have to collect the taxes from the company and pay to the government. Now comes the RCM point. If services are given by director of a company in his capacity as a director, and if he is an employee director, and if the payment made to him on that TDS is deducted under income tax law under section 192, then it is a salary paid to him, therefore no GST will come. However, if an employee director is giving the services to the company in his director capacity, and for that if TDS is deducted under section 194J of income tax law, then it is not a supply. Because it is not a supply, no GST will come. No GST means no, if the TDS is deducted under section 194J, then yes, it is a supply. It is not a salary, therefore it is a supply. Because it is a supply, GST will come, and GST will be taxable under reverse charge. Sorry, repeat. I am employee of Priya Sarees Private Limited. I am giving service. I am a director of the company. I am giving services to them. I am giving services to them for which they are making the payment to me, on which TDS is deducted under section 192 of income tax law. This payment which is made to me is called as salary. Therefore, no RCM is applicable. I am giving services to them for which they are paying the money to me. On this money, they are deducting the taxes. On this money, whatever money they are paying the money to me, on this they are deducting the taxes under section 194J of income tax law. Lawmaker says 194J means not a salary. If it is not a salary, it is a supply. Therefore, GST is applicable under reverse charge. Next, employee director. You are a non-employee director. You are giving services to the company. Now it does not matter, because you are a non-employee director. It will always be taxable under reverse charge. Company will have to pay taxes under reverse charge. Sir, can you please give an example, sir? It is really confusing, sir. Now let us talk about a company called as Jio. Jio is giving service. There are three directors in Jio: Anant Ambani, then Isha Ambani, and Dilip. Let us say Akash Ambani instead of Anant. Akash Ambani is a whole-time director of Jio. Isha is managing director, and I am independent director. Now, me and Isha, we both are non-employee director, whereas Akash is employee director. Now, company is making payment to Akash, for which TDS deducted under 192. Because he is an employee, TDS deducted under 192, that means he is a salary. Because it is a salary, it is not a supply, therefore no GST. Akash is giving services to the company for which TDS is deducted under 194J. Because TDS is deducted under 194J, it is not a service which is providing as a employee. Therefore, it is a supply. Therefore, GST will apply. Sir, what is this DC and PC? DC means the services are given in director capacity. PC means services are given in personal capacity. Akash has also given his place on rent to the company. Now this is given in personal capacity. Whatever service you give in personal capacity, never RCM will apply. It is always forward charge. Isha is an non-employee. She is giving services in personal capacity. No RCM. Personal capacity, never RCM. She is giving services to the company as a director. Is she employee? No. Then RCM will apply. Dilip is giving services to the company as a director. Is he employee? No. Therefore, RCM shall apply. Now, similarly, there are other services like insurance agent, recovery agent is giving services to respective units, banking company or insurance company. Then the banking company, insurance company will have to pay the tax under reverse charge. Music composer, photographer, artist are giving services to a music company or a producer, that music company or a producer will have to pay taxes under reverse charge. Author is giving services to any publisher by way of writing a book for that publisher, etc. Now in that case, publisher will have to pay taxes under reverse charge. Then overseeing committee is giving services to RBI. RBI have to pay the tax and reverse charge. Individual direct selling agent is giving services to a company. That company will have to pay tax and reverse charge. Business facilitator or agent of business facilitator is giving services to a banking company or the business correspondent. They will have to pay taxes and reverse charge. Next, this point is little important. Security services. Security services means what, sir? Supply or manpower. Security services means what, sir? Supply of manpower. Security services are given by any person other than a body corporate to a registered person. What services? Security services are given by any person other than a body corporate to a registered person. So, if any person is involved in the business of supplying security guards or manpower, and that person who is giving the services is not a body corporate, and if it is giving services to a registered person, the registered person who is receiving the services should pay the taxes under reverse charge. Then renting of motor vehicle services. If you are giving renting of motor vehicle services, who is giving the services? Any person other than body corporate who is not opting to pay tax at 6% CGST. And to whom are you giving the services? To a body corporate. Basically, any person other than a body corporate is giving services to body corporate. What services? Renting of motor vehicle services. Then the body corporate who is receiving the services should pay the taxes under reverse charge. This is about your section 9. Next is section 10, important section, composition scheme. Composition scheme or composition levy. Now, if you take registration under GST law, then GST law says I will give you two options for taking registration. Either take registration as a composition dealer or you can take registration as a regular dealer. What is the difference, sir? If you take registration as a composition dealer, you will have to follow only one section, which is section 10. But if you take registration as a regular dealer, you will have to follow all the sections of GST law. If you take registration as a composition dealer, you will have to file only one return in a year. However, if you take registration as a regular dealer, you will have to file 2 returns every month. If you take registration as a composition dealer, for you, tax payment will be quarterly and you will have to pay tax also at a very less rate, 1%, 5%, etc. But if you are a regular dealer, you will have to pay taxes to me on monthly basis and you will have to pay whatever rate is there, 5%, 28%, whatever rate is there for a product, that rate you will have to apply. So, you decide when you want to take a registration as what you want to take registration, as a composition dealer or regular dealer. So, if I take registration as a composition dealer, there is a section called as section 10 applicable. Correct. Now we'll study the provision of section 10, which will tell us who can become a composition dealer. If I become a composition dealer, what are the advantages available to me, etc. All those points we will see. Now, what are the provisions with respect to composition scheme? Basically, is given in a section called as section number 10, composition levy. What is section 10 telling, sir? Section 10 subsection 1 talks about eligibility. Who is eligible to become a composition dealer? Am I eligible to become a composition dealer? Answer is yes. A registered person. Who is eligible to become a composition dealer? A registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crores. He may opt to pay tax at composite rates instead of paying the tax at regular rates. So if I am a registered person whose aggregate turnover did not exceed 1.5 crore rupees in the preceding financial year, then I have an option. I may opt to pay tax at composite rates instead of paying the tax at regular rates. Instead of paying the tax at regular rates, I may pay the tax at composite rates. So what are regular rates like 5%, 12%, 18%, etc. Instead of paying tax at those regular rates, I can pay the tax at composite rates. What are the composite rates? If you are a manufacturer who is opting for composition scheme, 0.5% of turnover in the state. And if you are a restaurant or outdoor catering, 2.5% of turnover in the state or unit rate. If you are any other dealer of goods, then it is 0.5% of taxable turnover in the state. I'll repeat once again. Who is eligible? A person who is registered having a turnover up to 1.5 crore rupees has an option. Is it compulsory? No, he has an option to pay tax at composite rates instead of paying the tax at regular rates. Okay. Now, limit is how much, sir? 1.5 crore rupees. This limit will be 75 lakhs for 8 special category states. Normally, what is the limit, sir? 1.5 crores. However, this limit will be how much? 75 lakhs for 8 special category states. Which are these 8 states, sir? Nagaland, Uttarakhand, Manipur, Meghalaya, Sikkim, Tripura, Arunachal Pradesh, and Mizoram. There are 8 states for which normally the limit for taking registration as a composition dealer. If I want to take registration as a composition dealer, my turnover should be within 1.5 crores. However, this limit will be reduced to 75 lakhs if I am doing business in these 8 special category states. Which are the states, sir? Nagaland, Uttarakhand, Manipur, Meghalaya, Mizoram, Arunachal Pradesh, Sikkim, and Tripura. Okay, if I am doing business in these states, my limit will be what, sir? 75 lakhs. Please note, if I am doing business in these states, then my limit for entire India will become 75 lakhs. Okay. Now, so as of now, the limit is 1.5 crores. Government has all the power to increase this limit up to 2 crores. As of now, what is the limit? 1.5 crores. So you don't have to remember up to where they can increase this. Sir, you are telling if my aggregate turnover is up to 1.5 crores, then this provision is applicable. What do you mean by aggregate turnover, sir? Very important definition. In your entire GST law, the most important definition is your aggregate turnover. Section 2, subsection 6 gives the meaning of aggregate turnover. This is the definition which you should remember along with the section number. Now, what do you mean by aggregate turnover, sir? Aggregate turnover. Aggregate means what? Total. Aggregate turnover means aggregate value of all taxable supplies, aggregate value of all exempt supplies, aggregate value of all export of goods or services, aggregate value of all interstate supply to a person having same PAN. Aggregate turnover means what, sir? Aggregate value. Aggregate value means the total value of all goods or services, the total value of all taxable goods and services, the total value of all exempt goods and services, the total value of all export of goods or services made by you, and the total value of all interstate services to a person having same PAN. Meaning, when I am taking aggregate turnover, I should take all the types of supplies, sales made by me. All the types of turnover means what, sir? Sales made by me, which will include my taxable supplies. Those supplies on which I will have to pay taxes is called as taxable supplies. Whether that supply is made by me within the states or another state, it does not matter. Whatever type of taxable supplies I am making, I will take that into consideration. And I'll take into consideration what, sir? I will take into consideration all the types of exempt supplies made by me. All those supplies which I am making on which tax is not applicable, exempt it is, that also will be taken into consideration. But sir, what do you mean by exempt supplies? Exempt supply means those supply for which the rate of tax is nil, those supply for which the rate of tax is nil, or those supply which are wholly exempt under section 11, those supply, and it includes non-taxable supplies, supplies which are nil rated, supplies which are wholly exempt, and it will include non-taxable supplies. Non-taxable supplies means alcoholic liquor for human consumption, HP man, etc. Now, aggregate turnover means aggregate value of all taxable supplies, aggregate value of all exempt supplies, export of goods or services or both. It will include what, sir? Export of goods or services or both. It will include interstate supply to a person having same PAN. Whatever supply you are making to a person having same PAN, interstate supply to a person having same PAN, interstate supply to a person having same PAN, meaning whatever supply you are making to your own branch at another state, that also will be included in aggregate turnover. Now, whenever you are calculating this aggregate turnover, you should calculate it on all India basis. What do you mean by this? You should take into consideration all the businesses which you have throughout India when you are calculating this aggregate turnover. You should calculate it on all India basis. And when you are calculating this aggregate turnover, you should not include the taxes under GST law and inward supply liable for reverse charge. Whatever taxes are there, under GST law, CGST, SGST, IGST, UTGST, GST compensation says this taxes should not be included in your turnover. Sir, what if it is not a tax under GST law? What if it is excise duty, service tax, custom duty? That you should include. Except the taxes under GST law, all the taxes should be included. Then you should not include the inward supply liable for reverse charge. You see, inward supply means your purchases. The purchases on which you have to pay the taxes under reverse charge, that also will not be included. Aggregate turnover means aggregate value of all taxable supplies, exempt supplies, export of goods or services, interstate supply to a person having same PAN. When you are computing this, compute it on all India basis and do not include taxes under GST and inward supply liable for reverse charge. Okay. Now, for example, I have Priya sarees in Karnataka, Priya sarees in Kerala, Priya sarees in Andhra and Priya sarees in Tamil Nadu. Now, what is the aggregate turnover of Priya sarees? When I ask you aggregate turnover of India Priya sarees, you should take it on all India basis. How many branches I have? All of that total I will do. So, Priya sarees aggregate turnover is what, sir? 60 lakh rupees. Aggregate turnover is how much, sir? 60 lakh rupees. I should take it on all India basis. Now, what if I have different businesses? I have Priya sarees in Karnataka, Priya chudidar in Maharashtra, Priya sweets in Telangana, Priya electronics in Tamil Nadu. Now what will happen, sir? I have different types of businesses, but all these businesses are using my PAN, meaning I am the owner of all these businesses. Now what is aggregate turnover? Lawmaker says, even if you have different types of business under same PAN, aggregate turnover should be taken on all India basis. What will be aggregate turnover? If I ask you what is the aggregate turnover of Priya sarees, what is your answer, sir? 100 lakhs. What is aggregate turnover of Priya electronics? 100 lakhs. Meaning, if I have different businesses under same PAN, then all those business turnovers will be included while calculating aggregate turnover. Now, one very important point you should note over here. What is that point, sir? When you are calculating aggregate turnover, you should not include the interest income. So, if you have given loan to someone, if you have deposited money in some bank account, you will be earning interest. That interest income should not be included while calculating aggregate turnover. Now, please note, normally, only if you are a dealer of goods, you can become a composition dealer under section 10 subsection 1, except restaurant services. Meaning, even if you are supplying restaurant services, you can become a composition dealer under 10.1. Apart from that, you should majorly be what, sir? Dealer of goods to become a composition dealer under 10.1. However, if you are eligible to become a composition dealer under section 10 subsection 1, then you can supply services. Sir, how much services can I supply, sir? Up to 10% of turnover in the state or 5 lakh rupees, whichever is higher. Purile, sir. If you are a person who is eligible to become a composition dealer under section 10.1, you can supply services. Normally, if you are a service provider, you cannot become a composition dealer under 10.1. But if you are eligible to become a composition dealer under section 10.1, then you can supply services. How much services can you supply, sir? You can supply services worth, how much, sir? You can supply services worth 10% of your turnover or 5 lakhs, whichever is higher. How much services, sir? 10% of your turnover or 5 lakhs, whichever is higher, can be supplied by you. Section 2 subsection 6 aggregate turnover we discussed. Now, sir, I can become a composition dealer, sir. Yes, you can become composition dealer. When can you become composition dealer? If your aggregate turnover is up to that limit. Now, sir, I am eligible to become a composition dealer, sir, as per my turnover limit. Now, are there any conditions which you will have to fulfill? Yes. Once you are eligible to become a composition dealer, you will have to fulfill the conditions given in section 10 subsection 2. Meaning, these conditions will be applicable to you only when you are eligible to become a composition dealer. Only when you become a composition dealer, this condition will apply. If you are eligible to become a composition dealer, this condition will apply. Now, please note, a registered person shall be eligible to opt for composition scheme. A registered person shall be eligible to opt for composition scheme under section 10 subsection 1 if he is not engaged in supply of services other than those mentioned in 10.1. Meaning, if you are a person who is supplying services, can you become a composition dealer? If you are a person who is supplying services, can you become a composition dealer? No. Other than those mentioned in 10.1. Meaning, if you are supplying services of a restaurant, that means you're supplying those services which are mentioned in 10.1, then no problem, you can still apply for composition scheme. Then if you want to become a composition dealer, you should not be engaged in making non-taxable supplies. Meaning, if you want to become a composition dealer, you should not make what, sir? Non-taxable supply. Meaning alcoholic liquor for human consumption. You should not supply high-speed diesel, petroleum crude, motor spirit, aviation turbine fuel, natural gas. You should not supply this product. If you supply this product, can you become a composition dealer? No. He should not be engaged in making interstate outward supply. Oh. If you want to become a composition dealer, you should not supply to other states. If you are supplying goods to other states, can you become a composition dealer? No, you will not be eligible. Sir, please note, before becoming composition dealer, you can do all those things. But once you become eligible, you should not do all these items. You should not supply through an e-commerce operator who is required to collect taxes under section 52. Now, section 52 one section is there which says, if you supply through an e-commerce operator and if the payment is also coming through e-commerce operator, then the e-commerce operator will have to collect taxes of 0.5%. Now, what is this point telling? If you are supplying goods through that e-commerce operator who is required to collect tax under section 52, then you cannot become a composition. Then you cannot opt for composition scheme. You should not be engaged in manufacturing notified goods. We all saw that a manufacturer can become a composition dealer. But if you are a manufacturer who is eligible to become a composition dealer, you should not manufacture notified goods. Which are these goods? Pan masala, aerated waters, or tobacco products, ice cream, bricks, roofing tiles, etc. If you manufacture these things, can you become a composition dealer, sir? No. Manufacturer can become, but if you are manufacturing these items, you cannot become. He is not a casual taxable person or non-resident taxable person. Normally, can a casual taxable person or non-resident taxable person become a composition dealer? Yes. A casual taxable person and non-resident taxable person, can they become a composition dealer? Can they become a composition dealer? No, they cannot become composition dealer. Meaning, who is a casual taxable person, sir? Casual taxable person means a person who is occasionally undertaking the activity of supply of goods or services at a place which is not his usual place of business. So because you are occasionally undertaking activity of supply of goods and services, I will not give you the benefit of composition scheme. I will not give you that benefit. So if you are a casual taxable person, non-resident taxable person, you will not get that benefit of composition scheme. Now, there is one point. What is this point? This is very important point. Now please note, there is one point, very important point. What is this point telling, sir? If you have more than one registration under same PAN, meaning I have taken two different registration under my own PAN. If you have more than one registration under same PAN, if one is opting for composition scheme, other also should opt for composition scheme, provided that where there are more than one registered person under same PAN, if one opts for composition scheme, others also should opt for composition scheme. Okay, others also should opt for the composition scheme. Section 10 2A. Sir, what is this section 10 2A? Section 10 2A talks about composition scheme for service provider. If I am a service provider, can I opt for composition scheme, sir? If I am a service provider, lawmaker says if you are a service provider, definitely you can opt for composition scheme under 10 2A. For that, there are some eligibility conditions. A registered person who is not, what are those conditions? You should be a registered person who is not eligible to apply for composition scheme under 10.1. So, as a service provider, you are not eligible to become a composition dealer under 10.1. So, if you are not eligible to become a composition dealer under 10.1, then for you 10.2A will be applicable. And your aggregate turnover should be how much, sir? Up to 50 lakh rupees. If you are a person who is not eligible to become a composition dealer as per 10.1, and if your aggregate turnover is up to 50 lakh rupees, up to how much, sir? 50 lakh rupees. And if you are exclusively supplying services other than those services mentioned in 10.1, which services are mentioned in 10.1? Restaurant and outdoor catering services. If you are supplying any services other than that, and if your turnover is up to 50 lakhs, and you are not eligible under 10.1, then you can become a composition dealer under 10.2A. For example, a chartered accountant, a lawyer, a company secretary, a cost accountant, or an engineer, can they all become composition dealer? Yes, under 10.2A. Now, if they become a composition dealer under 10(2)(a), what is the rate which is applicable to them, sir? What is the rate at which they'll have to pay the taxes? They'll have to pay the taxes at rate of 3% of turnover in the state or union territory. 3% CGST, 3% SGST. And whatever conditions are applicable to a normal composition dealer will apply to them also. What are the conditions? Whatever conditions we saw, except the supply of service condition. Meaning they cannot make interstate outward supply. They cannot supply to an e-commerce operator required to collect taxes under 50. So whatever conditions we saw over here, all these conditions will apply to them except the supply of service condition. Section 10.3. Section 10.3 says what, sir? Composition scheme. Your composition scheme will lapse. What do you mean by this composition scheme will lapse? Meaning in the current financial year, if your aggregate turnover is crossing the specified limit of 1.5 crores, 75 lakhs or 50 lakhs depending upon who you are and where you are doing business. If your aggregate turnover is crossing this limit, then your composition scheme shall lapse. Meaning, for example, I started my business on 1st of April and my turnover crossed 75 lakhs on or 1.5 crores or 50 lakhs on 10th of December. Meaning from this date, I will no more be called as a composition dealer. I will become a regular dealer. That is what it means. So once I become a regular dealer, whatever sales I am making, I'll have to pay tax at normal rates. And before this, whatever sales I made, I'll have to pay tax at composite rates. Section 10.4. Composition scheme. A person who is a composition dealer, he cannot collect taxes on his supply. Meaning whatever sales, I mean, sir, right now CA students examinations are postponed at the time on the date when I am recording this particular lecture. CA students examinations are postponed. Sir, will CS students, will CMA students, will other examinations which are held at India level, will those examinations also be postponed, sir? If the situation continues, then yes. If the situation is not continuing, if say this matter gets resolved in 1 week's time, 5 days times, etc., which it should happen, then will the examination get will CS, CMA or other examination will they get postponed, sir? Answer is no. So unless until your institute is specifically giving a notification, you should not make any assumption telling, oh wow, my exam also will get postponed, I will not have to study. No, don't do such assumptions. You just study normally as you are studying. Okay, if the institute feels like postponing your examination, then definitely they will postpone your examination. Section 10.4. Composition dealer. A. And if the examination is postponed, you should not be happy. Why, sir? Because your success is getting delayed. Whatever you were able to achieve in 1 month's time, now you will have to work for 2 months to achieve the same thing. So you should never be happy that examination is getting postponed. No, you should not be happy. Now a composition dealer cannot collect taxes on his supply. So whatever supplies he's making, can he collect taxes, sir? No, he cannot collect taxes from his customer. Whatever tax he has to pay, 1%, 3%, 5%, he will have to pay from his own pocket. And a composition dealer, no, he cannot take input tax credit also. So whatever purchases he's making, on that input tax credit, can he take, sir? Answer is no. Lawmaker says a composition dealer cannot take input tax credit also. A composition dealer will not be eligible to take input tax credit. Now 10.5 time pass section. This is what is now, sir, you said composition dealer cannot collect taxes on his supply, therefore he cannot issue tax invoice, sir. Yes. What will he issue? He will issue a document called as bill of supply. 10.5. Notice by proper officer. What is this point telling? The GST officer is called as proper officer. He will give a notice to you if you contravene the provisions of section 10. Meaning, even if you are not eligible to become a composition dealer, if you opt for composition scheme, he will give a notice to you. Or you have opted for composition scheme because you were eligible, but you are not following whatever provisions are given in composition scheme properly. He will give a notice to you. If the proper officer has a reason to believe that a taxable person has opted for composition scheme, even though he is not eligible, then the proper officer shall issue a notice to such person. And such person is required to respond to that notice. If the response is satisfactory, then no further actions will be taken. If the response is not satisfactory, then the officer will ask him to pay the taxes at normal rates, and also the provisions of section 73 and 74 will apply. And also what's the provisions of 73 and 74 will apply. So this is all about your composition scheme. Now there are rules in composition scheme. Those rules we'll see and complete this discussion. Rule number 3 and rule number 4. Rule 3 and rule 4 talks about who is eligible to opt for composition scheme and what is the effective date of composition scheme. Who is eligible to opt for composition scheme, sir? We saw that. Now if I want to be eligible to opt for composition scheme, I will have to make an intimation, tell the government that I want to become a composition dealer. So now there can be two type of people: a person who is applying new registration and therefore he want to become a composition dealer, or you are already a registered person and now you want to become a composition dealer. So if you are a person who is taking a new registration and you want to opt for composition scheme, at the time when you are filling your registration application, which is GST REG 01, in part B of registration application, there is an option of selecting that I want to become a composition dealer. You have to select that option. And once you select that option, the date when the registration certificate is given to you, on that day your composition scheme shall be effective from. Sir, no sir, I am already a registered person. I was registered as a regular dealer. Now I want to become a composition dealer, sir. Then lawmaker says, in such cases, you will have to you will have to make an intimation to government before the beginning of next financial year. Before the next financial year is starting, you will have to intimate to the government by filling a form called as form GST CMP 02. And from first day of the next financial year, composition scheme shall be given to you. Rule number 5 talks about other conditions. What are these other conditions which are applicable to a composition dealer? A composition dealer will have to mention the words composition taxable person on the name board and sign board. He will have to mention those words, I am a composition taxable person, or else how will people come to know about that? So he will have to mention the word composition taxable person on the name board, sign board, etc. And he'll have to mention the words composition taxable person not eligible to collect taxes on his supply. He'll have to receive. A composition dealer cannot collect taxes on his sales. So he will have to tell those people that I am a composition dealer, I am not eligible to collect taxes on my supply. Then, sir, on his sales, a composition dealer will have to pay the taxes under composite rate. What about on his purchases, sir? On his purchases, he will have to pay taxes at normal rates only. Now, other points with respect to composition scheme: composition dealer is required to file return annually once a year. The return which is required to be filed by him is called as GSTR 4, and this GSTR 4 is required to be filed by him by 30th April of next financial year. And composition dealer is required to pay the taxes on quarterly basis, and he will have to use what, sir? A form called as form GST CMP 08 for paying the taxes. And when he has to pay the taxes, sir, by 18th of next month following the quarter. 18th of next month following the quarter. For example, if it is April to June quarter, he will have to pay it by 18th of July. Okay, what is a quarter? Quarter is a period of 3 months starting from first day of a calendar year. This is all about your composition scheme. Okay, so this is all about your composition scheme. Let us continue our discussion in our next class. Okay, we'll continue. Like one question we'll see about aggregate turnover. Now see, this is a question on aggregate turnover. Aggregate turnover will include aggregate value of all taxable supplies, exempt supplies, export of goods or services, interstate supply, etc. Now sales made intrastate sales outward supply, meaning I made a sales within the state. Will it be included in aggregate turnover? Yes. Interstate exempt supply made to different states, will it be included? Yes. Export, will it be included in my aggregate turnover? Yes. GST, IGST, will it be included in aggregate turnover? No. CGST and SGST, will it be included in aggregate turnover? No. Custom duty, it is not a tax under GST law. Therefore, will it be included in aggregate turnover? Yes. Payment made for availing GTS services. So this is inward service. If you are availing something, that means you are taking something. This is your inward supply. Will it be included in aggregate turnover? No. So what is your aggregate turnover? Your aggregate turnover is 32 lakhs 40,000 rupees. Okay. Next topic we will see in our next class. I hope you enjoyed learning today's session. Let us meet again in our next class. Till then, sir, please upload notes. Notes, as I told you, you please refer my video under income tax, I have told you about the notes, where you can find notes, etc. Okay, so let us meet in our next class. Till then, take care, enjoy, happy learning. So tomorrow we'll meet again. Timings will be accordingly informed to you. Let us see how my schedule is there, and accordingly we'll meet tomorrow. Chalo, tada, bye bye, take care, enjoy, happy learning, take care, stay safe, Jai Hind, bye bye. Hello friends, I hope I'm audible and also the screen is visible. Very good afternoon to you all. So in our previous class we were discussing about, we have completed our discussion on topics up to which topic did we complete? Up to our composition scheme we had completed. So now we are continuing our discussion, and today we'll take up what, sir? Today we'll continue our discussion and we'll start with section 12. Section 12, section 13 and section 14. These are the different sections which talks about composition scheme we had completed. So now we are section 12, section 13 and 14 talks about time of supply chapter. Section 12, 13, 14 will talk about what, sir? Time of supply. Okay, we'll discuss these topics today. Now, before understanding the concept of time of supply, for us it is very important to understand what is the due date for issuing invoice, because to understand this chapter of time of supply, for us we have to understand what is the due date of issuing invoice. Now the due date of issuing invoice is given under section 31. So we have a section called as section 31, which gives the details with respect to when the invoice has to be issued. What is the due date of issuing invoice? Now in case of goods, if you are making a supply, okay, in case of goods, if the supply which you are making involves movement in goods, if whatever supply you are making, if it involves movement in goods, then the invoice is required to be issued on or before removal of such goods. For example, I am making supply of sarees, okay, from Chennai to Mumbai. So these sarees are required to move from Chennai to Mumbai. So if I am making a supply which involves movement in goods, when is the invoice required to be issued, sir? On the date when the goods are going out of my factory or any time before that date. Supply does not involve movement in goods. So if I make a supply of goods where there is no movement involved, lawmaker says in such cases, if supply does not involve movement in goods, invoice is required to be issued on or before delivery of the goods. For example, I am selling this windmill to someone. Now these are sold in parts and then installation is happening at what location. Now this product will be delivered once I give the final windmill to them. Now when I give each and every wing, is the supply made by me? No. The supply, a person who is purchasing a windmill has come with an intention of purchasing the windmill from me. So the actual delivery of the goods will happen when the final product, the windmill will be given by me to that such person. So on or before delivery of such goods, the invoice is required to be issued. Sir, what if it is a case of continuous supply of goods? What do you mean by continuous supply of goods? Goods are supplied on continuous basis or on recurrent basis under a contract. Meaning I am continuously, for example, I am a builder, I want cement. I will take around 5 years time to construct a particular building. So for a period of 5 years I will need cement. So in this case, this is the case of what, sir? Continuous supply of goods. In case of continuous supply of goods, invoice is required to be issued on successive statement date or on successive payment date, whichever is earlier. So invoice is required to be issued on successive statement dates or payment dates, whichever is earlier. And in case of sale on approval basis, what is sale on approval basis? Sale on approval basis means it will be treated as sale. The transaction will be treated as a transaction of sale only when the goods are approved. For example, I give you 5 sarees. Now you want only 1 saree. Now because I have given all the 5 sarees to you, is it treated as sale of 5 sarees by me to you? No. When will sale actually happen? On the date when you are going to give an approval telling, yes, these are the sarees which I am going to keep it for myself. So in case of sale on approval basis, invoice is required to be issued on the date of approval or from within 6 months from the date of removal, whichever is earlier. On the date when you are giving your approval or within 6 months from the date of removal of goods from my factory to your location, invoice is required to be issued by me. Then for services, when invoice is required to be issued, sir, in case of services, no, I will check whether it is a normal cases or it is a case of continuous supply of services. In normal cases for services, invoice is required to be issued on or before completion of providing services or within 30 days from the date of completion of providing services. So on the date when I have provided the services to you, or anytime before that date, invoice is required to be issued by me to you. For example, I am filing income tax return of Infosys. I have filed the income tax return on 15th of July. So can I say 15th of July is the date when the services are provided by me, completed by me? So invoice is required to be issued on 15th of July or anytime before 15th of July. Can I issue the invoice afterwards, sir? Lawmaker says yes. If you are issuing it afterwards, you can issue it afterwards definitely, but you should issue within 30 days from the date of completion. Now, this 30 days will be replaced by 45 days in case of a banking company, financial institution, NBFC. So, in case you are a banking company, financial institution, instead of 30 days, I am going to take how many days, sir? 45 days. Then, in case of continuous supply of service. Sir, what is this continuous supply of service? Continuous supply of service means services are supplied by you on continuous basis or on recurrent basis. Continuously you are supplying services. For example, construction services. Now, construction will not happen in one particular month. If you are constructing a 2, 3, 4 building, it will take over a period of 6, 7 months, 8 months, 9 months, 10 months, etc. So, in case of construction, what is happening, sir? The services are provided on continuous basis. In this case, what is the due date of issuing invoice? The due date of the invoice is required to be issued. Check. See here, the person who is constructing the building is going to enter into a contract with me, telling, sir, because the construction will take over a period of 10 months time, you make the payment to me on 10th of every month. You make the payment to me. You pay me 5 lakh rupees on 10th of every month. Now, so here what is happening, sir? There is a contract between me and the service provider wherein the due date of payment is ascertainable. Meaning the date on which they are the payment is required to be made is ascertainable, is known. In such cases, invoice is required to be issued on or before the due date of payment. On the date when the payment is made or any time before that date, invoice is required to be issued. Sir, what if the due date of payment is not ascertainable? What do you mean by this? What if due date of payment is not ascertainable? Meaning, they have told that every month I should pay 5 lakh rupees, but on which date I should pay 5 lakh rupees is not mentioned. In such cases, due date of payment is not ascertainable. Invoice is required to be issued on or before receipt of such payment. On the date when the payment is received, the invoice is required to be issued for that amount. Now, sometimes the payment can also be linked to completion. Completion means what, sir? Say, ground floor is completed, I'll pay you 25 lakhs. First floor is completed, I'll pay you 25 lakhs. Next floor is completed, I'll pay you 25 lakhs. Now, here what is happening? Payment is linked to completion. So, as and when completion is happening, payment is also made. In that case, lawmaker says invoice is required to be issued on or before completion. Okay, so this is the due date for issuing invoice as per section 31. Now, this forms a very important basis for us to understand the provisions with respect to time of supply. Now, let us understand the provision with respect to time of supply. Section 12 subsection 1 says, the liability to pay tax in case of supply of services shall be the time of supply as determined under section 12. Meaning, if you want to know when you are liable to pay tax in case of supply of goods, the liability to pay tax in case of supply of goods shall be the time of supply as per section 12. If you want to know when you are liable to pay tax in case of supply of goods, then you please go to the provision of section 12. The provision of section 12 is going to tell you when you are liable to pay the taxes in case of supply of goods. Section 12 subsection 2. Time of supply of goods in case of forward charge. So this is our first section, time of supply of goods in case of forward charge. Now check whether the invoice has been issued within the due date or the invoice has not been issued within the due date. Meaning, whenever you are supplying a goods which is taxable under forward charge, what you are supposed to check? Whether the supply which I am making, that supply, whether invoice has been issued by me within the due date specified under section 31. Just now we saw those due dates, or invoice is not issued within the due date. If I have issued the invoice, the person who is supplying, if he has issued the invoice within the due date, the time of supply for him will be the date of invoice or the date of payment, whichever is earlier. If the invoice is issued within the due date, time of supply will be the date on which the invoice has been issued or the date on which the payment has been made, whichever is earlier. Sir, what if invoice is not issued within the due date? Time of supply will be the last date to issue invoice or the date of payment, whichever is earlier. Sir, I didn't understand this point, sir. But what if it is not issued within the due date? Last date within which invoice is recorded issued as per section 31, whatever you saw over there, or date of payment, whichever is earlier the invoice is recorded to be issued. For example, say I supplied goods for which I received an order on 23rd of March. I prepared the goods on 24th of March, and 24th of March I packed the goods and I dispatched the goods on 25th of March. Invoice was given on 28th of March, delivery was on 30th of March, and payment was received on 5th of April. Now in this question you should check whether the invoice has been issued before within the due date or not. So what is this invoice issued? This is a case of supply of goods. Okay, let us say this is a case of supply of goods. Now in case of goods, normally what happens in goods, sir? Movement will be there in case of goods. Therefore, invoice is recorded issued on the date when the goods are going off the factory or any time before that date. Invoice is recorded issued on or before removal. Now in this case, you check whether the invoice has been issued on or before removal or not. Sir, in this case, 25th of March is the date when the goods are dispatched from the factory. That means it is this date on which the goods are going out of the factory. So can I call this date as the date of removal? Yes, sir. So on this date the goods are going out of the factory. So can I say invoice is recorded to be issued on this date or any time before this date? Yes, sir. But we have issued the invoice. I am supposed to issue the invoice on 25th of March. I have issued the invoice on 28th of March. Can I say invoice is not issued within the due date? Yes, sir. Invoice is not issued within the due date. So if invoice is not issued within the due date, what is the time of supply? Sir, if invoice is not issued within the due date, time of supply will be last date to issue invoice or the date of payment, whichever is earlier. Now, what is the last date to issue invoice? Which is nothing but invoice is recorded to be issued on or before removal, or date of payment. Who is early? Who is before? 5th of April is first or 25th of March is first? 25th of March. So this date will be taken as time of supply. Yeah, okay, not okay. This date will be taken as time of supply. Section 12 subsection 2 talks about time of supply of goods in case of forward charge. Now, however, there is a very important point to be noted over here. Sir, before going to that point, sir, what do you mean by date of payment? See, date of payment is the date on which you are passing an entry in the books of accounts that the payment is received, or the date when the amount is getting credited to your bank account, whichever is earlier. So on the date when the amount is coming to your bank account, or the date on which you are passing an entry in the books of accounts that you have received the payment, whichever is earlier, will be taken as date of payment. Now you were telling about some important points, sir. Yes. Now there is a notification. There is a notification called as notification number 66/2017. This notification number 66/2017 says, in case of supply of goods, if any money is received before making the supply. So if you are in the business of supply of goods and you receive any money before making the supply of goods, that means you have received advance in short. In short, what, sir? It is an advance which is received by you. Then in such cases, the date of receipt of such money shall not be taken as time of supply. Then what will happen, sir? In such cases, the date when you have received the money, that date will not be taken as time of supply. That is, if date of payment is before date of invoice or last date to issue invoice, the date of payment will be taken as time of supply. In short, what will happen, sir? Because of this particular point, the date of payment will not be considered as time of supply in case of goods. In case of goods, what is time of supply? Either the date of invoice or last date to issue invoice, whichever is earlier, will be taken as time of supply. Section 12 subsection 3. Time of supply in case of goods liable to be taxed under reverse charge. Now please note, this notification number 66/2017 is not applicable for specified actionable claims. Okay, specified actionable claims are all treated as goods, but this notification is not applicable for specified actionable claims. What are the specified actionable claims? Yesterday we saw, no, lottery, betting, gambling, horse race, or online money games and casino incomes. Section 12 subsection 4, time of supply of goods in case of vouchers. In case of vouchers, what is the time of supply, sir? Now you check whether the supply which you are making, it is a supply identifiable voucher or it is a case of supply not identifiable voucher. Reverse charge we have not seen, correct? Yeah, Time of section 12 subsection 3, time of supply of goods in case of reverse charge. In case of reverse charge, the time of supply will be, reverse charge means what, sir? The recipient has to pay the taxes under reverse charge, correct? The receiver will have to pay the taxes. In case of reverse charge, the time of supply will be the date of receipt of goods, the date of making the payment, or 31 days from the date of supplier invoice, whichever is earlier. In case of reverse charge, what is the time of supply? The date on which the goods have been received, date on which you are making the payment, or 31 days from the date of supplier invoice. 31 days I will take from the date of supplier invoice, whichever is earlier among them will be taken as time of supply. Now in case of vouchers, what is this voucher, sir? Now sometimes what may happen is you may purchase goods, you may take any goods under a voucher. Under a voucher, meaning what, sir? Gift vouchers will be there. You can use the gift voucher for purchase of goods, correct? So in case of vouchers, what is the time of supply? Now vouchers can be of two types. What are these two types of voucher? Either it can be a supply identifiable voucher, or it can be a supply not identifiable voucher. What do you mean by this? Meaning the voucher which you have, based on which you are going to purchase something, that voucher tells you what you can purchase for by using this voucher. Meaning that that voucher will specifically tell that you can go purchase this product. That is a supply identifiable voucher. What is supply not identifiable voucher? Supply not identifiable voucher means the voucher does not specify what you can purchase. For example, I gave you a Puma voucher worth rupees 5,000. Now I say that you can purchase only Puma shoe. That means what? This is a case of supply identifiable voucher. I gave you a Puma voucher of 5,000 rupees and I told you you can purchase anything in Puma store. That means it is a supply not identifiable voucher. So if it is a supply identifiable voucher, meaning if the person who is giving the voucher knows what you are going to purchase by using this voucher, then it is a supply identifiable voucher. If it is a supply identifiable voucher, the time of supply will be the date on which the voucher is issued. The date of issue of voucher. Sir, what if it is a supply not identifiable voucher? If it is a supply not identifiable voucher, the time of supply will be date of redemption of voucher. The date on which the vouchers are redeemed, that date will be taken as time of supply. Then section 12 subsection 5, residual cases, meaning when will these residual cases come into existence? If you are not able to find the time of supply as per section 12.2, 12.3, 12.4, then only this provision of section 12 subsection 5 is going to come. Residual cases will come. What is this telling? I will check whether you are a person who is liable to file returns or not liable to file returns. I understood that you are not able to find the time of supply as per 12.2, 12.3 and 12.4. Therefore, I will tell you what is the time of supply. Who is telling? 12.5 is telling. 12.5 says, I will check whether you are a person who is liable to file returns or you are a person who is not liable to file returns. If you are a person who is liable to file returns, then the time of supply will be due date of filing returns. But if I am a person who is not liable to file the returns, sir, then the date on which you are making the payment of taxes to the government, that date will be taken as time of supply. Section 12 subsection 6. The time of supply in case of interest, penalty, late fee for delay in payment of consideration. So if there is any interest, penalty or late fee which you are paying because you have delayed the payment of consideration. In value of supply, you will understand that if you don't make the payment of consideration within some time, and if you are receiving any interest, penalty, late fee, that is added in value of supply. So because it is added in value of supply, on that amount also GST is payable to the government. On which date will I have to pay, sir? What is the date when the time of supply will occur for this transaction? So in case of interest, penalty, late fee for delay in payment of consideration, the time of supply will be the date of receipt of such amount. The date on which you are receiving this amount, that date will be taken as what, sir? Time of supply. Now that was time of supply of goods, very simple, very easy. Now we'll see time of supply of services. For services, when should I pay the taxes? Time of supply of services. Section 13 subsection 3 says the liability to pay tax in case of supply of services shall be the time of supply as per section 13. So if you want to know when you are liable to pay taxes in case of supply of services, then go please refer to the provisions of section 13, that will tell you. Section 13 subsection 2, time of supply in case of forward charge. Time of supply in case of forward charge. Now two possibilities are there. Check whether the invoice is issued by you within the due date under section 31, or the invoice is not issued by you within the due date under section 31. In case of goods also we saw the same thing, no sir? Yes, perfect. So if you are issuing the invoice for services within the due date, then the time of supply will be date of invoice or date of payment, whichever is earlier. Sir, once again repeat, sir. For services, the invoice is required to be issued on or before completion or within 30 days from the date of completion. If you have issued the invoice within that date, then the time of supply will be date of invoice or date of payment, whichever is earlier. No sir, but I have not issued the invoice within the time limit. No sir. In such cases, if the invoice is not issued within the due date, then what is the date when you have completed providing services? The date of completion, that will be compared with date of payment, and I am going to take whichever is earlier as my time of supply. Whichever is earlier part is there, no, that will be taken as time of supply. Here also date of payment is date on which entry has been made in the books of accounts, or date on which amount is getting credited to the bank account, whichever is earlier. Now for services, there is also an additional provision. What additional proviso? There is a proviso to section 13 subsection 2, which says if the supplier is receiving any amount up to ₹1,000 in excess of the invoice value, then for that excess amount, the time of supply will be the date when that amount is received. For that excess amount, what will be the time of supply? The date when such amount is received. Now, in case of reverse charge for services, what is the time of supply, sir? In case of services liable to be taxed under reverse charge, in case of services liable to be taxed under reverse charge, the time of supply will be date of making the payment or 61st date from the date of supplier invoice, whichever is earlier. Date of making the payment or 61 days from the date of supplier invoice, whichever is earlier. Note, in case of importation of services, the recipient has to pay the taxes under reverse charge. We all know that if I am importing any services from outside India, who has to pay the tax? The recipient will have to pay the taxes under reverse charge. Correct. Now, there is a case of associated enterprises. If I am taking services from my own establishment outside India, that means I am taking services from associated enterprises. So in case of associated enterprises, the time of supply will be what, sir? The date of making the payment or the date of debiting that expenses in the books of accounts or that particular account in the books of accounts, whichever is earlier. Because normally it may happen that because it is your own establishment, you may not make payment to them. So if you are not making the payment, no problem, I'll take the date on which you are debiting the book in the books of accounts, that particular person's lecture. Now in case of vouchers for services, it is same. Check whether the supply which you are making, it is a supply identifiable voucher. If yes, the date of issue of voucher is taken as time of supply. If the voucher is which is given by you, it is a supply not identifiable voucher, time of supply will be date of redemption of voucher. In residual cases, are you a person liable to file return? Yes, due date of filing returns will be taken as time of supply. In all other cases, the date of making the payment will be taken as time of supply. And for 13.6, interest penalty late fee for delay in payment of consideration, time of supply will be what, sir? The date of receipt of such amount. Whenever you receive that money will be taken as time of supply. Now, under section 12 and 13, we discussed about time of supply of goods and time of supply of services. Now, sometimes what may happen is there may be what, sir? Sometimes what may happen is there may be a change in rate of tax. Change in rate of tax means what, sir? The tax rate is changed from 5% to 12%, or from 12% it is changing to 28%. Now, whenever there is a change in rate of tax, which rate should I apply, sir? Whether the before rate or after rate? Because it may happen that I would have purchased the goods when the rate was 12% and now the rate is 28%. Correct, no? So in such cases, what rate should I apply, sir? What rate should I apply? And it may happen that I would have sold the goods before, but I have not given the invoice. I would have given the invoice after the supply is made. So in all these scenarios, what is the time of supply in case of change in rate of tax? See, whenever there is a change in rate of tax, there are two possibilities. Either you can make the supply before the change in rate of tax, or you can make the supply after this change in rate of tax. Now, with a simple example, with a single flow, I'll teach you. Now, supply can be made before change. So, let us talk about this is a timeline wherein this is the date, the red part which you are seeing, that is the date when the rate of tax got changed. Now, here, first case, what is the first case, sir? Supply is before change. Now, supply is before change means what? Everywhere, if you see, the supply is there. No, S is for supply. The supply is before change. I is for invoice and P is for payment. Now, what is the provision telling, sir? If the supply has been made before the change in rate of tax, and if the invoice is also issued before the change in rate of tax, however, if the payment is received after the date of change in rate of tax, time of supply will be date of invoice. Similarly, in case whenever there is a change in rate of tax, if the supply has been made before the change in rate of tax and payment is also received before the change in rate of tax, however, the invoice is received by you or issued by you after the change in rate of tax, in such scenarios, time of supply will be date of payment. Basically, in simple words, if the supply is before and if either invoice or payment, any one among them is also before, whoever is with supply will be taken as time of supply. Sir, what if the supply is before an invoice and payment is after, sir? Then I'll take time of supply to be equal to date of invoice or date of payment, whichever is earlier. Sir, what if everything is before only? Then time of supply will be date of invoice or payment, whichever is earlier. Meaning, in simple words, the date of supply will not become time of supply. Either the invoice date or the payment date, any one among them only will become time of supply. Now, same is applicable in the second scenario also, where you are making the supply after change. Now, the change is happening on this date, supply is made after change, supply is made after change, supply is made after change, supply is made after change. Now, here also same scenarios are possible. I have made the supply after the change and the payment is also received after the change. Lawmaker says date of payment. Basically, whoever is with supply, that is becoming time of supply. Correct? No? Whoever is with supply, that is becoming time of supply. Whether it is after change or before change, whoever is with supply, that is becoming time of supply. But however, if all the three are together, then date of invoice or payment, whichever is earlier. If none of them is with supply, date of invoice or payment, whichever is earlier, will be taken as time of supply. Now, normally, what is date of payment? Normally, date of payment is book entry date or bank credit date, whichever is earlier. The date on which you are making entry in the books of accounts, or the date on which the amount is getting credited to the bank account, whichever is earlier, will be taken as date of payment. However, in case whenever there is a change in rate of tax, the date of payment will be, however, if in case of change in rate of tax, only this point is applicable, which you are seeing now. If the amount is getting credited to the bank account after 4 working days from the date of change in rate of tax, if the amount is getting credited to the bank account after 4 working days, then the time and then the date of payment shall be the date on which the amount is getting credited to the bank account. So, however, if the payment is getting credited to the bank account after 4 working days from the date of change in rate of tax, then the date of payment shall be the date on which amount is getting credited to the bank account. Now, we'll see one simple question. Priya Sarees made supply of sarees to Samantha Sarees on 2nd of August 2024. The government decided to change the rate in tax from 15%, 5% to 12% with effect from 13th of August. The invoice for the supply was issued on 31st of July, that is before change. Priya Sarees received the check on 10th of August, and that is after change. And the check date was 12th of August, that is also after change. A check was deposited in the bank after change, 13th of August. Amount got credited in the books of accounts on 18th of August. So what is my date of payment, sir? It is the date of, and entry was made in the books of accounts on 12th of August. So 12th of August or 18th of August, whichever is earlier. Now I should see whether the amount is getting credited to the bank account after 4 working days. Is it happening, sir? So I deposited the check on 13th, 14, 15, 16, 17. Can I say amount is getting credited to the bank account after 4 working days? Therefore, my date of payment will be what, sir? It will be 18th of August. Determine the time of supply. Will your answer change? Now, date of supply is the date when I made the supply is 2nd of August. Date of invoice is 31st of July. And change in rate of tax is 13th of August. Now, normally date of payment is book entry date or bank credit date, whichever is earlier. But in this case, what is happening? Amount is getting credited to the bank account after 4 working days. Now, because amount is getting credited to the bank account after 4 working days, the date of payment will be date on which the amount is getting credited to the bank account. So, in case number 1, date of payment will be 18th of August, which is nothing but book entry date or bank credit date, whichever is earlier. In case number 2, book entry was made on 12th of August. However, bank amount got credited in 16th of August, whoever is earlier. Okay, so that is anyways date of payment. Now we will write the provision. So whenever there is a change in rate of tax, if supply is made before change in rate of tax, and if invoice is also issued before the change in rate of tax, then time of supply will be date of issue of invoice. In the present case, what is the answer, sir? Date of issue of invoice, which is 31st of July 2020 dot. Now one more question we'll see with respect to time of supply of goods. Chiku Traders is registered for supply of registered supplier of plastic goods. On 10th of April 2018, Chiku Traders received an order from Nilu Traders for supply of consignment of plastic goods. Chiku Traders gets the consignment ready by 15th of August. The invoice for the consignment was issued by the next day, 15th of August. 16th of August. Nilu Traders collects the consignment from the godown of Chiku Traders on 25th of August. So the date of removal is 25th of August, and goods were handed over for payment of the same day. The payment is entered in the books of accounts on 26th of April, and amount got credit in the bank account on 27th of April. So date of payment is what, sir? Date of payment is book entry date or bank credit date. What is the entry book entry date? 26th of April. So that will be taken as date of payment. Now we know you are required to find the time of supply. We know if invoice is issued within the due date, as per section 31, time of supply will be date of invoice or date of payment, whichever is earlier. What is the date of invoice? 1st of May. Date of payment is 26th of 15th of April is date of invoice, and date of payment is 26th of May. Who is early? 15th of April is early. So time of supply is what, sir? 15th of April. Now, second question was, what if the invoice was issued on 30th of April? If the invoice is issued on 30th April, that means the invoice is issued after the due date. Now, we know that the goods are going out of the factory on 25th of April. So, the date of removal will be taken as time of supply. For services also, we'll see one question on similar points. XYZ and company, a firm of chartered accountants, issued invoice for services rendered to Mr. A on 7th of September. Determine the time of supply. Okay, in date of invoice they have given 7th of September. Services were completed on 1st of August and payment was received on 2nd of August. So you provided the services on 1st of August. Payment was invoice was issued after the due date, correct? So I'll take date of completion or date of payment, whichever is earlier. Who is early? 1st of August is early. So in case 1, date of completion is 1st of August, date of payment is 28th of September. In case of supply of services, if invoice is issued before completion or within 30 days from the date of completion, in case of supply of services, invoice is required to be issued before completion or within 30 days. In the present case, the invoice has not been issued within the due date of 31. Therefore, time of supply is date of completion or date of payment, whichever is earlier, which is 1st of August. Similarly, other cases are there. Now we'll go to the next chapter called as value of supply. Section 15 talks about what, sir? Value of supply. What is the value on which you are required to pay GST? Who will tell this, sir? This particular chapter is going to tell you what is the value of supply. Section 15 as well as rules of valuations are applicable to at this level. Section 15 says what, sir? Value of supply is transaction value. What are you going to check? What are you going to tell? Value of supply is what? Value of supply is the transaction value. Sir, what do you mean by transaction value? Transaction value means the price which is actually required to be paid and which is payable for supply of goods or services or both. What is value of supply? Value of supply is transaction value. Sir, what is transaction value? Transaction value is the price which is actually paid by you or the price which is actually payable by you for making the supply of goods or services or both. When you're calculating this transaction value, you should not take into consideration, you should make sure that the supplier is not related, supplier and recipient are not related, and the price which you are paying is the only consideration or it is the sole consideration. Sir, can you please repeat? What is value of supply? Transaction value. So the price at which I have sold the goods to you, that will be taken as value of supply if the supplier as well as the recipient is not related and the price which you are paying is the sole consideration or it is the only consideration. Now to that value of supply, for example, I sold goods to Karina Sarees for 1 lakh rupees. Now this is my transaction value. But to make the sale to Karina, I also incurred transportation charges, insurance charges, packing charges. Whether all these things also will be added in value of supply? Whether all these items should be added in value of supply? Lawmaker says yes. Section 15.2, inclusions in value of supply. What are the different things which you are required to include while computing value of supply, sir? Lawmaker says you are required to include all the different types of taxes except the taxes under GST law if they are charged separately. What should you include? All the different types of taxes which are there except the taxes under GST law. So for making the supply of goods, are you paying any tax apart from GST? Are you paying custom duty? Are you paying excise duty? Are you paying service tax? Add all those taxes except the taxes under GST law. So inclusions in value of supply, all taxes except the taxes under GST law if they are charged separately. If you are charging for the taxes, if you have charged what, sir? Separately, they will all be taken into consideration. Any payment made by the recipient with the supplier had to incur. Now there was an expenses which was, I am supplying goods to you. So there was an expenses which was supposed to be incurred by me as a supplier, but you have incurred that expenses. Lawmaker says, oh, this is wrong. This is wrong. So lawmaker says this also is required to be added in value of supply. Any payment made by the recipient which the supplier had incurred. So whatever expenses you have incurred on my behalf, that will be added in value of supply. Incidental expenses for anything done for making the supply. So for supplying the goods to you, whatever other type of incidental expenses I am incurring for making the supply of goods to you, whatever other incidental expenses I have incurred for making this supply. For example, this transportation charges are incidental expenses for making the goods supply to you, or the insurance charges or packing charges, they are all incidental expenses for making the supply to. They also will be added in value of supply. Then interest penalty late fee for delay in payment of consideration. What is this interest penalty late fee for delay in payment of consideration? Lawmaker says that is also required to be added in value of supply. For example, I sold the goods to Karina Sarees and I told Karina, please make the payment to me within 30 days. If you don't make the payment to me in 30 days, I will collect a penalty of 10,000 rupees from you. Now two options are there. Karina can pay me in 30 days or she may not pay me in 30 days. If Karina pays me in 30 days, value of supply will be what, sir? 1 lakh rupees. If she does not pay the money to me in 30 days, value of supply will be 1,10,000 rupees. So here what is important? Whether the payment is made within 30 days or not. If the payment is made within 30 days, value of supply will be date of payment. Value of supply will be only the whatever amount was agreed. If it is not made within 30 days, then I'll get extra interest of 10,000 rupees. Next item which is required to be added in value of supply is subsidy directly linked to the price of the product, excluding the subsidy given by central government or state government. So for making a particular kind of supply, is there any subsidy involved? Meaning, for example, I am supplying goods to you. For the goods which is supplied by me to you, government is giving subsidy of 100 rupees to me. Because government is giving subsidy of 100 rupees to me, the goods, instead of supplying it for 500 rupees, I am supplying it to you for 400 rupees. Okay. Now lawmaker says this subsidy which is there, no 100 rupees, it is directly linked to the price. Therefore, it should be added in value of supply. But wait, Who is giving the subsidy? Sir, central government and state government is giving the subsidy. Then it is not required to be added in value of supply. Value of supply will be whatever I am collecting from you. No, sir, but what if the subsidy is given by any other person other than central government and state government? Then that subsidy will be added and the total price will be 500 rupees. Then section 15 subsection 3, exclusions from value of supply. Sir, what is this exclusions from value of supply? Are there anything which are required to be excluded while computing value of supply? Lawmaker says yes, there are few things which you have to exclude when you are computing value of supply. What are those things, sir? Only one thing, which is discount. Whenever you are computing value of supply, if you have given any discount to your customer, please reduce the discount from computing value of supply. Now discount can be of two types. This discount can be given before making the supply or at the time of making the supply, or this discount can be given after the supply has been made. If the discount is given before the supply has been made, for example, you come to me, you purchase a sari, correct? So at the time when you are purchasing the sari, I give you a discount of 100 rupees. 900 rupees sari is there, I give you a discount of 100 rupees. So how much is the value of supply now? 800 rupees. So if the discount is given at the time of supply, exclude it if it is shown separately on the invoice. Separately, that whenever I am giving an invoice, 900 minus discount of 100 rupees, I should show it separately. However, if the discount is given after the supply has been made, I have told you that if you pay me the money within 30 days, I'll give you a discount of 5%. Now what is happening, sir? Is the discount given by me to you at the time when I supplied the goods to you? No. I will give this discount to you on a future date when you make the payment to me within the due date, correct? So this is a case of discount where the discount is given after the supply has been made. Lawmaker says if there is any discount which is given after the supply has been made, then exclude that discount if three conditions are getting satisfied. Which are these three conditions? That discount should be agreed between the supplier and recipient. Both supplier and recipient should agree for that discount. That discount should be linked to a specific invoice. Whatever discount I am giving, no, that discount should not be a general discount. It should be linked to a specific invoice. It should be linked to a specific invoice, and whatever ITC is there for the discount component, whatever input tax credit is there for the discount component, that should be reversed by the recipient. So as a recipient, I should reverse what, sir? I should reverse the discount, input tax credit on the discount component. Because when I would have given the actual invoice to you, I would have given invoice for the full value. Now you would have taken input tax credit on the full value. Now you will have to reverse the input tax rate on the discount amount alone. Section 15.4 talks about Section 15 subsection 4 talks about value of supply of where you cannot determine the value of supply as per section 15.1. What is this point telling, sir? If the value of supply cannot be determined as per section 15 subsection 1, then you will have to determine the value of supply as per rules of valuation. So what are the rules telling? We will see the rules now. Now before going to the rules, let us solve a question on value of supply. Machine India Limited is engaged in manufacturing machines. It supplied one machine to ZN company with following details. Price of the machine is 8,50,000. Installation and erection charges 30,000. Packing charges 2,50,000. Design engineering charges 4,000. Pre-delivery inspection charges 1,000. Other information, cash discount of 2% is given on the price of machinery. Bought out accessories, meaning bought out accessories means what, sir? Whatever expenses I was supposed to incur is incurred by you. Bought out accessories worth rupees 8,000 is supplied for free with the machinery, for supply of this machinery. Machine is supplied with a durable and returnable packing worth rupees 50,000. Now please note, normally all the incidental expenses is required to be added in value of supply. But if that incidental expenses is a durable and returnable packing, If that incidental expenses is what, sir? If that incidental expenses is a durable and returnable packing, meaning this packing charges which you are incurring is a durable item. Durable means the life of this packing is high and you are required to return this packing cost, whatever this packing material is there. So this is not required to be added in value of supply. So now let us see. First, 8,50,000 should it be added? This is my transaction value. This is my transaction value. To this, will I add installation charges? Yes, I will add installation charges. Will I add packing charges? Yes, I will add packing charges because they are all incidental expenses. Then, will I add design and engineering charges? Yes, I will add design and engineering charges. Will I add pre-delivery inspection charges? Yes, I will add pre-delivery inspection charges also. So I will add all these items. Then will I add this discount amount? Can I subtract discount amount of 2% on the price? Yes, sir, I can supply the discount because it is agreed between the supplier and recipient. So can I subtract this 2% discount, sir? Yes, 8,50,000 into 2%, whatever amount is there, I'll subtract that. And bought out accessory, recipient incurred expenses on behalf of supplier, that also will be added in value of supply. So here 8,50,000, add all the expenses which are required to be added except the durable and returnable packing. Then subtract the discount amount, you will get your value of supply. Now section 15. Section 15 we discussed just now. Now we'll see valuation rules. Rules for determining value of supply. We will see what, sir? What are the different rules which are applicable for determining the value of supply? If I want to determine the value of supply, then is there any rules applicable, sir? Lawmaker says yes, there are some rules which you have to follow. Section 15, if section 15.1 you cannot determine the value of supply as per section 15.1, you will have to go to rules. Rule number 27 to rule number 31 are the different rules which talks about value. Rule number 27 to rule number 35 are the different rules which talks about value of supply. Now we'll discuss one by one all the rules. Rule number 27. When will I apply rule number 27, sir? You are going to apply rule number 27 in case of determining value of supply of goods or services where the consideration is not wholly in money. Meaning, if I make a supply to you and for that supply, if there is a consideration involved and if that consideration is not completely, not wholly in money. Sir, repeat once again. If I make a supply to you, and for that supply, if there is a consideration involved, meaning what, sir? If I make a supply of goods to you and for that supply, if I am taking some money from you and if that money is not, if that consideration which is taken by me is not wholly or fully in money, then it will be treated as rule number 27. Then which rule will be applicable, sir? Rule number 27. Now for example, I have this mobile phone. This mobile phone is worth rupees 25 lakhs. Now I am purchasing this mobile phone by giving 20,000 rupees and cash of 6,000 rupees. And how much, sir? Extra money of 6,000 rupees or extra money of 3,000 rupees. Meaning lawmaker says in this case, there is a mobile phone worth rupees 25,000. How am I purchasing this mobile phone, sir? I am purchasing this mobile phone by taking 20,000 rupees, cash of 20,000 rupees and a old phone I am giving my old phone. Now let us ignore what is the value of this old phone. I am purchasing a mobile phone worth 25,000 for which I have paid a money of 20,000 rupees and a old phone. Can I say here the consideration is not wholly in money? In money, the consideration amount is 20,000 and balance consideration is given in the form of old phone. Balance consideration is given in which form, sir? Balance consideration is given in the form of old phone. Lawmaker says in this case, here the consideration is not wholly in money. In this case, the value of supply will be open market value. The value of supply will be what, sir? Open market value. What do you mean by this? Value of supply will be open market value, meaning whichever phone you are purchasing, what is the market value of that phone? Now see, you have given 20,000 plus old phone. Now because you have given 20,000 plus old phone, the consideration is not wholly in money. I will see what is the open market value of this phone. Open market value of this phone is 25,000. Value of supply will be how much, sir? 25,000 rupees. Next. Sir, what if open market value is not available, sir? There may be a possibility that this is one piece phone only, which which is not available in the open market at all. In such cases, lawmaker says if the open market value is not available, value of supply will be money plus fair market value of other consideration which is paid by you. Money plus fair market value of other consideration which is paid by you. Meaning, if the open market value is not available, I will take the money which is paid by you, and along with the money, what will I take, sir? I will take that other consideration which is paid by you. What is the other consideration paid by you? Mobile phone. For that, what is the how much is the value of this mobile phone? What is the fair value of this mobile phone? I will take that. I will take money plus fair value of other consideration. Point number C. If the value of supply cannot be determined under clause B and clause C, meaning if you don't get open market value, if you don't have the information of fair value of other consideration also, in such cases, value of supply will be value of like kind and quality. Sir, I didn't get this point, sir. Meaning, the supply which I am making for that product, if open market value is not available, then I will determine the value as per what, sir? If open market value is not available, I will take the value to be money plus fair value of other consideration. Sir, what if that that second amount also, fair value of other consideration, is also not available? Then they say no problem. You see the value of like kind and quality. Is there any other product like this having same quality, sir? Then take the value of that particular product, value of like kind and quality. Sir, what if open market value is not there? What if money plus fair value is not there? What if value of like kind and quality is also not there? Then lawmaker says apply rule number 30 and 31 in that order. Apply rule number 30 first and then 31. Apply rule number 30 and 31 in that order. In which order? In this order, 30 and 31. Meaning apply the rule number 30 to determine the value. So what if I am not able to find the value as per rule number 30? Then apply rule number 31. Then you will get your final answer. What is rule number 30 and 31 talking about, sir? Rule number 30 talks about cost based valuation. Rule number 30 talks about what, sir? Cost based valuation. Here they say find the cost of that product, add 10% profit to it, that will give you value. In simple words, whatever is the cost of purchase or cost of production or cost of providing services, add 10% to that, that will give you the value of supply. Now, what is rule number 31 telling? If you are not able to find the value as per rule number 30, you will have to apply rule number 31. What is rule number 31 telling? It is residual cases. Residual cases for determination of value of supply for goods or services or both, where the value of supply cannot be determined by applying rule number 27 to rule number 30, then the value of supply shall be determined using reasonable means which are consistent with the principles and general provisions of section 15 and other provisions of this chapter. Meaning, if you are not able to determine the value of supply as per any of the above rules, you will follow 31, and 31 says please apply the principles and policies given in section 15 reasonably and consistently. Apply the principles and policies given in section 15 and determine the value. Now, sir, when is this rule number 28 applicable, sir? Rule number 28 is applicable when you are making the supply of goods or services to your related person or a distinct person referred to in section 25.4 or 25.5. Now, whenever you make a supply to your related person, I will not take whatever price you are charging to your relative as your value of supply. So, whenever you make a supply to a related person, I will take the value to be equal to open market value. For example, I gave sari worth rupees 1 lakh to my relative for free. One of my relative came to Priya Sarees, and therefore I gave a sari worth rupees 1 lakh to my relative for free. In this case, what is the value of supply? Lawmaker says check the open market value of that sari. So the open market value of that sari is 1 lakh rupees. Value of supply will be 1 lakh rupees. Sir, what if open market value is not available at all? What if that particular sari is not available in the open market? Lawmaker says no problem. If open market value is not available, is there any other similar kind of sari which is like this having a same quality? Yes, sir. Take that value. Meaning, if open market value is not available, the value of supply will be value of like, kind and quality. If open market value is not there, I will take value of like, kind and quality. Sir, what if value of like, kind and quality is also not available? Sir, what if value of like, kind and quality is also not available? If value of like, kind and quality is not also not available, lawmaker says apply rule number 30 and 31 in that order. In simple words, if you are making a supply to a related person, I'll take open market value as value of supply. If open market value is not there, value of like, kind and quality. Is there any other scenario just like this, similar to this, having same quality? Yes, take the value of that. So what if both are not there? Then please apply the provisions of section 30, that is cost plus 10%, and then apply the provisions of section 31 to determine the value. Apply the provisions of section 30 and 31 to determine the value. Now, there are two provisos for this particular section. For this rule, there are two provisos which says, provided that where the goods are, one second, one call I am getting. Okay, so yeah, what we will be discussing, rule number 28. So normally rule number 28 says what, sir? If I make any supply to my related person, then the value of supply will be open market value. Open market value is not there, value of like, kind and quality. If value of like, kind and quality is also not there, I will apply the rule number 30 and rule number 31 in that order to find the value. Now it has two provisos. What are these two provisos telling? See, normally I will take the value of supply to be open market value. However, I will give an option to the supplier. What option will you give to the supplier? I will give an option to the supplier to take the value of supply to be equal to 90% of the amount charged by the recipient from his customer. What do you mean by this, sir? Say for example, I supplied I'll write it again maybe. For example, I supplied sari to one of my relative. Okay, this sari which I supplied was worth rupees 1 lakh. Now my relative is further supplying this sari to one of that person's customer. Okay, my relative is further supplying this sari to one of the customer of the relative. Now that relative is supplying for how much, sir? Let us say he's supplying for 2 lakh rupees. Now I have an option to take value of supply to be equal to open market value, or if I don't want to take open market value, I have an option to take 90% of what he is charging from his customer. How much he is charging from the customer? 2 lakh rupees. 90% of 2 lakh is how much, sir? 1.8 lakhs. So I have an option to charge what, sir? I have an option to charge 90% of the amount charged by the customer from his relative. Now, next what, sir? Provided that where the recipient is eligible for full input tax credit, then the value declared in the invoice will only be taken as open market value. See, normally what do you mean by open market value? Open market value means the value at which this product is available in the open market. Correct? No? What is open market value? It is the price at which this product is available in the open market. Now, what is this provision telling, sir? If the person to whom you are supplying the goods, if that person is eligible for full input tax credit, then whatever value you have shown in the invoice, that only will be taken as open market value. For example, Priya Sarees Chennai is making a supply to Priya Sarees Bangalore. Now the value, I supplied sarees worth rupees 10 lakhs. I supplied sarees worth rupees 10 lakhs, but I gave an invoice to Bangalore unit only for 1000 rupees. Correct, not correct? So 10 lakh rupees is the open market value, 1000 rupees is the invoice value. Now lawmaker says whatever amount you have showed on the invoice, that only will be taken as open market value. If this invoice value will only be taken as open market value if Priya Sarees Bangalore being a recipient, that recipient is eligible for full input tax credit. So instead of taking open market value of 10 lakh, you can take open market value to be equal to 1000 rupees. This is applicable only if the recipient is eligible for full input tax credit. Okay. Next, section 29. Section 29 is applicable where you are making a supply of goods to an agent. So if you make a supply of goods to an agent, agent is further supplying those goods. Correct. In such cases, what is applicable, sir? In such cases, rule number 29 is applicable. What is rule number 29 telling? Same. Value of supply will be open market value. See, basically, if you are not able to find the value of supply as per section 15, first preference will be given to what, sir? Whatever product you have supplied, no, for that product, what is the open market value? Whatever product you are supplying, what is the open market value for that particular product? Correct. Here also the same point is there. If you make a supply to your agent, if you make a supply to your agent, the value of supply will be the open market value of the product which you have supplied to your agent. Sir, what if the open market value is not there, sir? What if the open market value is not available, sir? Lawmaker says no problem. If the open market value of that product is not available, then you have an option to take 90% of what that agent is charging from the customer. See, I have supplied the goods free of cost to my agent. Okay, I have supplied the goods free of cost to my agent. Now, open market value of that product is not available. Open market value is not there. Lawmaker says no problem. Check how much is the agent charging from his customer. What is the money which is the agent charging from his customer? You take 90% of that. That will be taken as value of supply. Now, please note, this is just an option given to supplier. Second point is just an option given to supplier. Sir, what if I am not able to find the value as per both of the points, sir? Open market value also I don't have. 90% of the whatever amount he is charging from the customer also I don't have. In such case, very simple. Apply rule number 30 and 31 in that order. Meaning, if you are not able to find the value of supply as per any of the above rules, then go to rule number 30. If you are not able to find as per rule number 30, also go to rule number 31. Next. Value of supply in case of lottery, betting and gambling, horse racing, etc. Now, you are purchasing a lottery ticket. Correct? You are purchasing a lottery ticket. Now, the lottery ticket which you are purchasing, for example, you purchased a lottery ticket for 1000 rupees. How much will you pay for this? How much will you pay for this? Will you pay for this 1000 rupees or 1000 plus GST? Lawmaker says this lottery ticket, whatever you are purchasing, no, this amount is treated as inclusive of GST. This amount is treated as what, sir? Inclusive of GST. So because it is treated as inclusive of GST, this will by itself, it has the amount of GST included in that. So remove the GST, whatever amount you get after removing GST, that will be taken as value of supply. How do I remove the GST? What is the rate of GST, sir? For lottery, betting and gambling activities, the GST rate is 28%. For lottery, betting and gambling, what is the GST rate? 28%. So lawmaker says, if you value of supply for lottery shall be the face value of lottery ticket or the price which is the prize money which you are going to get by purchasing this lottery, whichever is higher, into 100 divided by 128. Sir, why sir 100 divided by 128? Because we want the value before GST and value which, let us say, I sold a goods to you for 100 rupees and the GST rate for that product is 12 rupees. So how much is be the total price? 112. So if I want the value before GST, what will I have to do? 100 divided by 112. Multiply any amount by 100 divided by 112 if the tax rate is 12%. So here the GST rate is what, sir? 28%. Meaning there is a product worth rupees 100. On that GST I will apply how much, sir? 28%. Total price will become 128. So if the value is 100 rupees, then the total price will come to 128. If the value is 100 rupees, the total price comes to 128. If the value is 1000 rupees, what will be the price? What will be the price? So that is what they are asking over here. For that, what will I do, sir? 100 into 1000, that is the value for which I want the price, which is inclusive of GST, into 100 divided by 128, 781.25 rupees is the value of supply which I am going to take. Okay, in case of lottery, betting and gambling, in case of lottery, this is the concept which you are going to see. In case of betting and gambling, lawmaker says whatever amount you are paying as a bet money, that entire amount will be taken as value of supply. Next, rule number 32. Rule number 32 is important in value of supply rules. Rule number 32, determination of value of supply in some special circumstances. Determination of value of supply in certain special circumstances. Rule number 32 is an optional rule. Sir, should I compulsorily follow rule number 32? Answer is no. Lawmaker says rule number 32 is an optional rule. If you feel like following rule number 32, please follow rule number 32. If you don't want to follow rule number 32, you can definitely go back to section 15 and follow what is given in section 15. Now, rule number 32 sub rule 1 says that rule number 32 is optional rule. Rule number 32 2 is applicable if you are a forex dealer or a money changer. If you are a foreign exchange dealer or if you are a money changer, then only rule number 32 2 is applicable. Now, option number 1. What is option number 1? Now for a money changer under rule number 32 only they have two options. Option 1 and option 2. We'll see option number 1 first. Now, lawmaker says a money changer, whenever he is exchanging a currency, which type of currency is he exchanging? The currency exchanged involves Indian rupees, or the currency which he is exchanging does not involve Indian rupees. Sir, what do you mean by this? I am giving dollars to you and taking rupees from you. So can I say the currency which I am exchanging involves Indian rupees? I am giving rupees to you and taking from you, say, euros. Can I say the currency which I am exchanging involves Indian rupees? Case number 2, I am giving dollars and taking euros. So here the currency which I am exchanging does not involve Indian rupees. So here what lawmaker says, sir? Option number 1, check whether the currency which you are exchanging involves Indian rupees. If it involves Indian rupees, check whether RBI rate has been specified for that particular currency. Whether they have given you what is the rate of Reserve Bank of India for that particular currency. If the currency which you are exchanging involves Indian rupees, and if the RBI, check whether RBI rate has been specified or not. If the currency which you are exchanging involves Indian rupees, and if RBI rate is also available, value of supply will be whatever rate RBI is charging, whatever rate exchange rate that exchange the person who is charging, exchange rate which is charged by that person from whom you are exchanging the currency, take the difference, take the positive value of the difference. Whatever rate is given by Reserve Bank of India, whatever rate is charged by the forex dealer, multiplied by number of units which are exchanged by you. For example, I want to convert $1,000 into rupees. RBI has told $1 is equal to 85 rupees, and exchange rate, the person who is converting the money, he is giving me 84.5 rupees. Now what is happening, sir? From 85, whatever RBI rate is there, I am going to subtract whatever exchange rate is charged by him, multiplied by 1000 rupees. That amount will be treated as 500 rupees. That is my commission. That is treated as value of supply. Now, what if, sir, RBI reference rate is not available? Meaning, the currency which I am exchanging does not have RBI rate at all. Meaning RBI does not give the rate at all. See, normally RBI gives the rate only for 4 currency: dollar, pounds, euros and yen. So if I am exchanging Russian currency, if I am exchanging Dubai currency, I don't have a rate at all. So lawmaker says in such cases, RBI reference rate, if it is not available, then take 1% of rupee value of currency exchange. Please note, if I want to go to Dubai, I will need Dubai currency, no? Correct, no? So RBI does not give the reference rate for Dubai currency, but I can definitely go and exchange Dubai currency, right? So lawmaker says in such cases, whatever amount you have exchanged, check the rupee value of that. So whether if you have given rupees and purchased Dubai currency, then how much rupees have you given? If you have given rupees and got dirhams, how much rupees have you given? You check that. Take 1% of that rupee exchange by you. So for example, I have exchanged 1 lakh euros for 98 rupees. So how much have I got, sir? I have got 99 lakh 80,000 rupees into 1% will be 9,800 rupees will be my value of supply. What if the currency which I am exchanging does not have Indian rupees at all? I am giving dollars, taking euros. Lawmaker says very simple. Check what is the rupee value of currency bought. Check what is the rupee value of currency sold. Meaning whatever currency you are buying, convert that into rupees and check what is the rupee value. Whatever currency you are selling, convert that into rupees and check the rupee value. And take 1% of that. 1% of what, sir? Whichever is less. First, convert them both the currency which is bought and sold by you into rupees. For example, I gave $1,000 and got 780 euros. So convert $1,000 into rupees, convert 780 euros into rupees. Now check who is less. Convert $1,000 into rupees and 780 euros into rupees. Take whichever is less into 1% will be our value of supply. Whatever is less into 1% will be taken as value of supply. Now that was one option which is available to a forex dealer or a money changer for finding the value. There is one more option available to a forex dealer or a money changer. What is that one more option available to them, sir? Slab option. What is the slab rate option, sir, or slab rate system? Meaning up to certain amount, this is the limit. After that, this is the amount. After that, this is the limit. Now it depends on how much gross currency you have exchanged. Slab rate system is there. So if you have exchanged currency worth rupees up to 1 lakh rupees, if you are exchanging up to 1 lakh rupees, so you can exchange 10,000 rupees, or you can exchange 50,000 rupees, or 75,000 rupees, or 1 lakh rupees, etc. If you are exchanging up to 1 lakh rupees, then value of supply will be 1% of currency exchange or 250 rupees, whichever is higher. Sir, repeat. If the currency which is exchanged by you is up to 1 lakh rupees, whatever currency you have exchanged into 1% or 250 rupees, whichever is higher, will be taken as value of supply. Sir, meaning, sir, for example, I have exchanged 50,000 rupees. 50,000 ka 1% is how much? 500 rupees. 50,000 ka 1% is 500 rupees, or I'll take 250 rupees, whichever is higher. Who is higher? 500 rupees is higher, value of supply is 500 rupees. Let us say I have exchanged somewhere between more than 1 lakh up to 10 lakhs. I have exchanged 5 lakh rupees. I have exchanged 9 lakh rupees. I have exchanged 10 lakh rupees. Then lawmaker says, so for 1 lakh rupees, I will take 1,000 rupees. How, sir, 1,000 rupees? 1 lakh into 1% is how much? 1,000. So for up to 1 lakhs, I'll take 1,000 rupees. For that extra amount which is there, extra amount. For that, I will take 0.5% of gross currency exchange in excess of 1 lakh rupees. So whatever extra amount is there, of that I will take 0.5%. For example, I am exchanging 5 lakh rupees. So for first 1 lakh, I will take how much, sir? 1,000 rupees. For that additional 4 lakhs, I will take 4 lakhs into 0.5%, which will come to 2,000 rupees. How much is my total value, sir? 3,000 rupees is the total value. Similarly, if I am exchanging 9 lakh rupees, for first 1 lakh, 1,000, and balance 8 lakh, 4,000 rupees, which is nothing but 8 lakh into 0.5%. So total is 5,000 rupees. Sir, what if I exchange more than 10 lakhs, sir? Oh, what if I exchange more than 10 lakhs? Then lawmaker says, for up to 10 lakh, the amount will come to 5,500 rupees. Sir, how, sir? For example, see over here. 10 lakh rupees if I am exchanging, for first 1 lakh it is 1,000, and for the balance amount it is 4,500 rupees. So total will come to 5,500 rupees. So that for that 5,500 rupees, add 0.1%, meaning for whatever amount you have exchanged in excess of 10 lakh rupees, for that you take 0.1% of gross currency exchange, or rupees 60 lakhs, whichever is lower, or rupees 60,000, sorry, not 60 lakhs, or rupees 60,000, whichever is lower, will be taken as value of supply. For example, I have exchanged 15 lakhs. For first 10 lakhs, how much will I take? 5,500. Now for a balance 5 lakh rupees, I will take 5 lakhs into 0.1%. So total is how much? 6,000. 6,000 will be compared with 60,000 and take whichever is less. So if I am exchanging 50 lakh rupees, for first 10 lakhs 5,500, and balance 40 lakhs it is 4,000, 9,500. Compare that with 60,000, whichever is less, which is 9,500 is the answer. So this is applicable in case you are dealing with what, sir? If you are dealing in case of forex dealer or a money changer. If you are a forex dealer or a money changer, so we saw both the options available to them. Next, what if you are a travel agent? What travel agent? Air travel agent. Not any type of travel agent, just air travel agent. If you are a air travel agent, for you this provision is applicable. Rule number 32, sub rule 3 is applicable for an air travel agent. Please note, air travel agent, there can be bus travel agent, like we have red bus, that is bus travel agent. Correct? No. Here we are talking about what, sir? Air travel agent. So if you are an air travel agent, then you can do two types of booking. One is domestic booking, or you can do international booking. If you are an air travel agent, you may do two types of booking. Which are these two types of booking, sir? Either you may be doing domestic booking, or you may be doing international booking. So if you are an air travel agent and if you are doing domestic booking, value of supply will be whatever base fare of the travel is there into 5%. If you are a air travel agent and if you are doing international booking, value of supply will be whatever base fare of the travel is there into 10%. Sir, repeat. See, normally from Chennai to Delhi, if I want to go, they may charge me 5,600 rupees as aeroplane ticket. Now, this airfare will have different components. Now, among this different component, I should take only base fare. Base fare into 5% will be taken as my value of supply. If it is a domestic travel, if it is an international travel, whatever base fare is there into 10% will be the value of supply. Very simple, very easy. Sir, what if I am a life insurance businessman? See, rule number 33 sub rule 4 talks about if a person is in the life insurance business. Now what I'll do is I'll talk about insurance business in general. Insurance business can be divided into two categories. One is called as general insurance, another one is called as life insurance. General insurance means what, sir? Insurance with respect to your vehicle, goods insurance, stock insurance, they will all fall under general insurance. In case of general insurance, the value of supply will be whatever premium you are paying is the value of supply. Entire amount of premium which is paid by you for that particular product, that is taken as value of supply. However, in case of life insurance, please note, for insurance, no, you will have to pay something called as premium. You will have to pay something called as premium. Let us say this is a vehicle insurance which I have taken. Okay, for this vehicle insurance, I am paying a premium of how much, sir? 2,409 rupees, and this entire amount of 2,405 will be value of supply. On that, GST will be levied and total amount will be paid by me. So in case of general insurance, what is the value of supply? Is the total amount of premium which is paid by you for that particular product. However, this provision 32(4) talks about life insurance business. What is the value of supply in case of life insurance business? Little important. Now, life insurance business which is there, insurance business, in that life insurance business is little important because 32(4) talks about life insurance business. It does not talk about general insurance business. Now, life insurance policies which are there, no, there can be different types of policies. In life insurance business, the policies which are involved or the policies which are there can be can be different types of policies. It can be saving policy or it can be risk policy. And in saving policy, it can be investment policy or it can be single premium policy. So what is the difference between saving policy and risk policy? Saving policy means you are investing the money for your future purpose. Meaning, in case of saving policy, also called as endowment policies, what happens is you pay the premium for your policy term. You take a life insurance policy. Let us say you take a policy for 20 years and the sum assured is 10 lakh rupees. So if something happens to you within a period of in the sense, if something happens to the policy holder within the period of that 10 years, 20 years, then the nominee will get that amount of 10 lakh rupees. But if nothing happens to that policy holder in that period of 20 years, then the policy holder only will get that amount. Now what lawmakers are telling over here, it will be treated as a saving policy. What will be treated as saving policy, sir? This policy which I was talking about is called as saving policy. Now what is a risk policy? Risk policy is your term insurance which people are taking. What is this risk policy? What happens in this risk policy, sir? Here what happens is, if you take a particular policy, if a person dies within that period of policy, okay, I take the policy for 15 years, 20 years, for next 30 years, 40 years. If something happens to me in next 30 years, then my nominees will get that entire amount of whatever term, whatever the policy amount is there. Now here, the amount will be given only in case of death. In case of risk policy, amount will be given only in the case of death. If I don't die during that period, if that policy holder is not dying during that period, and if he survives, then nothing will be given, neither to the policy holder nor the family members. No one will receive anything. So there are two types of policy. If it is a risk policy, lawmaker says, because nothing is going to be given to you, whatever premium you are paying for that risk policy, entire amount will be taken as value of supply. In case of saving policy, because the amount which you are going to give as premium to them, that will be put for, that will be saved and that will be invested, for which you are going to get some return. In case of investment policy, it can be single premium policy or normal investment policy. If it is single premium policy, value of supply will be 10% of whatever single premium you are paying. Sir, if it is not a single premium policy, single premium policy means what, sir? You are going to pay the premium only once. Throughout the life of the policy, you are going to pay the premium only once, then it is a single premium policy. For single premium policy, the value of supply will be whatever single premium is charged by the company into 10%. Whatever single premium is charged by the company into 10% will be taken as value of supply. But if it is not a single premium policy, if it is a investment policy, value of supply will be what, sir? If it is not a single premium policy, if it is a investment policy, value of supply will be depending upon whether the company has told you how much amount they are allocating towards investment, or they have not intimated you what is the amount which they are allocating towards investment. For example, you are taking a policy. For the policy, you are paying a premium of what, sir? You are taking a policy, you are paying a premium of 10,000 rupees. Now the company says 80% of the money will be put in investment. So can I say the company has intimated you how much amount they are going to put it towards investment? In such cases, value of supply will be whatever premium the company is charging from you minus amount invested by the company. Whatever premium the company is charging minus whatever amount is invested by the company in that particular premium amount, how much ever is invested. For example, in our case, 10,000 was the premium which is paid by me. Company invested 8,000 rupees. Value of supply will be 2,000 rupees. Sir, what if company does not tell me how much they are going to invest? I have just purchased the policy. I am paying a premium of 10,000 rupees. Sir, company did not intimate at all how much they are going to allocate towards investment. Lawmaker says, in such cases, no problem. If the company is not intimating the amount which is they are allocating for the investment purpose, then 25% of the premium charge will be taken as value of supply for the first year of policy. If it is a new policy, for the first year they will take how much, sir? 25% of the premium paid by you, and for all the subsequent year they are going to take 12.5% of premium charged. Next, so this is in case of life insurance business. Next, if you are doing business of second hand goods, now there are two types of people who does business of second hand goods. Either I am a dealer of second hand goods. On the roadside you would have seen there are a lot of people who deal in second hand cars, second hand bikes, etc. Or like we have online car Deco, cars 24, etc. Now they are all dealers of second hand goods. Or you may be a person who is falling under the category of a bank. What happens in case a bank? Bank is not a dealer of second hand goods. If I have taken any car on loan, then then I may be a person who has not paid the installment. If I am a person who is not paid the invoice installment, then what will happen, sir? The bank will repossess the car from me. I have the possession of the car. I have taken the car on loan, and I am not paying the installment amount. If I don't pay the installment amount, the possession of the car will be taken from me to them. So the car will be taken by the bank people. So in such cases, what is the value of supply? Now, in case of second-hand goods, value of supply is very simple. Value of supply is sale price of the car minus purchase price of the car. Now here the important thing is calculation of purchase price. Whenever it is a repossession, calculation of purchase price is important. Now please note, you can either be a dealer of second hand goods, meaning my main business is only buying and selling second hand goods. For me, value of supply will be the sale price of the car minus the purchase of price of the car. If I am a dealer of second hand goods, my value of supply will be how much, sir? Sale price minus purchase price. Sir, what if I am not a dealer of second hand goods? If you are not a dealer of second hand goods, it may be a case of repossession of second hand goods. If it is a case of repossession, then also value of supply will be sale price minus purchase price. But here the purchase price is required to be calculated. Please note, if I am a dealer, for example, you have your bike, you want to sell your bike, you came to me, you gave your bike to me at 80,000 rupees. Now this bike I am selling it to someone for 1 lakh rupees. What is value of supply? My sale price, which is 1 lakh, minus my purchase price, which is 80,000. 20,000 is value of supply. Case number 2. I am a bank who has given you a loan for purchase of a car. You have purchased a car. Now you are supposed to pay me the installment. You have not paid the installment to me. Therefore, I have taken the car from you. Now I am going to sell this car in the open market. I have sold this car for some amount. 5 lakh rupees I have sold. 10 lakh rupees car I have sold in the market for 5 lakh rupees. Now this is the sale price. What is the purchase price for this car, sir? Will it be taken as original purchase price? No. Here, when I am taking purchase price, I will have to depreciate this car for that period when it was used by you. So what will be the value of supply over here? Value of supply will be selling price minus purchase price, wherein the purchase price will be calculated accordingly. I will take the actual cost of the vehicle, actual cost at which you purchase the vehicle, actually purchase the vehicle. From that actual cost, I will subtract 5% per quarter or part thereof from the date of purchase till the date of repossession. Now whatever is left over, no, that will be purchase price. Meaning, take the actual purchase price of the car, give depreciation at what percent? At 5% for every quarter or part of quarter, give depreciation of 5%. This depreciation you should give from the date when you purchase the car till the date it was repossessed. You give the depreciation, you will get your purchase price. So from the sale price of the car, subtract the purchase price, you will get your value of supply. Section 32, rule number 32 is done. 32, then we have rule number 33. Rule number 33 is also important from your theory perspective. This talks about pure agent. See, sometimes what may happen is, you may, at the time when you are providing your services, you may purchase something on behalf of your recipient. Okay, to whomever you are supplying the services, on his behalf you may purchase few things. For those things which you have purchased, no, that is not actually something belonging to you, but you have purchased those things because it was required to be purchased for providing the services. For example, I'll tell you a simple example. Say I am having a bike. Now my bike tire got punctured. Therefore, I gave this bike to a person to repair the puncture. Now this person, okay, and I gave it to this person and I went to my office. Now this person called me and he told me, sir, for repairing the puncture I'll take 100 rupees. Now when I went to office, this person called me, he told me, sir, actually I was repairing the puncture and I found that your tire's tube is there. No sir, that tube is completely destroyed, sir. I will have to replace the tube only, sir. I said, okay, then replace the tube. Sir, actually I am not a dealer of tubes, sir. I only do puncture repairing work, sir. If you say, I will go to the nearby shop and purchase the tube and replace the tube. I said, okay. So now what is happening over here? Now he is purchasing a product. Why is he purchasing the product? For providing his repair services, he is buying a product. Is the product purchased by him for his own use? No, he is purchasing this product for my use. Lawmaker says, now what is the value of supply? Will the value of supply be whatever amount he is charging, or will the value of supply will also include the price of this tube, sir? Lawmaker says, this tube he purchased on my behalf. Correct? No. This tube is not for providing his services. His services are only puncture services. This tube he has purchased for providing the services, correct? So this tube price will not be added in calculating value of supply. Case number two. Case number two, example number two. I'm an interior designer. You told me to design your house. Okay. So my work will involve only designing your house, meaning only service component will be there. But what happened was, I went to one exhibition. I found a very beautiful painting. So I called you and told you, sir, there is a very beautiful painting which I feel will look very good at your house. So if you are okay, I will take this painting for your house, sir. You said, sir, please go ahead, sir. Whatever feels good, you please take the painting. Now, please note, my job is only to give you interior designing services. I have purchased a painting for your purpose. Correct? No. So, should I include the painting cost in my service, sir? No. This painting cost will be directly recovered by me from you. This will not be included in the services which I am providing you, which is in the interior designing services. Value of supply in case of pure agent. Notwithstanding to anything contained in the provisions of this chapter, expenditure or cost incurred by a supplier as a pure agent of the recipient should be excluded from value of supply. So whatever supply I am making you as a pure agent, that supply will be excluded from value of supply. That supply will be excluded from value of supply if what, sir? Whatever supply I am making to you as a pure agent, that supply will be excluded from value of supply. When will it be excluded? If these conditions are getting satisfied. What are the conditions, sir? The supplier should act as a pure agent of the recipient at the time when he is making the payment to the third party. So when that puncture repair fellow is making the payment for purchase of tube, he should act as my pure agent. Then the payment should be made by pure agent on behalf of the recipient, should be indicated separately on the invoice. Whatever amount he has paid to the tube wala, that should be separately shown in the invoice which is given by him to me. And the supplies procured by the pure agent from the third party are in addition to the supply which he is making on his own account. And whatever he is purchasing, no, that should be an extra thing which he is doing over and above his own services. Then whatever value is incurred as a pure agent will not be added in value of supply. This condition should be satisfied. Now, two more sections, small section. Two more rules. Rule number 34 says, if you are dealing with foreign customers, if you are dealing with customers located outside India, then you will have to convert. For example, I am selling the goods to US. Now I would have sold the goods in dollars. I will have to convert them into rupees. So what is the exchange rate which I am going to take? Lawmaker says, in case of goods, I am going to take exchange rate notified by CBIC. I am going to take exchange rate notified by CBIC. And in case of services, I am going to take generally accepted accounting principle rates. And as on which date will I take, sir? As on the rate of time of supply. Then rule number 35 gives the formula for calculation of tax amount when the amount is including GST. So if the question gives you an amount including GST, what is the tax amount? For that, formula is given. Tax amount will be equal to amount inclusive GST into GST rate divided by 100 plus GST rate. For example, if 1,18,000 is including GST of 18%, how will I find GST amount, sir? 1,18,000 into 18 divided by 118 will give me the tax amount, which is 18,000. But if I want to know the base value amount before GST, sir, then 100 into 118. That will give me the tax amount. Tax amount over here should be 1. Okay, tax rate divided by 100 plus tax rate. This is all about your value of supply topic. Okay, this is all about your beautiful chapter called as value of supply. What we'll do is we'll conclude our today's session over here only, and we'll meet again in our next session, which will happen hopefully on Monday. It will happen, and we'll try to complete the syllabus on Monday, or maximum by Tuesday it will be over. Okay, so let us meet again.
Hello friends, a very good afternoon to you all. So in our previous class, we had completed the discussion on time of supply, value of supply. Now we'll see place of supply. I will start discussion on what's a topic called as place of supply. Now this is one that particular topic which you are going to study from which act, sir? IGST Act. See, normally, all the different sections which we are studying in our GST law, they are all coming from which act, sir? They are all coming from CGST Act. But this is one particular section which we are studying from which act? From IGST Act. Okay. So topic name is what, sir? Place of supply. What do you mean by place of supply, sir? Place of supply means the place where the supply has been made. Sir, I didn't understand this point. Place where the supply has been made. So if a person is making a supply, we decide whether that supply is an interstate supply or intrastate supply. So what is the mechanism for determining whether a particular transaction or whether a particular supply is an interstate supply or intrastate supply? So we use this place of supply topic. For example, I made supply from Chennai to Coimbatore. We know that it is intrastate supply. I made from Chennai to Mumbai. We know that it is interstate supply. But what is the actual definition of interstate supply, intrastate supply? It is given in this particular topic. So section 7 of IGST Act says interstate supply means a particular type of supply where the location of the supplier and the place of supply is in two different states or two different union territory or one state and one union territory. Now what will I check? To decide whether a particular transaction is interstate supply or intrastate supply, I am going to check the location of the supplier as well as place of supply. If the location of the supplier and the place of supply is in two different states, or is it in two different union territory, or one state and one union territory, then that particular transaction will be called as interstate supply. Repeat, sir. A particular kind of supply where the location of the supplier and the place of supply is in two different states, two different union territory, one state, one union territory, then it will be called as interstate supply. Or if it is a case of importation of goods or services, if I am importing goods or services, that particular importation of goods or services will be called as interstate supply. If I am exporting any goods or services, then that exportation of goods or services also will be called as interstate supply. If I am making a supply to an SEZ unit or an SEZ developer, so if I make a supply to whom, sir? An SEZ unit or an SEZ developer, then that particular transaction would also be called as interstate supply. And all the other type of supply, then what else is interstate supply? All the other types of supplies which are not intrastate supply will be regarded as interstate supply. And all those supplies which are not intrastate supply will be called as what, sir? Interstate supply. Okay. For example, now to decide, see, please note, to decide whether a transaction is inter, what should I see? Location of supplier and place of supply. Now, many students make a mistake. They check the location of the supplier and the location of recipient. We are not supposed to do that. We are not supposed to see the location of the supplier and the location of recipient. What are we supposed to see? We are supposed to see where is the supplier located and which is the place of supply. Then I'll come to know whether it is interstate or intrastate. Sir, when will I call a particular transaction as an intrastate supply? If the location of the supplier and the place of supply is in same state or same union territory, then the transaction will be called as intrastate supply. Same state or same union territory. Now, sir, what if I make the supply in territorial waters? What if the supply is made, the location of the supplier is in territorial waters, or what if the place of supply is in territorial waters? For example, I went to Goa. When I went to Goa, I went to a cruise ship. When I went to this cruise ship, I purchased something in that cruise ship. Now, whatever I have purchased in the cruise ship, now the supplier, where is the supplier located? Can I say he is located in the water region in the ship? Correct. So here, what and where is the supply made to me? That also is made in the ship only. And the ship, it is not in the land region of India. It is somewhere in the water region. So what is the place of supply and location of supplier in this case? What lawmaker says, if the location of the supplier is in territorial waters, or if the place of supply is in territorial waters, then the location of the supplier as well as the place of supply shall be the nearest coastal area. So if the supplier and the recipient both are located in territorial waters, the location of the supplier and the place of supply will be what? The nearest coastal area. The nearest coastal area. Now let us understand. So in this chapter, no, we have totally these different sections which we have to study. Majorly what is important, section 10 and section 12. Section 10 talks about place of supply of goods where the supplier and recipient both are in India. Section 11 talks about place of supply of goods where either the supplier or recipient anyone is outside India. Section 12 talks about place of supply of services where supplier and recipient both are in India, and 13 talks about place of supply of services where any one among them is outside India. Now, section 10, place of supply of goods where the supplier and the recipient both are in India. So section 10, when will I apply? I'll apply the provisions of section 10 when the supplier, the person who is supplying the goods, as well as the recipient, the person who is receiving the goods, are located in India. Section 10 subsection 1 clause A says supply involves movement in goods. If I am making any kind of supply wherein the supply which I am making, it involves movement in goods. If I am making any kind of supply wherein the supply which I am making involves movement in goods, then the location, the place of supply will be the place where the movement is terminating or ending. If I am making a supply where supply will involve movement in goods, what will be the place of supply? It will be that place where the movement is terminating or the movement is ending. Section 10 subsection 1 clause B, where the movement is caused by third person. Now, sir, example of this last case, sir. Say for example, I am making a supply from Chennai to Mumbai. So can I say I am sending sarees from Chennai to Mumbai? So the sarees will have to go from Chennai to Mumbai. So can I say this is a kind of supply where there is a movement involved? If it is a kind of supply where there is a movement involved, lawmaker says the place of supply will be location where the movement is terminating. Which is the location where movement is ending? Which is the place where movement is ending? That location will be taken as place of supply. Section 10 subsection 1 clause B says movement is caused by a third person. Sir, what if the movement is caused by a third person, sir? Lawmaker says if movement is caused by someone else, if the movement is caused by third person, then the place of supply will be principal place of business of such third person. So I am moving the goods. I am moving the goods, but why am I moving the goods? Because someone else told me to move the goods. So if the movement is caused by some third person, then the place of supply, lawmaker says, is the principal place of business of such third person. For example, I am supplying goods to so there is Priya sarees in Chennai, Karina sarees in Mumbai, and Nayantara sarees in Coimbatore. Now Karina is telling me to supply the goods to Nayantara. So who is telling me? Karina is telling me to supply the goods to Nayantara. So my customer is Karina, therefore I am going to give a bill to whom, sir? Karina. Now the shipping, where am I shipping the goods? I am shipping the goods to Nayantara in Coimbatore. Correct? Who is going to pay the money to me? Karina is going to pay the money to me. But however, goods are delivered where, sir? To Nayantara in Coimbatore. Now lawmaker says over here, lawmaker says Priya sarees is giving the goods to Nayantara on the direction of Karina. Correct? So because Karina is telling me to deliver the goods to Nayantara, I am sending the goods to Nayantara. Though there is a movement involved and the movement is terminating in Coimbatore, here the movement was caused by me because of the direction of this third person who is Karina sarees. So here what is the place of supply, sir? Lawmaker says the principal place of business of third person. So here the place of supply will be the place where Karina sarees is located. The principal place of business of Karina sarees. Then section 10 subsection 1 clause C, you are making a supply which does not involve movement in goods. What if I am making such kind of supply where there is no movement involved at all? Sir, what do you mean by this? I am making a supply which does not involve any movement. For example, I am supplying sarees to customer at my store only. Or you go to any store, you go to Zudio, you are purchasing saree over there. So when you you are purchasing some dress over there. So when you are purchasing some dress from Zudio, the goods are also supplied to you at that location only. So when you are going to Zudio and purchasing a saree over there, and the sarees is also supplied to you at that location only, is there any if that dress is supplied to you at that location only, is there any movement of goods happening? Are the goods moving from one location to the other location, sir? Zudio, you went to Zudio, you purchase the product over there, the Zudio people deliver to you the goods over there. So in such cases, is there a movement happening? No. So lawmaker says in such cases, the place of supply will be location of the goods at the time of delivery. At the time when the goods were delivered to you, where were they located? What will be the place of supply? Location of the goods at the time of delivery. At the time when these goods were delivered to you, where were these goods located? That location will be taken as place of supply. Now, this is a new section which is added, section 10, subsection 1, clause CA, which says, if you supply the goods to an unregistered person, if you supply the goods to whom? An unregistered person, check whether that unregistered person is recorded on the invoice or that unregistered person address is not recorded on the invoice. If the unregistered person address is recorded on the invoice, place of supply will be whatever address is recorded on the invoice. So whichever address is recorded on the invoice, that location will be taken as place of supply. Sir, what if that unregistered person's address is not recorded on the invoice, sir? Lawmaker says, if you don't record the invoice, the address of that unregistered person, then wherever the supplier is giving the goods, the location of supplier, wherever the supplier is located, that location will be taken as place of supply. Then section 10 subsection 1 clause D talks about place of supply in case of installation and assembly. So there are some goods involved where installation work will happen or assembly related work will happen. So in case of those goods, sir, what is the place of supply? Lawmaker says, in case, for example, this windmill which is purchased by me, here this windmill is required to be installed at what location. So whichever location this windmill is getting installed, now I am from Chennai, this supplier is from Mumbai, but I am installing the windmill in Hyderabad. What is the place of supply? The location where the windmill is getting installed. Hyderabad will be taken as place of supply. Section 10 subsection 1 clause E, supply on board a conveyance. Now you're traveling in some train or aeroplane, etc. When you're traveling in the train or aeroplane, you purchase some goods. You are purchasing, let us say, the travel band, you're purchasing one travel pillow. So in such case, what will be the place of supply, sir? Lawmaker says, in such case, place of supply will be location where the goods are taken on board. What will be the place of supply? The location, place of supply will be that location where the goods are taken on board. Which is the location where you are taking the goods on the board, on the aeroplane or train, etc. That location will be taken as place of supply. Now it does not matter where the person is boarding the train. What matters is where are the goods taken on board. Section 11 talks about place of supply of goods where either the supplier or the recipient, any one among them is outside India. So if any one among you is outside India, what will be the place of supply? Now there are only two possibilities. Either it can be a importation of goods or it can be exportation of goods. In case of importation of goods, location of importer will be taken as place of supply, and in case of exportation of goods, any place outside India will be taken as place of supply. Section 12, place of supply for services. What is the place of supply for services? Very important this is. Section 12 subsection 1 says the provisions of section 12 will be applicable to determine the place of supply of services where the supplier and the recipient both are located in India. So when will I apply the provision of section 12, sir? If both supplier and recipient are in India, at that time I am going to apply the provision of section 12. Section 12 subsection 2 says this is the general rule. What do you mean by general rule? Meaning normally if you want to know what is the place of supply for a services, you will have to go refer to the provision of section 12. What is section 12 telling, sir? Section 12 says check to whom is the supply made. Check whether the supply has been made to a registered person or the supply has been made to a unregistered person. If the supply has been made to a registered person, the place of supply will be principal place of business of such registered person. If you are making the supply to a registered person, the place of supply will be what, sir? The principal place of business of that registered person. Sir, what if I am making a supply to an unregistered person, sir? Lawmaker says if you make a supply to an unregistered person, check whether you have the address of that unregistered person or not. For example, I am supplying the services to you. Now here you are all unregistered person. Here what are we going to check? Whether your address is available with me or not. So if the address of that unregistered person is available with the supplier, place of supply will be that address which is available. Sir, what if address is not available? The place of supply will be location of supplier. For example, I am filing income tax return of Infosys, who is a registered person. So I am making a supply to registered person. Place of supply will be what, sir? Location of that registered person. What if I am supplying the services to you who is not a registered person, but I know where you are from? So in such cases, your location will be taken as place of supply. So I'm making a supply to you who is an unregistered person. Let us say you are from Andhra Pradesh. What is the place of supply, sir? Andhra Pradesh. I am making a supply to an unregistered person. I am making supply to you and I don't have your address. Location of supplier will be taken as place of supply. Next, section 13. Section 12 subsection 3, sorry. Section 12 subsection 3 talks about place of supply of services
in case of immobile property. For immobile property, what will be the place of supply? Now, what do you mean by immobile property? So, if you give services related to immobile property, sir, can you give example of services related to immobile property? For example, renting, leasing, hiring, correct? All these are different services which you give with respect to immobile property, or interior designing. So, in such cases, what will be the place of supply? Lawmaker says, in case you give any services in relation to an immobile property, the place of supply will be the place where that immobile property is located or intended to be located. So wherever that immobile property is located or wherever that immobile property is intended to be located, that location will be taken as place of supply. There are proviso provided that if the supplier and recipient both are located in India and the place of supply by applying the above provision is coming outside India, then the place of supply will be location of recipient. See, normally for immobile property, what is the place of supply, sir? Wherever that immobile property is located. Sir, what if the immobile property is located outside India, sir? If supplier and recipient both are in India and if immobile property is outside India, place of supply will be location of recipient, wherever the recipient is located, because recipient and supplier are both the person who is giving the services and taking the services, they are both are in India. But immobile property is located outside India. In such cases, whoever is taking the services, receiving the services, his location will be taken as place of supply. Provided further that where the immobile property is located at more than one state or union territory, then the place of supply shall be taken proportionately. What is this point telling? This point says, if the immobile property is located at more than one place, if the immobile property is located at more than one place, the place of supply will be taken proportionately. So, for example, I take an order for construction of a property and the property is required to be constructed at 5 different locations. So place of supply will be what, sir? Proportionately each of those locations. Next, section 12 subsection 4 talks about performance based services. So services, they have given list of 6 services which are covered in section 12 subsection 4. Which are the 6 services, sir? Restaurant services, outdoor catering services, personal grooming services, fitness services, beauty services and healthcare services. In case of these services, in case of these 6 services, the place of supply will be location where the services are performed. Wherever the services are performed, wherever you are performing the services, that location will be taken as place of supply, because these are required to be performed. For example, like grooming services will cover my haircut. Now I am calling a person, barber, to come to my home and cut my hair. Place of supply will be location where haircut is happening, my home. If I myself go over there and go to the salon and get my haircut done, place of supply will be that salon. Section 12 subsection 5. Place of supply in case of training and performance appraisal services. Place of supply in case of which services? Training and performance appraisal services. Training and performance appraisal means what, sir? For example, my services, I am teaching, correct? So I am training in a particular topic to you. So in such cases, if I am giving the services to a registered person, the place of supply will be the location of registered person. However, if I give the services to an unregistered person, the place of supply will be location where the services are performed. Okay, so in case it is a training and performance appraisal services, to whom am I giving the services? To a registered person or to a unregistered person? If I give the services to a registered person, lawmaker says Place of supply will be location of that registered person. Sir, what if the services are given to an unregistered person? Here lawmaker says if you give the services to an unregistered person, then wherever that unregistered person is located, his location will be taken as place of supply. Training is given to employee of Infosys in Hyderabad. Infosys is a registered person. Place of supply will be location of Infosys, which is a registered person. If I am giving services to you, then wherever I am performing, for example, I am teaching you, correct? So I am teaching you right now. Now where am I teaching, sir? Though you are watching me at whichever location you are watching, but I am performing this at Bangalore. Place of supply will be Bangalore. Then services section 12 subsection 6, services related to admission to an event. When I say admission to an event or amusement park, we are talking about entry ticket. What will be the place of supply for that, sir? Place of supply will be wherever the event is held or wherever that amusement park is located. For example, I am booking an IPL ticket. IPL is an event. I am booking an IPL ticket for RCB versus CSK. In this case, what is the place of supply, sir? Place of supply will be wherever that match is going to be held. Then now there are two things. One is going to an event, one is organizing the event. In case of organization of an event, the place of supply will be depending upon whether you are giving the services to registered person or not. For example, I am organizing your marriage. Your marriage is an event. I am organizing a business exhibition for you. It is an event. I am organizing an award function. It is an event. Whom am I giving the services? If I am giving services to a registered person, principal place of business of registered person, meaning location of registered person will be taken as place of supply. However, if I am giving services to an unregistered person, then location where the event is held, whichever location the event has been held, that location will be taken as place of supply. Now here also there are two provisos, same provisos which we saw for immobile property. What is this proviso telling, sir? If the supplier and the recipient both are located in taxable territory, that is India, and if the place of supply is coming as outside India, a place of supply will be location of recipient. Meaning if the event is held outside India and supplier and recipient both are in India, place of supply will be in India. Similarly, if the event is held at more than one location, then I will take it proportionately to each of that location. Then transportation of goods services. Transportation of goods means what, sir? I want to send the sarees from Bangalore to Mumbai. In such cases, I am going to take services from VRL transports. Place of supply will be what, sir? If it is given, transportation of goods services is given to whom? I am a registered person, wherever I am registered, that location will be taken as place of supply. What if the services are given to an unregistered person? Wherever that unregistered person is handing over the goods for transportation, wherever that unregistered person is handing over, giving the goods for transportation, that location will be taken as place of supply. In case of passenger transport service means you're taking a bus or car on rent, etc. So passenger transport service. Now to whom is this services given? If passenger transportation services are given to a registered person, the place of supply will be location of that registered person. And if the passenger transportation services are given to an unregistered person, then wherever the passenger is embarking the conveyance for continuous journey. What do you mean by this, sir? Meaning, I am organizing a school picnic. I am a registered person. Place of supply will be location of registered person. So I am taking services from VRL transport or SRS transport. Now, case number 2. You are all going to your village. From Bangalore, from Chennai, from Coimbatore, from whichever location you want to go, you are going to your native. You are going to some vacation. So in such, by catching a bus, what will be the place of supply in such cases? Wherever you are catching the bus, that location will be taken as what, sir? Place of supply. Wherever you are catching the bus. There is a proviso provided that provisions of section 12 subsection 9 will not be applicable in case of right to passage. Sir, what is this right to passage, sir? Like this metro pass, bus pass, etc. which we have. For that, no, this section is not applicable. You will have to apply the general rule. Then, section 12 subsection 10. Services provided on board a conveyance. Now, you are on board. You are boarding a conveyance. When you are boarding a conveyance, at that time services are given to you. Place of supply will be the first scheduled point of departure of conveyance. The first scheduled point of departure of conveyance, meaning the place from which from where that particular conveyance, that is the aeroplane or the bus or the train, is starting the journey. First scheduled point of departure of conveyance. Let me take an example to explain 2-3 concepts in one single example. Now let us say, so there is a flight which is starting its journey from Chennai. From Chennai it will go to Bangalore. From Bangalore it will go to Hyderabad. From there it will go to Mumbai, then Delhi, Kolkata and Jaipur. So this is how this flight is going to go. I boarded the flight in Bangalore. I am an unregistered person who boarded the flight where, sir? In Bangalore. Then some goods were taken in the flight at Hyderabad. So first tell me, I boarded the flight in the okay, I'll explain the entire question first. So I boarded the flight in Bangalore, then the goods were taken in Hyderabad. Then when the flight was somewhere in between Mumbai and Delhi, I purchased a wallet in the flight, and when the flight was somewhere in between Kolkata and Jaipur, I took some services in the flight. Now my question to you is, what is the place of supply for passenger transport service, for goods which I have purchased in the flight, and for the services which I have taken in the flight? Sir, for passenger transport services, if it is to unregistered person, the location where the unregistered person is embarking the conveyancer, correct? Sir, for wallet which you have purchased, no sir, for the goods which are supplied, the location where the goods are taken on board, sir. And for the services which you have taken, the first scheduled point of departure of this conveyance. The flight started its journey from Chennai, therefore first scheduled point of departure of that conveyance will be taken as place of supply. Now there are other 3 services. Section 12 subsection 11, telecommunication services. In case of telecommunication services like internet, telephone, etc., if it is a fixed line services, location where it is fixed. Postpaid services, billing address. Prepaid services, location where the vouchers are sold. What vouchers are that? Prepaid vouchers are sold. And online, if the recharge is done by you online, then whichever billing address you are giving. Then if any services are given by bank, stock broker, NBFC, etc., if it is given to its customer, then the location of recipient will be available, therefore that location of recipient. If it is given to a non-customer, then that non-customer's address will not be available with the bank, therefore bank's location will be taken as place of supply. Location of supplier will be taken as place of supply. Then in case of insurance services given, insurance services are given to a registered person, place of supply will be principal place of business of registered person. Insurance services are given to unregistered person, place of supply will be address available with that supplier. If you give it to unregistered person, whatever address is available with you, if you give it to registered person, wherever he is registered. Then place of supply for services where the recipient or supplier, any one among them is located outside India. So if any one among them is located outside India, then section 13 is applicable. What is 13 telling, sir? Default. By default, section 13 subsection 2 says, if the location of the, by default, what will be the place of supply? Where the location of the service recipient is available in ordinary course of business, place of supply will be the location of recipient. Sir, what if I don't have the location of recipient? Where the location of the service recipient is not available, place of supply will be location of, where the location of the recipient is not available in ordinary course of business, the place of supply will be location of recipient where the location of the service recipient is available in ordinary course of business, place of supply shall be location of service recipient is the place of supply. Location of service, actually here it should be service supplier. Where the location of the service recipient is not available, then the location of supplier will be taken as place of supply. However, if the services are performed in related to any goods, and if those goods are required to be made physically available, then wherever the services are actually performed, that location will be taken as place of supply. Then where the services are provided through electronic mode, say someone from outside India is giving services to any goods which is located in India, place of supply will be the location of the actual location of the goods, meaning actual location, actual place where the goods are located at the time of giving the services. Where the services are supplied to an individual whose physical presence is required, wherever services are performed. Haircut I am doing, wherever the services are performed. Now please note, these points are exactly same as your previous point. Only difference is that in previous point there was a differentiation between registered person and unregistered person, but here there is no differentiation. Here everyone is treated as unregistered person only. So services in relation to immobile property, what is the place of supply? The place where the immobile property is located or intended to be located. And then services in relation to admission to or an organization of an event. If your admission to an event, what is the place of supply? Location where the event is held. Organization of an event, what did we study previously? If it is given to registered person, location of registered person. If it is unregistered person, location where the event is held. So same point is there, meaning whatever you studied in section 12 for unregistered persons, that is covered over here. So in case of admission to or organization of an event, place of supply will be the location where the event is actually held. Where the services, so if section 13.3, 13.4 and 13.5 services are more than one location, then the place of supply will be the taxable territory. It will be rated as India. What if it is more than one state or union territory in India? Then I'll take it each of those state or union territory proportionately. Section 13 subsection 8. If you give services provided by a banking company, financial institution or an NBFC to its account holders, or if there is any intermediary services or agency services, or if there is any services relating to transportation of transportation by any means other than aircraft and vessel for a period up to 1 month, for all these cases the place of supply will be location of the service provider. Whoever is providing the services, his location will be taken as place of supply. For example, a non-resident is there, he is taking banking services from any bank in India. So supplier is in India, recipient is in outside India. What is the place of supply, sir? It does not matter where the recipient is there, place of supply will always be location of recipient. So I am acting as an agent of Puma. In India, I am acting as their agent. So what will be the place of supply? Intermediary service, location of supplier. Then transportation of passenger, location where the passenger is embarking the conveyance. Transport services provided on board a conveyance, the first scheduled point of departure of that conveyance. Basically all these points are similar. And if the services are related to online information database and access and retrieval services, place of supply will be the location of the recipient. What is this online information database access and retrieval services, sir? These online information database access and retrieval services are nothing but your Netflix, Amazon Prime, etc., wherein you can watch movies. So what will be the place of supply? Wherever you are watching movie, the recipient's location will be place of supply. Now before going to input tax credit, we'll discuss a chapter called as exemption. We'll discuss a chapter called as exemption. Now, so there is one chapter called as exemptions under GST. So there are few things on which GST is not applicable. Sir, what are those different things on which GST is not applicable, sir? That is given in section 11. Section 11 talks about exemption. Section 11 has totally 3 subsections, 11.1, 11.2, 11.3. By itself, these sections are not important because the notification which is giving you the list of goods and services which is exempt, that is important. Now, exemptions. Section 11 subsection 1 says what, sir? If the government feels like exempting something, it may by way of a notification, the government may give notification and exempt few things Section 11 is telling. So if the government is satisfied that it is necessary in public interest to do so, it may by way of a notification exempt some goods or services from payment of tax. Similarly, 711(2) says if the government feels that it is necessary to exempt few things, it may exempt that things by way of a special order. Now, sir, they can exempt by way of a notification and special order. Both are possible, sir. Yes, both are possible. If they give any exemption by way of a notification, it will be applicable to everyone. However, if they are giving any exemption by way of a special order, it will be applicable only to that person who is seeking for that exemption. Now, what are the different goods which are exempt, sir? Normally, the goods which are exempt are not that important from exam point of view. The services which are exempt are important. But anyways, few goods which are exempt are like fish is exempt, potatoes, basically potato means vegetables are exempt, fruits are exempt, milk is exempt, tender coconut is exempt, live animals are exempt, alive animals which dog, cat people purchase, no, except horses, plastic bangles, newspaper, Indian flags, vegetables, puja samagri. They are all different goods which are exempt. But what is important is the services which are exempt. Section 11 gives about exemption, but it is this notification which is important. Notification number 12/2017. It is that notification which will talk about what are the different services which are exempt under GST law. So now we'll start all these services which are exempt. Okay. Services given by an entity registered under Section 12W of Income Tax Act or Section 12AB of Income Tax Act by way of charitable activity. So if there is any entity, if there is any what, sir? If there is any entity registered under Section 12W of Income Tax Act, and if it is giving services, what kind of services? If it is giving services relating to charitable activity, then their services will be exempt. So here two conditions are important. One, the entity should be registered under Section 12W of Income Tax Act or Section 12AB of Income Tax Act, and their services should be charitable activities. And their services should be what, sir? Their services should be charitable activities. If these two conditions are satisfied, whatever services is given by that particular entity, that will be exempt. Now, what do you mean by charitable activity? Sir, I understood that I should be registered under Section 12AA or 12AB of Income Tax Act, and my services should be charitable activity. What do you mean by charitable activity, sir? Charitable activity means PAPA. Sir, what do you mean by PAPA, sir? Charitable activity means services related to public health, advancement of religion, spirituality, yoga, preservation of environment, and advancement of educational programs. So, services relating to public health. Public health means what, sir? You are caring and consoling terminally ill person with severe physical and mental disability. You are caring and consoling. Whom are you caring? Whom are you consoling? You are caring and consoling physically or mentally disabled person or any ill person, terminally ill person, or a person who is addicted to dependence forming substance, or you are creating public awareness with respect to preventive health checkup, family planning, prevention of HIV infection, etc. Advancement of religion, spirituality, yoga, or you are doing what, sir? You are involved in advancement of religion, spirituality, or yoga, or your advancement of educational program or skill development program, or you are doing what, sir? You are advancing any educational program or any skill development program. To whom are you doing this, sir? Abandoned children, orphaned children, physically or mentally abused persons or prisoners, or those people who are staying in rural area whose age is 65 years or more. Whose age is what, sir? 65 years or more. Then you are preserving environment including watersheds and forest. Then next point says what, sir? Services by way of training or coaching in recreational activities relating to art and culture by individual. So if any individual is teaching you teaching you about any art and culture, or if any charitable institute is teaching you anything with respect to sports, then their services will be exempt. Services given by an old age home. Old age home run by central government or state government or an entity registered under Section 12AA of Income Tax Act to its residents. To whom is the old age home giving the services? To its residents against a consideration up to 25,000 per month per member. Services by a person by way of conduct of religious ceremony or renting of purchase of religious premises. So if any services is given by a person who is conducting religious ceremony, or any services are given by a person by way of renting of purchase of religious premises which is meant for general public, then his services will be exempt. However, for renting, no, there is a limit. If the rent charge is equal to or more than this amount, then exemption will not be available. If the premises which is getting rented, if it is a room, then if you are charging 1,000 rupees or more per day for the room, it will be taxable. If you are renting Kalyana Mandapa and charging 10,000 rupees or more per day, it will be taxable. If you are renting shops for 10,000 rupees or more per month, then it will be taxable. Please note, who is renting all these things? The religious premises is renting all this. Who is renting, sir? The religious premises is renting all these different things. Next point. Then specified organizations are giving services with respect to religious pilgrimage. Their services also will be exempt. Agricultural related services. Agriculture related services. Services relating to cultivation of plants and rearing of all life form of animals. So you are giving what services? You are giving services relating to rearing of plants. You are giving services relating to cultivation of plants, and rearing of all life form of animals except rearing of horses. Except what? Rearing of horses. Now, why are you cultivating plant or rearing life form of animals? For food, fiber, fuel, raw material or any other similar product. So if you are giving any services relating to cultivation of plants or rearing of life form of animals except rearing of horses for the purpose of food, fiber, fuel, raw material or any other similar product, then your services will be exempt. Similarly, services relating to agricultural operation by way of agricultural services relating to agricultural produce by way of agricultural operations. What are directly or indirectly related to production of agricultural produce? So if you conduct any agricultural operations such as cultivation, harvesting, threshing, plant protection, testing, etc., then your services will be exempt. If you are involved in supplying farm labors, you are supplying farmers, your business is to supply farmers, farm labors, then your services will be exempt. You are involved in the business of you are giving services relating to agriculture produce. What services, sir? By way of process carried out at agricultural farm which do not alter the essential characteristics of agriculture produce. You are undertaking any type of process which is not altering the essential characteristics of agriculture produce. What kind of process, sir? You are tending, puring, cutting, harvesting, drying, cleaning, trimming, sun drying, pigmenting, curing, sorting, grading, cooling, bulk packing. If you're doing all these things for what purpose? Agriculture produce purpose. And by doing this, essential characteristics of agriculture produce should not be altered. Renting or leasing of agro machinery with or without structure incidental to its use. If you're renting or giving it on lease, what agricultural machinery or a vacate land, then your services will be exempt. Loading, unloading, packaging and warehousing of agriculture produce. So any person is giving the services by way of loading or unloading or packing of agricultural produce. Agricultural extension services, meaning scientific research. You are teaching how to use pesticides. You are teaching what are the new methods which are required to be used for agriculture purpose. They are scientific agricultural extension services. Services by way of APMC, Agriculture Produce Marketing Committee, or any commission agent by way of sale and purchase of agriculture produce. So any commission agent is giving services for sale and purchase of agriculture produce, his services will be exempt. Then services of loading, unloading, packaging, warehousing of rice. Please note, rice is not an agriculture produce. Paddy is agriculture produce, correct? Rice is not an agriculture produce. So specifically they are telling, if you are loading, unloading, packaging, warehousing rice, then also your services will be exempt. Services of warehousing of minor forest produce, services of storing and warehousing of cereals, pulses, fruits and vegetables. Then if you are carrying out any intermediate production process as a job worker in relation to agriculture produce, your services will be exempt. Then if you are artificially inseminating livestock except horses, that services are exempt. If you are pre-cooling, ripening, waxing, retail packing, labeling fruits and vegetables, then also your services will be exempt, provided it should not change the essential characteristics of agricultural produce. Now, for example, supply of farm labor, receipts from supply of farm labor exempt, seed testing exempt, soil testing exempt, potato chips taxable because potato chips is not agriculture produce. Sale of commission received for sale of wheat exempt because wheat is an agriculture produce. Training farmer for using new pesticides exempt, agricultural extension services. Renting of vacate land for stud farming. Stud farming means horse, rearing of horses, taxable. Cattle farming exempt. Warehousing of rice is exempt. Cotton fabrics warehousing not exempt, taxable it is. Rearing of silkworm exempt. Tea and coffee plantation exempt. Rice, sale of rice on commission basis not exempt because rice is not an agriculture produce. And retail packing of fruits and vegetables exempt. Next service for our discussion is what, sir? Healthcare services. Next services is what? Which services? Healthcare services. What is this healthcare services talking about? Healthcare services given by whom, sir? Clinical establishment, authorized medical practitioner, or paramedics. Who is giving the healthcare services? Either a clinical establishment is giving healthcare services, or any paramedics is giving, or any authorized medical practitioners. Clinical establishments means what, sir? Hospital. Authorized medical practitioner means doctors. Paramedics means the nursing staff. If these people are giving healthcare services, then their services will be exempt. However, nothing contained in this entry shall apply for the services given by a clinical establishment for providing rooms on rent for a charges of rupees 5,000 exceeding 5,000 rupees per day. So what is this point telling, sir? See, normally any services given by clinical establishment, that is hospital, is exempt. But however, if the hospital is giving room on rent and if the room rents are more than 5,000 rupees per day, then it will be taxable. Except the rooms of ICU, CCU, ICCU and NICU. Sir, what do you mean by healthcare services, by the way? Healthcare services means you are diagnosing, treating, caring. Diagnosis, treatment and care of illness, injury, deformity, abnormality or pregnancy through any recognized system of medicine in India. And it includes the services of transportation of patient to or from clinical establishment. But it shall not include the services of hair transplantation, cosmetic surgery, plastic surgery, except where it is undertaking to restore or reconstruct an anatomy which is affected due to any congenital defects, development abnormalities or injury or trauma. So normally hair transplantation etc. is not covered, but it will be covered if the hair transplantation is happening because of any defects. For example, someone got cancer and therefore they are doing hair transplantation, or someone met with accident and therefore this thing are undertaken. Sir, you said that healthcare services should be by a recognized system of medicine in India. What are this recognized system? It is allopathy, naturopathy, homeopathy, Unani, yoga, siddha, ayurveda. Then what about veterinary clinics, sir? Veterinary clinic services is also exempt, and services given by rehabilitation profession for under who are recognized under Rehabilitation Council of India by way of rehabilitation therapy and counseling of medical establishment, education institution and rehabilitation. Where are they giving services, sir? They are giving services at medical establishment or educational institutes or any other rehabilitation centers which is organized, which is established by central government, state government, union territory, or an entity registered under section 12AA of income tax. Rehabilitation professionals are like, I mean, just assuming them to be doctors, but they are not actually doctors. Rehabilitation professionals are the professionals who are teaching or people what are the consequences of a person consuming drugs, etc. So these are people involved over here. Now, amount received for medical examination of patients of CCU exempt. Doctor visiting home of the patient, a doctor can do the treatment anywhere. Even if he's coming at home and treating me, then it will be exempt. Then nursing care of patient at home exempt. Cosmetic surgery taxable. Then cosmetic surgery for reconstruction of an anatomy of body exempt. Path lab services, meaning all your testing which is done, exempt. Receipts against cord bed blank services of childcare unit, exempt. No, cord bed blank services are now taxable. So there are two services which were exempt. One is cord bed blank services and one is treatment of biomedical waste. These two services are now taxable. Charges for providing common biomedical waste taxable. Veterinary services exempt. Ambulance services exempt. Physiotherapy exempt. Services of Unani exempt. And mortuary services. Mortuary means dead body related services, giving the storage, that cold storage facility for dead bodies, that is exempt in US. Next is what's our educational services given by educational institute. Now let us say this is an educational institution. It can give services and take services. Let us first see what are the services given by them which is exempt. Services given by an educational institution. Educational institution is giving any services to its student, faculty, staff, exempt. An educational institution is giving any type of services to its student, any type of services to its faculty, any type of services to its staff, it is exempt. Educational institution gives any services to its students, faculty and staff members, is exempt. Educational institution is giving services, so services are given by education institute to student, faculty, staff, always exempt. Educational institution is giving services by way of conducting examination for a consideration of entrance fee. So normally entrance examination is conducted many schools and colleges. So that particular services are also exempt even though you are not the student of the school. Now what are the services which if I give to educational institution will be exempt, sir? Now I am not an educational institution. I am giving services to educational institution. Which are the services which if given to educational institution are exempt? Those services are services of transportation of student, faculty, staff. Services of transportation of student, faculty, staff. Services of catering including midday meals. Services of security, cleaning and housekeeping. Services relating to admission to or conduct of examination and supply of online educational journals. Now, what do you mean by educational institution is very important. Educational institution means an institution giving education by way of preschool education up to higher secondary school, education as a part of curriculum for obtaining qualification recognized by law in India, and education as a part of approved vocational courses. Now, please note these three units are educational institution. Now, here this transportation, catering and housekeeping services will be exempt only for preschool up to higher secondary school, and for others it will be taxable. Similarly, online education general services is not exempt for preschool up to higher secondary school and vocational training courses. Passenger transportation services, we'll see this service from this chart. Passenger transportation services related to transportation of passenger. Passenger transportation. Passenger transportation can happen in different ways, either by railway, roadway, airway and waterway. Now, how is the transportation happening? That is important. If passenger transportation is happening by railway through first class or AC class, any of the AC class, 1 tier, 2 tier, 3 tier, then it will be taxable. So if any passenger is traveling by train and if he is traveling in first class or AC coach, taxable. If he is traveling by train in any other class, exempt. If he is traveling by train in any other class, then it is exempt. If he is traveling in metro, monorail or tramway, so metro, though it is a AC metro, it will be exempt. If the passenger is getting transported by roadway, road, check what is the mode. Is it contract carriage, stage carriage or others? So if it is a contract carriage or stage carriage, if it is AC contract carriage, stage carriage, taxable. Non-AC contract carriage, non-AC stage carriage, exempt. However, if that contract carriage or stage carriage is used for conducting tour or tourism purpose, then it will always be taxable. Then other categories. If you are traveling in Ola, Uber, taxable. If you are traveling in auto rickshaw, e-rickshaw, metered cab, exempt. If you are traveling by air, normally it will be taxable. However, if you are, in two cases it is exempt. If you are terminating to or embarking from northeastern states, or you are terminating to or embarking from uh, rural connectivity scheme airports. Then water. If you are traveling in inland waterways, exemption will be available. If you are traveling in a vessel using a public transport, then exempt, and in other cases it will be taxable. Now, transportation of goods transportation. If you are transporting the goods by rail, then it will normally be exempt except Dr. Namo. If you are traveling by rail, then normally it will be taxable except Dr. Namo. Dr. Namo will be exempt. Similarly, if you are traveling by a vessel means ship. If you are transporting goods by vessel, then normally it will be taxable except Dr. Namo. So both railway and vessel normally taxable if you are transporting anything through that. Only item which is exempt is Dr. Namo. Sir, what is Dr. Namo, sir? Defense material, relief material, newspaper, agriculture produce, milk, organic manure. If you are transporting these items, which items? Defense material, relief material, newspapers, agriculture produce, milk and organic manure, then exemptions will be given to you. Then if you are transporting any goods by road, normally it is exempt. However, if you are transporting through GTA or courier agency, it will be taxable. And in case of GTA also, Dr. Namo will be exempt. So if you are transporting Dr. Namo through GTO, exempt. If you are transporting anything through airways, then always it will be taxable. Vessel, it will be normally taxable, and Dr. Namo will be exempt. Any other mode, if it is inland waterways, exempt. Other cases, it will be taxable. Legal services. Legal services also by chart only I'll teach you. Now legal services are given by an advocate. Advocate is giving legal services to a government. Central government, state government, union territory, local authority. Advocate gives legal services to them, exempt. Advocate gives legal services to a non-business entity. A non-business entity, exempt. Advocate is giving legal services to another advocate. Advocate gives legal services to government, exempt. Advocate gives legal services to non-business entity, exempt. Advocate gives legal services to another advocate, then also exempt. Advocate gives legal services to a business entity whose aggregate turnover is less than the registration limit, exempt. If advocate gives legal services to a business entity whose aggregate turnover is more than the registration limit, then it will be taxable, and it is taxable under reverse charge. Sir, what is the registration limit? 10 lakh, 20 lakh, 40 lakh. We will see in registration chapter. This is the normal limit for taking registration. Okay, similarly, arbitral tribunal also similar provision is there. Now, this was normally case of advocate. If you are a senior advocate giving services to a government, central government, state government, union territory, exempt. Senior advocate giving services to a non-business entity is also exempt. Non-business entity means you and me. We are not business entities. Then, senior advocate giving services to whom, sir? Another advocate, taxable. Senior advocate giving services to a business entity with a turnover less than 10 lakh, 20 lakh, 40 lakh, exempt. More than that limit, taxable. Then what's our entertainment related services? Entertainment and sports related services. Services provided to a recognized sports body by an individual as a player, referee, umpire, coach or team manager. So what is happening? Services are provided to a recognized sports body. Recognized sports body is giving services. You are giving services to recognized sports body. Who is giving? An individual is giving. As what? As a player or a referee or an umpire or a coach or a team manager for participation in any sporting event organized by that recognized sports body. Will be exempt. Services given by one recognized sports body to another recognized sports body is also exempt. Please note, if you are acting as a player, referee, umpire, coach, team manager, exemption is there. If you are acting as a selector, commentator, caterer, technical expert, then your services will be taxable. Similarly, services given by an artist, by way of performance in folk or classical form of art, folk or classical form of art, or it can be music related, dance related, or theatrical related, where the consideration charged by them is not more than 1.5 lakhs. Meaning what, sir? If you are performing any classical dance, or you are performing any classical theatrical work or music, etc., and for that performance, if you are charging less than 1.5 lakhs, exemption is there. If you are going to admission to entry fees, entry ticket, if you are going to museum, national park, wildlife sanctuary, zoo, or tiger reserve, for that whatever entry fees you pay, no, exempt. If you are going to any protected monument, for that whatever entry fees you pay, exempt. Services by way of right to admission to any circus, award function, recognized sporting event, or planetarium, where the charges is less than 500 rupees, not more than 500 rupees, will be exempt. Now, services by way of renting of residential dwelling for residential use. If you are renting what, a residential dwelling for residential use, it will be exempt. However, if that residential dwelling is rented to a registered person, then it will be taxable. Then services of pure labor contracts for construction. All these are not that important. Services of pure labor contract for construction of a house under Pradhan Mantri Awas Yojana or all urban mission, exempt. Services given by electricity distribution utility by way of installation of electricity pole up to tube well of farmer for agricultural use. Services by way of pure labor contract for construction of a single residential unit. Then services given by unincorporated body to its member, being a trade union, or for carrying out any services which are exempt, or services given by trade unincorporated body to its member, where the amount charged is less than up to 7,500 per month per member. Services given by unincorporated body for undertaking the activity for welfare of industrial or agricultural laborers or farmers, or where the amount for promotion of trade, commerce, manufacture, where the amount is less than 1,000 rupees per member per year. Not that important services. Then services given by Reserve Bank of India is now taxable. Services by way of extending deposits, loans, or advances insofar as the consideration is represented by interest or discount. These services will be services given services by way of extending deposits, loans, or advances insofar as the consideration is represented by way of interest or discount. These services will be exempt services, nothing but interest income. Services in relation to inter-se sale and purchase of foreign currency among themselves. If the bank or authorized dealers are purchasing foreign currency, their services will be exempt. Services given by banking company to basic saving bank deposit account holders under Pradhan Mantri Janadhan Yojana scheme. Services by any acquiring bank for settlement of a payment up to 2,000 rupees debit card, credit card, whatever you are using. Then services given by business facilitator at rural area or intermediate of business facilitator at rural area, or such services given by a business facilitator of insurance company at rural area. Basically, rural area, if you give services, your services will be exempt. Services given by government. Services by way of function, services given by government authority by way of function is interested to a municipality under Article 243G. Similarly, function interest to Panchayat under Article 243W. Meaning, government authority is undertaking those functions which are required to be undertaken by municipality or Panchayat, their services are exempt. Services by way of by central government, state government, union territory, local authority, excluding following services. Excluding which services, sir? Excluding the services of Department of Post, services related to aircraft vessel, services of transportation of goods and transportation of passenger, and services provided to any business entity. Services provided by central government, state government, union territory, local authority to a business entity with an aggregate turnover up to such amount in the preceding financial year, which makes it exempt from taking registration. So if you are giving services to a business entity who is not liable for registration, if government is giving services, their services will be exempt. Services provided by one government to another government, exempt. Services provided by one government by government to any person where the amount of consideration for that is less than 5,000 rupees is exempt. Services supplied by government entity to central government, state government, unitary local authority against a consideration received from central government, state government, unitary local authority. Services given by Department of Post by way of inland postcard, inland letter, book post, ordinary post, etc. Services supplied by central government, state government to a public sector undertaking by way of guaranteeing loans, or services with respect to registration under any law given by government, testing, calibration, or giving any license, fire license, etc. Services given by way of passport, license, visa, driving license, or birth certificate, death certificate. If you're going and taking all these things, exemption is there. Services of tolerating non-performance of contract given by government. Services relating to assignment of right to use natural resources if it is given to any individual farmer. They are telling, okay, please use this land. Services given by Indian Railway by way of sale of platform tickets, facility of retiring rooms, clock rooms, and battery operated cars. Services given by one division of Indian Railway to another division of Indian Railway. Now these were the services given by. Now we'll see what is the service given to government. Services, pure services given to government. Pure services means what, sir? Only services, no involvement of goods. If you give pure services to government for functions entrusted to in Article 243G or 243W, then that services will be exempt. And if the 25% of the total service contract has goods also, no problem. But if the function is entrusted to central government or state government under Article 243G or 240W, that will be exempt. Fair price shops, ration shops, services provided by fair price shops to central government, state government, exempt. Services provided to central government by way of any insurance scheme where the total premium is paid by government. Services of training, conducting any training program where entire expenditure is borne by government is exempt. Services provided by rehabilitation profession, we saw some time back, exempt. Life insurance business, this heading is wrong. Life insurance should come here. Services given by employee stake insurance, insurance corporation, employee provident fund, coal mine provident fund, national pension trust, or services by way of right to information if you are taking in information. Services by way of Atal Pension Yojana, services by pension trust of state government. Pension scheme, all these services are not relevant from exam point of view. Life insurance services provided by National Pension System, regulated by Pension Fund Regulatory Development Authority. Life insurance business provided or agreed to be provided by Army, Navy, Air Force Office. Life insurance service provided by Naval Group Insurance. Life insurance for Central Armed Police Forces. Life insurance to Janashri Bima Yojana, Aam Aadmi Bima Yojana, Varishta Pension Bima Yojana, Pradhan Mantri Jeevan Jyoti Yojana, Pradhan Mantri Dhan Jan Yojana, etc. Services by way of hut insurance, cattle insurance, all these general insurance services are exempt. Skill development services given by National Skill Development Corporation or any sector skill development corporation will be exempt. Services by way of assigning bodies empaneled centrally by way of Director General Training, Ministry of Skill Development and Entrepreneurship. Services provided by training providers under Deen Dayal Upadhyaya Gramin Kaushal Yojana. Other services which are exempt are services by way of training, services by way of transfer of going concern as a whole or a independent part. You running business, you are transferring. Services associated with transit cargo to Nepal and Bhutan. Services of access of roads or bridge for which you are paying toll charges, no GST or toll charges. Services by way of granting national permits for truck and all, they will give national permits, state permits, that service is exempt. Transmission and distribution of electricity by electricity transmission and distribution utility. So these utilities are giving services, their services are exempt. Services provided to governmental authority by way of water supply, public health, sanitization, solid waste management or slum upgradation. Services by way of collecting or providing news by independent journalist, public library services, organizing business exhibition outside India. Services given by National Center for Cold Chain Development under Ministry of Agriculture Corporation. Services by Foreign Diplomatic Mission located in India. Services by way of public convenience such as provision of bathroom, washroom, lavatories, urinals, all these services are exempt. So these are the different services which are exempt under GST law. Now comes our which chapter, sir? Chapter called as input tax credit. From exam point of view, it is a little important chapter. What do you mean by input tax, sir? Input tax credit means what, sir? The definition says, the definition of input tax credit says, input tax credit means credit of input tax. If you are taking credit, meaning if you are taking benefit of tax paid by you on your purchases, that is called as input tax credit. What do you mean by input tax? Sir, what do you mean by input tax, by the way, sir? Input tax means the tax which is paid by you on your inward supply and includes taxes paid under reverse charge. Whatever taxes you are paying on your inward supply purchases is input tax, and it will include whatever taxes you are paying under reverse charge, taxes paid by you on your import of goods, or taxes paid by you under customs law. But it shall not include tax paid under section 10, because tax paid under section 10 is a composite tax that is not treated as input tax. So what is input tax? Whatever tax you are paying on your purchases. Then whatever tax is paid by you under reverse charge. Then whatever tax is paid by you on import of goods under customs law. Section 16 talks about eligibility. Who is eligible to take input tax credit, sir? Who is eligible to take input tax credit? Section 16 subsection 1 gives the condition with respect to that. Section 16 subsection 1 says, every registered person shall be eligible to take input tax credit on goods or services or both, which is used by him or intended to be used by him in the course of furtherance of business. So if any registered person is using, or even if he has an intention to use any goods or services in the course or furtherance of his business, then he can take input tax credit. Now, sir, are there any conditions for taking input tax credit? Yes, there are 6 conditions for taking input tax credit. There are how many conditions, sir? There are 5 majorly it is 5 conditions. 6th condition is anyways no point. Okay, what are the conditions for taking input tax credit, sir? What are the conditions for taking input tax credit? The registered person who wants to take input tax credit, he should be in possession of tax invoice, debit note, or any other tax paying document. He should have that document with him. He should be in possession of tax paying document. He should have actually received the goods or services or both. Except in case of bill to ship to cases, he should have actually received the goods or services, except in case of bill to ship to, where the goods, what is bill to ship to, sir? See, normally I should have actually received the goods or services. Even if I don't actually receive the goods or services, I can take input tax credit if this condition is satisfied. Where on the direction of the registered person, if the goods are delivered to a recipient, it shall be deemed that the registered person has received the goods once these goods are received by the recipient. For example, now I ask my supplier to give the goods to one of my customer directly instead of giving the goods to me. In that case, lawmaker says I can take input tax credit as soon as the goods are delivered to the customer, my customer. Then the supplier who wants to take input tax, the supplier should have paid the taxes if I want to take input tax rate, and the registered person should have filed the returns for taking input tax rate. Now, newly added condition is the registered person can take input tax credit if the details of supply made to him are furnished by his supplier in the GSTR1 and the same is communicated to him in his GSTR2A. Meaning, if I want to take input tax credit, then the person who is supplying the goods to me should have paid the taxes. The person who has supplied the goods to me should have filed a return called as GSTR1, and that information should be reflecting in my return called as GSTR2B. Then I can take input tax rate. This is newly added condition, very important condition. Provided that, sir, what if you said I can take when the goods are actually received? What if the goods are received in installment? ITC can be taken upon receipt of last installment. If the goods are received in lots or installment, you can take input tax rate when you receive last installment. Provided further that where the registered person does not make the payment to the supplier within 180 days from the date of invoice, then ITC availed by him shall be reversed along with interest at 18% per annum. So if I don't take, if the registered person does not make the payment to the supplier within 180 days, if the registered person does not make the payment to the supplier within 180 days, then if I don't make the payment to the supplier within how many days? 180 days from the date of invoice, then whatever ITC I have taken, I should reverse along with interest at 18% per annum. Interest should be calculated from date of taking credit till the date of reversal of credit. We'll see that. And once I pay the money, I can re-avail the input tax credit. Now this condition, 180 days condition. Let us say I had purchased goods for worth 1 lakh, on which GST amount was 12,000 rupees. So total amount is how much, sir? 1,12,000. Okay. Now this credit was taken by me on 15th of May while filing my GSTR 3B. Now normally I should pay the money within 180 days which is 27th of September. 180 days is calculated from which date, sir? From the date of invoice. I did not pay the money within 180 days. Therefore, can I say I should reverse the input tax credit? I have reversed the input tax credit while filing the return for September, which is on 20th of October. I reversed the input tax credit. And later I made the payment on 20th of December. Now, because I did not make the payment within 180 days, I should reverse the input tax rate, which I have done. Now, the provision says I should reverse the input tax rate along with interest at 18% per annum. So, interest will be calculated from which date, sir? Interest will be calculated from the date of taking the credit till the date of reversal of credit. Okay. So, on the date when I took the credit till the date I am reversing the credit, interest will be calculated and I will have to pay that interest. So, interest will be 12,000, which is the GST amount, into 18% is the rate of interest, into 158 divided by 368. So from this date till the date of reversal, it comes to 158 divided by 365 days, 935 rupees is the interest. Sir, what if in between if I have made part payment, then only on the unpaid amount you will have to reverse the ITC along with interest. Section 16.3 talks about input tax rate on capital goods. Can I take input tax rate on capital goods? Lawmaker says yes, definitely you can take input tax rate on capital goods. Where a registered person has claimed depreciation on the tax amount of capital goods. If the registered person is claiming taking depreciation on the tax component, tax amount of capital goods under income tax law, then ITC on such capital goods shall not be available. Meaning, if a registered person takes depreciation on the tax amount of capital goods, he cannot take input tax rate on such capital goods. For example, I purchased a capital goods worth rupees 1 lakh, GST amount is 18,000. So total amount is 1,18,000. So if I capitalize in my books of account 1,18,000, that means I will be taking depreciation on 1,18,000. Therefore, I cannot take input tax rate. However, if I capitalize only the base amount and not the tax amount, I will be allowed to take input tax rate. In simple words, if you claim depreciation on the tax amount, no input tax rate will be given. Last date for taking input tax rate is section 16.4. What is the last date within which I should take input tax rate, sir? If I forget to check, see, normally I had to take ITC in the month of April, but I forgot. Lawmaker says no problem, take it in the May month. I forgot, take it in the next month. I forgot to take, sir. Till what time, till what date can I take input tax rate? So, if a person forgets to take input tax rate, then the last date for taking input tax rate will be 30th November of next financial year, or the date of filing annual return for that financial year, whichever is earlier. If by any chance I don't take input tax rate, I forget to take input tax rate, then I will have to, if I forget to take input tax rate, then by 30th November of next financial year, or by the date of filing annual return of that financial year, whichever is earlier, I will have to, I can take input tax rate on any invoice which I have missed taking ITC. So for example, invoice for October 24 is worth rupees 10 lakhs and the GST amount on this is 1,80,000. So this is an October month invoice was omitted to be recorded in the books and therefore no ITC was claimed. So I forgot to take input tax credit of 1,80,000 rupees. What is the last date for taking input tax credit? If I have filed my annual return on 15th of August. So if I file my annual return on 15th of August, then this date will come to 15th of August or 30th November of next year. Who is early, sir? 15th of August. I should take ITC by this date. Annual return is filed on 24th of December. If it is filed on 24th of December, then I will take which, sir? 30th November or date of filing annual return, which is 24th of December, whichever is earlier. Who is earlier? 30th November is earlier. Now, section 16 subsection 6 is a newly added section which says, if by any chance your registration has been cancelled by the proper officer, if by any chance your GST registration has been cancelled by the GST officer, proper officer, and it is subsequently revoked, the cancellation is revoked. In such cases, lawmaker says, where registration of a registered person has been cancelled by the proper officer and subsequently means what, sir? Later. If registration has been revoked by the proper officer and is subsequently revoked by an order, then if there is any unavailed input tax credit for that suspension period, then ITC on such invoices can be availed within the due date of section 16 subsection 4 or within 30 days from the date of revocation of order, whichever is later. Meaning what, sir? I was a registered person. Officer has cancelled my registration. Now I asked the officer, why did you cancel the registration? Then officer gave some reason. I gave some valid documents to him, because of which officer said, I'm really very sorry for cancelling your registration, and he gave back me my registration. In such cases, what lawmakers are telling? In such cases, lawmaker says, because he cancelled and gave back your registration, he revoked your cancellation, you can take input tax credit for that cancelled period, cancellation suspended period. What is the due date? Either take it by what date, sir? Either taking it by the date given in section 64 or take it by 30th November, whichever is earlier. So whichever is earlier among these two dates, whoever is earlier, within that time you are required to take input tax credit. Whichever is later, sorry, not earlier, whichever is later. Section 17 talks about apportionment of input tax credit. What do you mean by apportionment, sir? Distribution of input tax credit. Very easy section. Section 17 subsection 1 says, if any goods or services are, where any goods or services are both or are partly used for business purpose and partly used for any purpose other than business. So what is this point telling? If you have any goods or services which you are partly using for business purpose and partly using for any purpose other than business, then ITC on such goods and services will be restricted to so much of the input tax as attributable to business purpose. Sir, what do you mean by this? If you have any goods and services which you are using for business purpose and personal purpose, ITC will be restricted to only business purpose. For example, I have purchased an iPad on which I paid a GST of 18,000. 80% of the time I am using for business purpose and 20% of the time I am using for my personal purpose. Now what lawmaker says over here? ITC will be allowed proportionately only for 80%. Whatever I am using for business purpose. Section 17 subsection 2 says, where any goods or services are both are partly used for taxable supplies and partly used for making exempt supplies, then the ITC shall be restricted to so much of input tax as attributable to taxable supplies. Similarly, just like previous case was for personal purpose and business purpose. This point says, if you are using any goods and services for your, partly for making taxable supplies and partly for making exempt supplies. See, exempt supplies means no taxes required to be paid. Taxable supplies will have to pay taxes. Now, if you are using any goods for partly exempt supplies, partly taxable supplies, then I will give you ITC only for that amount, that portion which is used by you for taxable supplies. Similar, just as the previous case, the calculation will be over here. Now, the exempt supply in section 17.2 will also include supply attracting reverse charge, sale of land, sale of building, and transaction in securities. For example, above 3 points, I am making a taxable supply of 10 lakhs and exempt supply of 6 lakhs. So my total supply for this month is what, sir? 16 lakh rupees. Now I have purchased a shelf on which I have paid a GST for of 10,000 rupees. I purchased it for storing Maggie. So can I say this product which is purchased by me is used exclusively for supply of exclusively for taxable supplies? Because it is used exclusively for taxable supply, full input tax credit is available. I purchased a refrigerator which is used for storing milk, which is an exempt supply. Now the GST whatever I have paid, will I get credit, sir? No, because it is used exclusively for exempt supply. Computer and computer printer is used for both making taxable as well as exempt supply. Can I take input tax credit, sir? Lawmaker says ITC is allowed proportionately. How much will be allowed, sir? Total GST amount is 32,000. My taxable supply is how much in our case? 10 lakhs, and exempt supply is 6 lakhs. So total supply is 16 lakhs. So 32,000 into 10 lakhs divided by 16 lakhs will be allowed. 20,000 will be allowed. Proportionately it will be allowed. Next is the most important thing in your section 17. Blocked credit. What are the different items on which you cannot take input tax credit? The different items on which you cannot take input tax credits are motor vehicle which is used for transportation of goods. If you have any motor vehicle which you are using for transportation of goods, if you have any motor vehicle which is used for transportation, if you have any motor vehicle which is used for transportation of persons, and that motor vehicle has a seating capacity not more than 13, including driver seats, the seating capacity is less than 13, not more than 13, that is less than equal to 13, then you cannot take input tax credit. Meaning what, sir? If you are purchasing any motor vehicle, for what purpose are you purchasing? Sir, I am purchasing it for transportation of goods. Lawmaker says no problem, I will give you input tax credit. No, sir, I am purchasing it for transportation of persons. Lawmaker says if you are purchasing it for transportation of persons, then lawmaker says I will see the seating capacity. If the seating capacity is more than 13 including driver seat, ITC will be allowed to you. But if the seating capacity is less than 13, ITC will normally not be allowed to you. However, even if the seating, normally what, sir? Normally meaning in general, if you purchase any motor vehicle whose seating capacity is less than 13, will you get input tax rate? No. If you are purchasing a motor vehicle for transportation of goods, will you get input tax rate? Yes. If you are purchasing a motor vehicle for transportation of person and has a seating capacity more than 13, will you get ITC? Yes. If you are purchasing a motor vehicle whose seating capacity is less than 13, no ITC. However, even if it is less than 13, ITC will be given in some cases. Which cases, sir? If you are further supplying motor vehicle, if you are giving training in motor vehicle, if you are involved in transportation of persons business. Meaning I am Ola Uber, or my business is only buying and selling motor vehicle, and or I am a person who is driving school, training in motor vehicle. Now, vessels and aircraft. Vessels and aircraft. Vessels and aircraft. If you are purchasing any vessel or aircraft, ITC cannot be availed by you on such vessels and aircraft. If you purchase any vessels and aircraft, can you take ITC? No, sir. However, ITC will be allowed in following cases. See, normally if you purchase any vessel or aircraft, if you purchase any vessel or an aircraft, ITC will not be given to you. However, ITC will be given to you if your business is only supplying vessels and aircraft. You are giving training in vessels and aircraft. You are involved in the business of transportation of persons. For example, Indigo, AirAsia. You are in the business of transportation of goods through vessel and aircraft. ITC will be allowed. Sir, I understood that I cannot take ITC when I purchase motor vehicle, vessels or aircraft. But sir, what about the service cost, repair and maintenance cost and insurance cost on these motor vehicle, vessels and aircraft? Lawmaker says that for that also ITC will not be allowed. If you incur any service cost, repairs cost, maintenance cost, ITC will not be allowed. However, ITC will be allowed for all these things if ITC is allowed at the time of purchases of motor vehicle, vessels and aircraft, or if you are a person who is involved in business of manufacturing motor vehicle, vessels and aircraft, or you are a general insurance company. In simple words, if I am a person who got input tax credit at the time when I purchased vessel aircraft, motor vehicle, then now I will get input tax credit for service cost, repair cost, insurance cost also. Or if I am a person who is in the business of manufacturing vessels and aircraft, then also I can take input tax credit here. ITC is not allowed for foods and beverages. ITC cannot be taken by you. On what, sir? You cannot take input tax credit on foods and beverages. You cannot take input tax credit on You cannot take input tax credit on foods and beverages, outdoor catering, beauty treatment, health services, plastic surgery, cosmetic surgery, or if you are involved in leasing, renting, hiring of motor vehicle, vessels, and aircraft, or you are in life insurance business or health insurance business. So if you are in the business of, if you are purchasing anything for your purpose, for what, sir? You are purchasing what? You are purchasing, I am having a sari business, I am purchasing foods and beverages. No ITC. I am taking outdoor catering services. No ITC. I am taking beauty treatment, healthcare services, plastic surgery. No ITC. I am taking a car, bike on rent. Leasing, renting, hiring of motor vehicle, vessels and aircraft. No ITC. I am taking any life insurance or health insurance for my employees. No ITC. ITC on these items will be given only if I am in the same line of business. Meaning, if I am a restaurant taking services from another restaurant, ITC will be given. If I am an insurance company taking services from another insurance company, ITC will be given. ITC will not be given if you take membership of any health club, fitness center. ITC will not be given to you if you are giving any travel benefits to your employee, extending travel benefits to your employee. On these cases also ITC will not be given. Now please note, on all these things, ITC will be allowed to you if there is a statutory obligation on the employer to provide the same to employee. On all the above things, ITC will be given if there is a statutory obligation. Sir, what do you mean by this point, sir? ITC will be given if there is a statutory obligation. Meaning, if you are legally bound to do this, if any law is telling you to give foods and beverages to your employees, if any law is telling you to give transportation services to your employee or pick up and drop facility to your employee, if any law is telling you to take health insurance for the employee, then ITC will be allowed. Then ITC will not be allowed if you are taking any works contract or if you are purchasing any goods and services for construction of an immovable property, except where that immovable property is a plant and machinery. ITC will also not be allowed if you are purchasing any goods and services for which you have paid tax under section 10. ITC will not be allowed to you if you are purchasing any goods or services which is used for personal consumption. ITC will not be allowed to you if you are purchasing any goods and services if the goods and services are purchased by a non-resident taxable person. However, he can take input tax credit on the goods which is imported by him. ITC will not be available on the goods which are lost, stolen, destroyed, written off or disposed of by way of gift or free samples. And what, sir? A company will not be eligible to take input tax credit on goods and services for which is used for corporate social responsibility and goods and services on which tax is paid because of fraud. Section 18. Section 18 talks about what, sir? Input tax credit in special circumstances. So there are some special circumstances. What will happen to your input tax credit in those circumstances? Section 18 subsection 1 clause A, where a person is liable for registration. Now what is this point telling? If you are a person who becomes liable for registration, and you apply for registration within 30 days of becoming liable, then you can take ITC on the inputs which is held by you in stock 1 day prior to the date of liable for registration. So if you are a person who is liable for registration and you apply for registration within 30 days of becoming liable, then lawmaker says you can take input tax credit. On what can you take input tax credit? On whatever inputs you had, whether it is raw material, work in progress or finished goods, 1 day prior to the date of liable for registration. What if I apply for voluntary registration, sir? So where a person has applied for voluntary registration. Now please note, unless I am a registered person, I will not be able to take input tax rate. So if I am a person who has applied for voluntary registration, then on the date, see, I would have started the business today, but after 10 days I would have taken for registration. In that case, today whatever I am purchasing, I cannot take input tax rate. I can take ITC only if I am a registered person. So what is this point telling? If you are a person who has applied for voluntary registration and such registration has been granted to you, then you will be eligible to take input tax credit on whatever inputs are held by you 1 day prior to the date of grant of registration. If a composition dealer is converting himself into a regular dealer, then he can take input tax credit on inputs held in stock by him as well as capital goods which are held by him 1 day prior to the date of change, 1 day prior to the date of change from composition dealer to regular dealer. He can take input tax rate on inputs as well as capital goods. How on capital goods, no, ITC when he is taking, he should reduce the ITC amount by 5% from the date he purchased that capital goods till the date he converted himself into a regular dealer. Section 18 subsection 1 clause D. If a registered person exempt supply is becoming taxable supply, if a registered person's exempt supply is becoming taxable supply, then he shall be entitled to take input tax credit on inputs held in stock as well as capital goods held 1 day prior to the change. So here also ITC you can take, and in case of capital goods you will have to reduce the ITC by 5% per quarter or part thereof. Then section 18 subsection 4 talks about reverse case, meaning if a regular dealer becomes a composition dealer or a taxable supplies becomes an exempt supply, then you will have to reverse the input tax credit. Whatever you have done above, you will have to do reverse of that. And 18.2 says under 18.1 you are allowed input tax credit in some scenarios. If those invoices are older than 1 year, then on those invoices ITC will not be given. Meaning under 18.1 whatever ITC will be given to you will be only for those invoices which are not older than 1 year, whose age is less than 1 year. 18.3 says ITC in case of change in constitution of a business. If there is a change in constitution of a business, meaning what, sir? If there is amalgamation, merger, demerger, or partnership firm is becoming LLP or a private limited company, etc. Whenever there is a change in constitution of business, by way of, if there is a change in constitution of business by way of sale, merger, demerger, death of a sole proprietor, with a specific condition that the liability also will be transferred. In such cases, the unutilized input tax credit of the old company can be transferred to the new company. Whatever unutilized input tax credit was there with the old company, it can be transferred to the new company. Section 18 subsection 6 talks about, very important section, this is capital input tax credit, supply of capital goods or plant and machinery. Normally, I am not in the business of selling a capital goods or plant and machinery. For my business is normally selling sarees. But if I sell any capital goods on which I had taken input tax credit, at that time, if I sell any plant and machinery on which I had taken input tax credit, at that time I will have to pay the taxes. How much tax I will have to pay? The tax calculated on the transaction value of such capital goods or plant and machinery. The tax calculated at, meaning whatever price, at whatever price I am selling that capital goods or plant and machinery, on that I will compute the tax amount, or the tax calculated at that the ITC of such capital goods or plant and machinery shall be reduced by 5% per quarter or part thereof from the date of purchase of that capital goods or plant and machinery till the date of sale. For example, I had purchased a motor vehicle on 2nd of September 2022 for 15 lakhs and paid a GST of 18% on this. This motor vehicle was sold by me on 31st of August 2024 for 6 lakh rupees. Now normally I am in the sari business. Normally my business is not to sell plant and machineries or motor vehicles, but I am selling this motor vehicle. No, lawmakers are telling you will have to pay the taxes. How much will I have to pay? Whatever sale price is there into GST, sale price into tax rate, which will come to 1,08,000, or how much ITC you had claimed. Sir, 15 lakhs into 18%, I had taken a total input tax rate of 2,70,000. Now reduce this ITC by 5% per quarter for a period of 9 quarters. Reduce it by 5% per month. Every month you reduce how much, sir? 5% for how many quarters? 9 quarters. Sir, why sir 9 quarters? From 2nd of September, which falls in July, August, September quarter. So if you see over here, 2022, we have 2 quarters. 2023, all the 4 quarters. 2024, April to September, 3 quarters are there. So whatever, how many ever quarters are there, for that many quarters you subtract 5%. So how much will I subtract, sir? 45% in this tax amount. So whatever amount is higher amount, that is the amount of tax which you have to reverse. Then job work. Section 19 talks about job work. ITC in case of job work. Now what do you mean by job work, sir? Job work means what, sir? You are undertaking any process on goods belonging to another person. You are doing any work on goods belonging to someone else, then you are doing a job work. Now here the persons on goods on whose goods you are doing the work is called as a job worker, and the person who is doing the job is called as job worker, and the person on whose goods you are doing the job work is called as a principal. What is the provision telling, sir? Section 19(1) says the principal will be allowed to take input tax credit on whatever inputs are given by the principal to the job worker. Similarly, the principal will also be eligible to take the ITC on inputs which are directly sent by the principal to the job worker. Please note, I can take, say for example, I am asking someone to do job work on my goods. Now the goods belongs to me, no, therefore I can take input tax rate though the goods are with that person. So principal will be allowed to take input tax rate on goods sent to job worker for the purpose of job work, and principal will also be eligible to take input tax credit on goods which is directly sent to the job worker by the supplier on the direction of principal. Now these goods which are sent for job work, no, they should come back to me within 1 year. If they are not coming back to me within 1 year, then it will be deemed as supply, and therefore I will have to pay the taxes. Whatever goods I am sending for job work, they should come back to me within 1 year. If they don't come back to me within 1 year, or if they are not sold from job worker location within 1 year, it will be deemed as supply and I will have to pay taxes. Section 19 subsection 4 talks, section 19 subsection 4, principal can take input tax rate on capital goods. Now section 19 1 to 3 talks about normal goods. Section 19 4, 5, 6 talks about capital goods. What is this section 19(4) telling, sir? The principal will be allowed to take input tax credit on capital goods which is sent by the principal to the job worker. Similarly, if any capital goods are directly going to the job worker on my direction, then also I can take input tax credit. However, these these capital goods which are going to the job worker should come back to me within a period of 3 years. If they don't come within 3 years, then it is deemed as supply. Section 20 and 21 talks about input service distributor. Now what is this concept of input service distributor, sir? Now what is this input service distributor? Normally what happens is one of the unit may be only supplying goods, maybe only making inward supply, and there is no outward supply made by that particular unit. In such cases, no, that unit can be registered as an input service distributor for distributing the credit. Now how will the credit be distributed? The credit will be distributed based on a invoice. How are they going to distribute, sir? Now they are going to distribute it to such person to which the credit actually relates. Meaning input service distributor, when he is distributing the credit, if the credit is attributable to one specific recipient, then you will have to give the credit to only that particular recipient. Meaning I have purchased something for one of my branch, then I will have to give that ITC to that branch only. I have purchased something for 2-3 branches. Whatever credit is there, I will have to give it to the 2-3 branches. In simple words, I I'll take example before actually discussing this. Say Reliance Digital has its head office in Mumbai. Now the head office in Mumbai does not undertake any sales. The sales are happening by all the Reliance Digital stores near you. Okay, head office is only purchasing different goods and services for the purpose of these units. Now, one of the item which they purchased was for entire South India. They took some advertisement services for which they paid GST. Now, South India will cover what, sir? Bangalore and Chennai. So, how many units are there? Bangalore, Chennai, Mumbai, Jaipur, and Delhi. So, for entire South India, they took the services. So, this GST amount of 15,000 is not related only to Bangalore. It is for entire South India. So, this GST amount will be distributed proportionately to Bangalore unit and Chennai unit. Then, income tax return filing services was taken. Now, income tax return filing services, it is taken for all the units. So the GST amount of 40,000 will be distributed to all the units proportionately. Meaning similarly, last legal services was taken only for Bangalore unit. It will be distributed only to Bangalore unit. Meaning what, sir? In simple words, input service distributor is a person who is making only inward supply for its different branches, for its different establishment. So whatever inward supply it is making, whatever inward supply or inward supply it is making, on that input tax, it can distribute it to its different units. For distribution, it will have to take a registration as an input service distributor. And whom can it distribute, sir? If it is attributable to one single branch, give it only to that branch. If it is attributable to more than one branch, then give it to those branches. If it is attributable to all the branches, give it to all the branches. Section 21 talks about what, sir? Excess ITC. If any excess ITC is distributed by input service distributor, then that excess IT is required to be reversed by you along with interest. Along with what, sir? Interest. Now, section 49 subsection 1, it talks about manner of utilization of input tax rate. How should I take input tax rate, sir? What is the procedure for taking no, how should I utilize the input tax rate? Whatever input tax rate I have, how should I utilize it? Section 19 subsection 5 says manner of utilization of input tax rate. So if you have any input tax rate, it can be used for making the payment of output tax. How will I use it? If it is an IGST credit which is available with you, you should first use it for the purpose of paying IGST liability. Then you should use it for paying CGST or SGST in any proportion. If I have IGST credit, I will use it for making the payment of IGST liability first and then use it for CGST or SGST in any proportion. Similarly, if I have CGST credit, I will first use it for making the payment of CGST, then use it for making the payment of IGST. The CGST amount will never be used for making the payment of SGST. Similarly, if I have SGST credit, I will first use it for making the payment of IGST, then use it for making the payment of, first use the CGST for CGST, then use it for IGST, but never use it for CGST. Please note, IGST, CGST, SGST. First, you should use them all for their own purpose. Then IGST can be used for CGST, SGST in any proportion. CGST will be used for CGST first and then IGST, but it will never be used for SGST. Similarly, SGST will be used for SGST first, then IGST, but it will never be used for CGST. IGST credit can be utilized for making the payment of CGST and SGST in any proportion. IGST credit should be completely utilized, only then you can go to CGST and SGST for using their credit. CGST can never be used for paying SGST, as well as vice versa is also true. CGST will be utilized for making the payment of IGST only when this SGST will be utilized for the purpose of making IGST only when the CGST does not have any credit left over. Now we'll do one thing, we'll solve a beautiful question. Okay, we'll take up a question to understand this concept. So if there is a question which is coming to you for computation of tax, for what, sir? For the purpose of, if they ask you any question for finding what is the net GST payable. For example, we'll take this question. Very simple question. Miss Sonali, a supplier of goods, pays GST under regular scheme. Miss Sonali is not eligible for any threshold exemption and she has made the following outward supply. So she has made a sale within the states of she has made a sale within the state of 5 lakh rupees, and to another state she has made a sale, interstate supply she has made is 8 lakh rupees. She furnished the following information in respect of purchases made by her. What is the purchase made by her, sir? She purchased within the states for 10 lakh 20,000 and from another state she purchased goods worth rupees 4 lakh 80,000. The rate of GST on purchase is what's purchase as well as sale is 16%, CGST 16% SGST and 12% IGST. Both inward and outward supply which they have given over here are excluding tax amounts. All conditions for taking input tax rate is satisfied. Calculate the tax payable by her. Now I'll teach you the format first. This kind of question should be answered in three steps. First, you should compute always computation of First, you should always do what, sir? First, you should always do computation of output tax, for which you take particulars, IGST, CGST and SGST. Now, what are the different supplies which is made by this person? One supply he has made within the state and another supply he has made interstate supply. How much is the supply made within the state? 5 lakh rupees and 8 lakh rupees is another state. Correct? Yes, sir. So 5 lakhs into within the states, if you make CGST, SGST is applicable. So what is the GST rate I'll apply? 6%. And this is 8 lakhs into what is the GST rate I am going to apply? 12%. So 5 lakhs into 6% is how much, sir? 30,000. 30,000. CGST and SGST. 8 lakhs into 12% is how much? 96,000. So this is the total GST which you have to output GST. Output tax is how much? 96,000. CGST has to pay 30,000. SGST, sorry, 96,000 IGST. CGST is 30,000 and SGST is how much, sir? 30,000. Second thing which we have to do is compute the total ITC available. I will write the complete format. So any question which you have, you can use this format and fill the figures. You will get the answer. Step number 2. Computation of total input tax credit. Here also particulars, IGST, CGST, SGST. Now here the question, first what will I take, sir? I'll write the format for your better understanding. First you should always take opening input tax credit if it is available. In the present question we don't have opening input tax credit. After taking opening input tax credit, you should take input tax credit on purchases. Input tax credit on purchases. So you see all your purchases. In the purchases which you have, what is the credit which is allowed or eligible? that you take. Now, in our case, this is a very simple question. So both the credits are available to us. Intrastate supply 10,20,000. So on my purchases made within the state, intrastate supply 10,20,000 is the amount, into GST will be 6% because it is within the states. So I will write what, sir? 10,20,000 into 6%, 61,200, 61,200. Similarly, I will take ITC on interstate supply, 4,80,000. So this tax amount comes to how much, sir? 57,600. So you take this and do a total. 57,600, 61,200, 61,200. After this, you add ITC on tax paid under reverse charge mechanism. Now this is something which will not be applicable for all the questions. Maybe one of the question which you are solving, it may have this adjustment. If it has this adjustment, please take up this adjustment also. So this will give you the total input tax rate which you have. 57,600, 61,200 and 61,200. This is the total ITC which you have. Now we should find the final figure, which is how much tax I have to pay. So for that, step number 3, computation of GST payable. How much GST I have to pay? Same particulars, IGST, CGST, SGST. So I will take my output tax liability. How much output tax am I liable to pay? Sir, how will I come to know this? This we have done the working in the first case, 96, 30 and 30. This is my output tax liability. 96,000, 30,000 and 30,000. So this is my output tax liability, the tax which I have to pay on my outward supply. From this I will subtract my input tax credit according to section 49 subsection 5. So I should subtract the input tax credit amount from this. First I will subtract IGST. How much is the IGST credit I have? 57,600. Now I have 57,600. First IGST I should give it to whom, sir? IGST only. After giving to IGST, is there anything left over with IGST? No. So will I give anything to other people? No. Then I have CGST. How much I have CGST, sir? 61,200. Now the CGST first I will give it to whom, sir? I will give it to CGST. How much will I give? 30,000. Can I give anything to SGST from CGST? No. Now after giving this also, I have something left over. How much is left over? 31,200. Now see, IGST wants some amount. How much it wants? 38,400 it wants. CGST has 31,200 left over. So I will give CGST amount to IGST. Sir, how did you come to know that CGST has so much left over? CGST credit is how much? 61,200 minus 30,000 I have given to CGST over here. What is 30,000 I have given over here? No. After that, how much is left over? 31,200. This I will give it to whom, sir? IGST. Next, I will go use SGST credit. How much SGST credit is there? 61,200. I will give this to whom, sir? SGST. After giving to SGST, is there anything more which is required by IGST? Sir, see sir, 96,000 was what was required. 57,600 you gave, 31,200 you gave, minus, so this is required, sir, 7,200. So I'll give 7,200 because SGST has 31,200. So I'll give this amount. What is my net GST payable, sir? My net GST payable is 0. Correct. To this, I will add, if any available, tax on reverse charge. So if there is any tax which I have to pay at reverse charge, then I will add that also. This will give me GST payable in cash. This will give me GST payable in cash. Yes, so this is all about this beautiful question. This is the format which you should use. You will never be wrong. Okay. So we'll do one thing. We have now procedural aspects left over and customs left over, which we'll discuss in our next class and complete the discussion on indirect taxes. So tomorrow we'll meet again. Hello friends, welcome back. So welcome to the last stage of completing this discussion on marathon of indirect taxation. So in this video, we'll be completing the complete discussion on indirect taxation marathon. So let us start our discussion. Now the leftover topics are procedural topics, very small topics. From maybe in 1.5 hours we'll be able to complete these points. So registration is the next chapter. Registration, section 22 to section 30. These are the different sections which are covered under this chapter called as registration. Section 22 talks about who are the persons liable for registration. Who are those different persons who are supposed to take registration under GST law? Section 22 subsection 1 says, the supplier of goods and services shall obtain registration in the state or union territory from where he is making taxable supply of goods or services or both, if his aggregate turnover exceeds 20 lakh rupees. What is this point telling, sir? If you are a supplier of goods or services or both, and if you are making taxable supply of goods and services, then you will have to take registration. When will you have to take registration? If you are making taxable supply of goods and services, you will have to take registration if your aggregate turnover exceeds 20 lakh rupees. Okay, so who has to take registration? A supplier. Where should he take registration, sir? In the state or union territory from where he makes taxable supplies, and if his aggregate turnover exceeds 20 lakh rupees. Now this limit is 10 lakh. Normally what is the limit, sir? Normally the limit for registration is 20 lakhs, but this limit will become 10 lakhs in case of 4 special category states. In case of what, sir? In case of 4 special category states, this limit will become 20 lakhs instead of 10 instead of 20 lakhs, the limit will become 10 lakhs. Which are these 4 special category states? Manipur, Mizoram, Tripura and Nagaland. Make my trip to Nagaland. Manipur, Mizoram, Tripura and Nagaland. In case of these 4 special category states, normally how many special category states are there? 11 special category states are there. But however, only for these 4 states, that limit will be, the limit will be what, for 10 lakhs instead of 20 lakhs. Okay. So for example, if I am doing business in Karnataka, Kerala, Tamil Nadu, Andhra Pradesh, and my turnover is 21 lakhs, 15 lakhs, 3 lakhs and 5 lakhs. Now should I take registration only in Karnataka because my turnover is 21 lakhs? Now lawmaker says I should see aggregate turnover. What do you mean by aggregate turnover? Aggregate value of all taxable supplies, exempt supplies, export of goods or services, interstate supply to a person having same PAN. This aggregate turnover, when you are computing, you should calculate it on all India basis. And when you are calculating aggregate turnover, do not include taxes under GST as well as inward supply liable for reverse charge. So here my aggregate turnover came to 44 lakhs. Sir, how it came to 44 lakhs, sir? I will take the turnover or the sales made by me or the supplies made by me in all the different rates in the India. So whatever supply has been I have made throughout India, that will be taken into consideration. Then, and please note, what if I am making taxable supply as well as exempt supply? Now here, because I am making taxable supplies and exempt supply, my aggregate turnover is crossing 20 lakh rupees. However, I will have to take registration only in that place where I am making taxable supplies. So wherever I make exempt supply, I should not take registration, because provision says you should take registration in that state or union territory from where you are making taxable supply of goods or services. Then further, there is a notification. See, normally the limit for taking registration is 20 lakhs, and in some 4 special category states the limit is 10 lakhs. Now we are going to see some scenarios where the registration limit will be 40 lakhs. Sir, when will the limit for taking registration become 40 lakhs? Exemption from registration or notification number 10/2019. Any person who is exclusively engaged in supply of goods. If you are a person who is exclusively engaged in supply of goods, meaning if you are supplying only goods and whose aggregate turnover does not exceed 40 lakh rupees. If you are a person who is supplying only goods and if your aggregate turnover is not exceeding 40 lakh rupees, if you are a person who is supplying only goods and your aggregate turnover is not exceeding 40 lakh rupees, then you can take benefit of this particular section. So any person who is exclusively engaged in supply of goods and whose aggregate turnover does not exceed 40 lakh rupees will be exempted from taking registration. He does not have to take registration. So in simple words, if a person supplies only goods and his aggregate turnover is up to 40 lakh rupees, he will be exempted from taking registration. Sir, but normally you told 10 lakhs and 20 lakhs limit. No. Yes. If you are a person only supplying goods, not even 1 rupee services should be there. If you are supplying only goods, this limit of 10 lakh, 20 lakh will not be applicable. For you, the limit of 40 lakhs will be applicable. Now, conditions are there. Above notification shall not apply for a person who is required to take compulsory registration. So if you are a person who is required to take compulsory registration, for you this is not applicable. A person who is supplying only notified goods. If you are supplying pati bricks, pan masala, aerated waters, tobacco products, ice cream and bricks, roofing tiles, etc. For you also this limit of 40 lakhs is not applicable. Hey, please note, first person was who, sir? If you are a person for whom compulsory registration is applicable, meaning you are required to take registration under GST law compulsorily. So if you are a person for whom compulsory registration is applicable, then for you this particular section, notification number 10/2019 will not apply. So if you are a person who is supplying only notified goods, if you are supplying only notified goods, for you also this section will not apply. If you are a person who is doing business in notified states, if you are a person who is doing business in notified states, which are these notified states? Num must time pass. Num must time pass means what, sir? Nagaland, Uttarakhand, Manipur, Meghalaya, Mizoram, Arunachal Pradesh, Sikkim, Tripura. These are the same 8 states for whom the limit for composition scheme was 75 lakhs. So these are the same 8 states for whom the limit for composition scheme is 75 lakhs. For these states, for them, this 40 lakh limit will not apply. Meaning, if you are doing business in these different states, for you the limit of 40 lakhs will it apply, sir? Answer is no. The lawmaker says, for you the limit of 40 lakhs will not apply if you are doing business in which state, sir? If you are doing business in these different states. And also Telangana and Pondicherry. So these are the states for which limit of 40 lakhs will not apply. Then a person who has obtained for voluntary registration. So if you have taken registration on voluntary basis, please keep that registration. I will not disturb you. Now, so basically, if you see this synopsis of this, limit for registration. If you are supplying services, then 10 lakhs or 20 lakhs, depending upon where you are. 10 lakhs will be for Manipur, Meghalaya, Tripura, Nagaland, and 20 lakhs will be for all other states and union territories. And the limit will be, if you are supplying goods, Then up to 10 lakhs in Make My Trip to Nagaland. 20 lakh rupees to whom, sir? To whom, sir? To all the states other than those covered under where, sir? All the states other than those covered under this notification number 10 by 2017. And for all other, if your dealer only dealer of goods, 40 lakh rupees. Now, note section 22 subsection 3. Section 22 subsection 3 says where a person where a business of a taxable person who is registered under GST law is transferred by way of succession or going concern, then the transferee should obtain the registration as on the date of transfer or succession. What is this point telling? If the business of any person is transferred, how is the business transferred? As a going concern. If the business of any taxable person registered under GST law is transferred as a going concern. What do you mean by this? If the running business of any person has been transferred, okay, if the running business of any person has been transferred, then in such cases, the transferee, the new person, will have to take registration under GST law. For example, my business, I am planning to sell my business, and my business, I am selling it to you. So my business which I was doing in my name. I was using my PAN for doing the business. Now, because the business is transferred to you, you will be doing the business. The business will be done by you in your PAN. Therefore, you will have to take a registration under GST law in your name. You will have to take a registration under GST law in your name. Then section 22 subsection 4 says notwithstanding to anything contained in section 22 subsection 1 and section 22 subsection 3, meaning not following what is given in 22.1 or 22.3, in case of transfer of business because of High Court order. If there is an amalgamation, merger, demerger happening because of High Court order, then the transferee should obtain registration from the date of certificate of incorporation of the new company. Then the transferee will have to obtain registration from the date of what, sir? Certificate of incorporation of the new company. So, if there is an amalgamation, merger, demerger happening because of High Court order, now whichever new entity has been formed, no, that will have to take registration under GST law. Then section 23. Section 22 talks about who are the persons who are required to take registration under GST law. Section 23 talks about persons who are not liable for registration. Who are the different persons who are not required to take registration under GST law, sir? Section 23 says if you are a person who is making only, if you are a person supplying only exempt goods or services. Who is not required to take registration, sir? A person who is supplying only exempt goods or services does not have to take any registration. So because you are supplying only those things which are exempt, why will you take registration? See, if you are supplying something which is exempt, that means you don't have to pay GST on that particular transfer. So when you are not liable to pay GST on that particular supply, then what is the point of you taking registration? So if you are making only exempt supply, don't take a registration. A person who is making only non-taxable supplies. So if you are a person who is making only non-taxable supplies, the supplies are not taxable at all, what is the use of you taking registration? So if you are making supply of only those things which are not taxable, alcoholic liquor for human consumption, high-speed diesel, petroleum crude, you don't have to take registration. Further, if you are an individual or an HUF who is an agriculturist, if you are an agriculturist who is supplying produce out of cultivation of land, if you are an agriculturist who is supplying whatever is produced out of cultivation of land, then a person who is making interstate taxable supply of services up to 10 lakh, 20 lakh. So if you are making interstate taxable supply of services, for you the limit of 10 lakh, 20 lakhs will apply. But however, if you are making interstate taxable supply of goods, you will have to take registration to GST law. But for services, 10 lakh, 20 lakh limit is there. Similarly, a person who is making taxable supplies taxable under reverse charge. I am an advocate who is supplying those items which are taxable under reverse charge. So do I have to pay the taxes, sir? As an advocate, because my supplies are taxable under reverse charge, I will not have to pay any taxes. Now, because I don't have to pay any taxes on my outward supply, what is the point of me taking registration? Yes, when I am not even liable to pay taxes on my outward supply, what is the point of me taking registration? So, person who is making supplies which are taxable under reverse charge, and a person who is making interstate supply of notified goods. If you are a person who is making interstate supply of notified handicrafted goods. So if you are making supply of handicrafted goods, handmade goods, then for you also the limit of 10 lakh, 20 lakh will apply. And those people who are supplying services through an e-commerce operator up to 10 lakh, 20 lakh. Normally, if you are supplying services, goods through e-commerce operator, you have to take a registration. But if you are supplying services through e-commerce operator, for you the limit of 10 lakh and 20 lakh will apply. Basically, if you are a person who is supplying services, for you normally the limit of 10 lakh or 20 lakh will apply. Section 24 talks about who are the different persons who are not live, who are required to take registration under GST law compulsorily. Who are those persons who are required to take registration under GST law compulsorily? A theory question can be asked on this point. A person who is making interstate taxable supply of goods. If you are making interstate taxable supply of goods, you are required to take registration to GST law compulsorily. There is no limit applicable to you. If you are a person who is making interstate taxable supply of goods, for you there is no limit applicable. You will have to take registration to GST law compulsorily. If you are a casual taxable person making taxable supplies, if you are a casual taxable person who is making taxable supplies, casual taxable person means what, sir? Any person who is going and doing business occasionally at a place which is not his usual place of business. So such casual taxable person will have to take registration to GST law compulsory. Then a person who is liable to pay tax under reverse charge. So if you are any person who has to pay the taxes under reverse charge, if you are a person who is liable to pay the taxes under reverse charge, see, if I am supplying goods or services taxable under reverse charge, I don't have to take registration. But if you are a person who has to pay the taxes under reverse charge, you will have to take registration to GST law compulsorily. Then a non-resident taxable person making taxable supplies. If you are what, sir? If you are a non-resident taxable person who is making taxable supplies, if you are a non-resident taxable person who is making taxable supplies, you will also have to take registration to GST law compulsory. Non-resident taxable person making taxable supplies. Then, if you are an e-commerce operator who is required to collect the taxes under section 52, if you are an e-commerce operator who is required to collect the tax under section 52, if you are an e-commerce operator who is required to collect the tax under section 52. So section 52 is there, which says if you are supplying through an e-commerce operator, for example, Priya Sarees is supplying its goods through Flipkart. Now Flipkart is an e-commerce operator. Now Flipkart is an e-commerce operator who is covered under section 52. Whenever I make a sale through Flipkart, the payment also comes to me through Flipkart only. So Flipkart, no, at the time when it is making payment to me, it will have to collect the taxes under section 52. Now Flipkart, to collect the tax under 52, they will have to take registration to GST law compulsorily. Then e-commerce operator who is required to pay a tax under section, okay, next is a person who is supplying through e-commerce operator liable to pay tax under section 52. So Flipkart has to take registration because it has to pay tax under section 52, and Priya Sarees also will have to take registration to GST law because it is making supply through Flipkart. Then e-commerce operator who is required to pay tax under section 9 subsection 5. If you are an e-commerce operator who is required to pay tax under section 9 subsection 5, you remember 9(5), 4 e-commerce operators are listed over there. If you supply through e-commerce operator, Ola, Uber, etc. So they are covered over here. Persons who are required to deduct the tax under section 51. If you are a person who is required to deduct the tax under section 51, you are also covered. Input service distributor is also required to take registration to GST law compulsorily. OIDAR service provider, online information database access and retrieval service provider, they also have to take registration to GST law compulsorily. Then any person who is making taxable supply of goods or services on behalf of another person. So if you are acting as an agent of any person, then you will also have to take registration to GST law compulsorily. A person who is supplying on online money games from outside India. So if you are involved in if you are involved in this supply of online money games business from any location outside India, you will have to come to India and take registration to GST law compulsorily, and such other persons as may be notified by government. Next is section 25, which talks about what is the procedure for taking registration. Now, if you become liable for registration either under section 22 or section 24, 22 is limit based, 24 is compulsory registration. So if you become liable, for registration, either under section 22 or 24, then you will have to apply for registration within 30 days of becoming liable. If you become liable for registration, you will have to apply for registration within how many days? Within 30 days of becoming liable, you will have to apply for registration. However, a casual taxable person and non-resident taxable person has to apply for registration 5 days before commencement of business. See, normally, when do you have to take registration, sir? Normally, when will you have to take registration? Normally, you will have to take registration within 30 days of becoming liable. Correct. Normally, you will have to take a registration within 30 days of becoming liable. However, if you are a casual taxable person or a non-resident taxable person, you will have to take registration at least 5 days prior to commencement of registration. Then, normally, single registration will be granted to you for the entire state or union territory. For the entire state and union territory, for you, how many registration will be given? For the entire state or union territory, normally to you, one single registration will be given. How many registration will be given, sir? For the entire state or union territory, normally, they will give you one single registration. However, if you have place of business at multiple locations, normally single registration will be granted for entire state or union territory, but if you have place of business at multiple locations in a state or union territory, then you may apply for more than one registration. So normally in one state, how many registration will government give me? Only one registration. But if I have business at multiple location in the same state, please note, if I have business at different states, no problem, I'll get different registration. I will definitely get different registration because the states are different. But in the same state, will I get different registration, sir? For example, I am Priya Sadis having business in Chennai, Anna Nagar, T Nagar, Nungambakam. Now, normally, I will be able to get single registration. But because they are at different location, I want to take separate registration, sir. Can I take? Lawmaker says yes. If a person has an unit at SEZ location, then he should obtain separate registration for such unit. Further, see, normally in a state, how many registration will be given to me? Single registration. But if you have business at multiple location, you can apply for multiple registration. However, compulsorily, if you have a place of business in SEZ location, see, normally in your state, no, government will notify some areas as an SEZ location. If you are doing business in that SEZ location, then for that SEZ business unit, you will have to compulsorily apply for a separate registration. Then a person can apply for a registration on a voluntary basis. As a person, you can apply for registration on a voluntary basis even if you are not liable for registration. Normally, I will have to apply for registration only when I am liable. But sir, I am not liable for registration, sir. Still, I want to take registration. Can I take? Lawmaker says yes, you can take registration on voluntary basis. Section 25.4 and 25.5 talks about what, sir? Deemed distinct person. What is this deemed distinct person, sir? We did not study. We studied, in separate topic only we studied. Section 25.4 says, if you have obtained more than one registration, whether in a state or in union territory, then each of those registrations be deemed as distinct person. 25.5 says, sir, if you have an establishment registered in a state or union territory and also have another establishment in another state or union territory, this establishment will be treated as distinct person. Then, PAN is required compulsorily for obtaining registration. If you want to take registration under GST law, what you are supposed to obtain, sir? You are required to obtain PAN. However, if you are taking registration as a TDS person or TCS person, meaning as a tax collector or tax deductor, then instead of PAN, you will have to give what's a TAN number. For non-resident taxable person, other documents are specified for taking registration. For a non-resident taxable person, they have specified some other document. What are those documents? Self-attested copy of passport along with an authorized representative who is an Indian resident having a valid PAN. Then registration will be granted to you only after proper verification of the application, and once you are registered, you will be given something called as GST IN, and if you are a foreign embassy, you will be given something called as UIN. See, the registration application form is called as form GST REG01, and once the registration is granted to you, you will get your registration certificate in form GST REG06. GST registration number is a 15-digit number wherein first 2 digit will be your state code. Then after that, the next 10 digit will be your PAN number. After that, you will have a number 1, 2, 3, 4, etc. based on number of registration you have. Then there will be a Z, and last digit will be a checksum digit. Now, one important question which they normally ask from this topic is the question with respect to effective date of registration.
Sir, what is this effective date of registration?
Effective date of registration means what, sir? Effective date of registration means from which date is your registration valid from. Effective date of registration means what, sir? From which date is your registration valid from or effective from? So it depends on how you have applied for registration. Have you applied for registration because you were liable for registration, or have you applied for registration on a voluntary basis? Sir, I applied for registration because I was liable for registration. I applied for registration because I was liable for registration. Then, see, normally, if you are liable for registration, you should apply for registration within 30 days of becoming liable, correct? So, I am going to check if you are liable for registration, have you applied for registration within 30 days or after 30 days? Sir, I have applied for registration within 30 days. If you have applied, if you were liable for registration and if you have applied for registration within 30 days of being liable, then for your effective date of registration will be the date when you were liable for registration. Sir, no, sir, I was liable for registration, but I did not apply within 30 days. Then your registration will be effective from the date when they grant you the registration certificate. Sir, what if I have applied for voluntary registration? For you also, the date when they give the registration certificate, grant the registration certificate, that date will be taken as effective date of registration. Please note, what do you mean by effective date of registration? From which date is your registration valid from? From which date is your registration valid from? That is called as effective date of registration. Then we have section 26, which talks about deemed registration. So if you have taken registration under CGST Act, if you have taken registration under SGST Act or UTGST Act, it will be deemed that you have taken registration under CGST Act, because in our entire discussion from first section to last section, which we are going to discuss under GST law, we are discussing about which act, sir? CGST Act. So this point says, if you have been given registration under SGST or UTGST, that means that you are also given the registration under CGST. Then section 27, another important section under registration chapter. Section 27 talks about what, sir? Special provisions which are applicable to a casual taxable person or non-resident taxable person. Sir, what are the special provisions applicable to a casual taxable person or a non-resident taxable person? Who is a casual taxable person? First, casual taxable person means a person who is occasionally undertaking the activity of supply of goods or services or both at a place which is not his usual place of business. So if you occasionally undertake the activity of supplying goods or services or both at a place which is not your usual place of business, you will be called as casual taxable person. Then who is this non-resident taxable person, sir? Non-resident taxable person means a person who is coming from outside India and doing business in India occasionally. He will be called as non-resident taxable person. Now, these two, whether you are a casual taxable person or non-resident taxable person, you will have to take registration under GST law compulsorily. For you, what is applicable, sir? Compulsory registration is applicable. Then they will have to apply for registration 5 days prior to commencement of business. From the date when they are planning to start the business, 5 days before that only they will have to take registration. 5 days prior to commencement of business. Then the registration will be valid for number of days they are applying or for 90 days, whichever is earlier. For how many days will their registration be valid? Number of days they want to apply their registration for, or 90 days, whichever is earlier, whichever is less. Sir, can they extend their validity? Sir, can they extend their validity? Answer is yes, they can extend their validity. Their validity can be extended only once. And how many days can they extend, sir? They can extend it to how many ever days they want, or 90 days, whichever is less. Okay, they can extend for whatever number of days they want, or 90 days, whichever is less, the extension will be given to them. Further, see, casual taxable person, non-resident taxable person, they have to take registration with GST law compulsorily at least 5 days prior to commencement of business, and validity will be 90 days or number of days are applying, whichever is less. Now, these people also have to pay tax in advance. If you're a casual taxable person or a non-resident taxable person, you will also have to pay tax in advance at the time of registration. At the time when you're taking registration, no, you'll also have to pay tax in advance on the basis of the estimated turnover of the validity period. Sir, how will I come to know how much tax I have to pay in advance? That will be based on the estimated turnover. It will be based on what's estimated turnover for the validity period. So what is your estimated turnover for that validity period? Meaning you're taking registration for 20 days. So for 20 days, how much sales you are going to make, turnover you are going to make, estimate that now only and pay the taxes. If you are extending the validity, for that extended period also, you will have to pay extra tax. Sir, because I am paying an estimated tax, sir, it may be possible, no sir, I would have paid less tax. Yes, in case of short payment, please pay the balance amount while filing the returns. Sir, what if I have paid excess? Then they will give you as a refund. Section 28. Section 28 talks about what, sir? Section 28 talks about amendment in registration. Sir, what do you mean by amendment in registration? Now, I have applied for registration by giving some information. Correct. I have taken registration under GST law by giving some information. Now, there is a change in this information which is already given. For example, I have changed my address. I was doing business at one place. Now I started doing business at some other place. So what is happening, sir? Here there is a change in the details which is submitted by me at the time of taking registration. So lawmaker says, because there is an amendment, you please intimate about this amendment to the government. How many days? Within 15 days intimation should be given. Amendments can be either in core fields or it can be in non-core fields. If amendment is in core fields, for example, trade name, principal place of business or additional place of business or owner's details, they are all amendment in core fields. Whatever amendment is there, you should inform it within 15 days. Now, if it is an amendment in core field, the GST officer will approve it. The proper officer is going to approve it, and normally he will approve in 15 days time. What if the amendment is in non-core field, sir? Then it depends on whether it is amendment in non-core fields means what are the goods or services you are dealing in, who is the authorized signatory. In such cases, no approval will be required. It will be approved automatically. Then cancellation of registration. Now, this also a theory question can be asked in this cancellation of registration. What is cancellation of registration, sir? Now, I am closing my business. Because I am closing my business, what is the use of registration now? So I can cancel my registration. Or I was dealing in some items which were taxable. Now government has told those items will become exempt. So I can cancel my registration. Now here, what is the provision telling about, sir? Cancellation of registration. Registration can be cancelled by the proper officer, that is GST officer, or legal heirs of the registered person, or the registered person himself can cancel the registration. In which scenarios? If the business is discontinued, if they have stopped doing their business, if there is a change in constitution of business, or where the taxable person is no longer liable for registration. If your business is discontinued by you, if there is a change in constitution of your business, or if you are no longer liable for taking registration under GST law. In these three scenarios, your registration, you can yourself cancel your registration, or you can make an application to the officer and ask him to cancel the registration. But there are some cases in section 29(2), they have given the cases where the registration will be cancelled only by the GST officer. In these scenarios, you cannot cancel. Only the officer has the power to cancel. Which scenarios, sir? If the registration has been obtained by you by way of fraud. If you have obtained registration by what, sir? If you have obtained registration by way of fraud, if the registration has been obtained by you by way of fraud, misstatement, suppression of facts, etc., or the registered person has contravened the provisions of the law, or the person has applied for registration on a voluntary basis and has not started the business within 6 months, or where the returns are filed by the registered person for a continuous period of 6 months or 2 quarters, you have not filed your returns for a continuous period of 2 months, or you have contravened any of the or such other reasons as may be given in rule number 21A. See, officer will cancel your registration if you obtain registration by fraud, or you have contravened the provisions of the law, meaning you are not following the GST law properly, or you have applied for registration on voluntary basis. You have taken registration because you wanted, voluntarily you have taken registration. Even after taking registration on voluntary basis, you have not started business for a period of 6 months, or where returns are not filed by the registered person for a continuous period of 6 months or 2 quarters, or such other persons reasons as may be prescribed. Now, sir, what are the reasons given in 21A, sir? 21A says if you are not doing business, from the place where you have mentioned in registration certificate. In your registration certificate, you have mentioned that you are doing business in a particular area, but however, when the officer came over there, he is not able to find you, or you are issuing an invoice without supplying the goods or services. You are giving bill, but goods and services are not supplied by you, or you are violating the provisions with respect to anti-profiteering measures. If or you are not furnishing the bank account details which is required to be furnished at the time of taking registration, or you have violated the provisions of section 16 for taking input tax rate, or you have not filed your GSTR1 GST returns, you have not filed, then your registration will be cancelled by whom, sir? GST officer. Now section 30 is there. What is this section 30 talking about? Revocation of cancellation. Another important section. Revocation means what, sir? Sometimes what may happen is the GST officer, he himself may cancel your registration. Now, because the GST officer has cancelled your registration, you can apply for revocation. You can ask him to take back his cancellation order. This revocation of cancellation should be done within 90 days of the cancellation order given by the officer. Now, please note, if the GST officer is cancelling your registration, you can apply for revocation within how many days? Within 90 days. Within 90 days of he giving you cancellation order. And this period can be further extended. 90 days period can be further extended to up to 180 days. This 90 days period can be further extended up to how many days, sir? 180 days. So this is all about your beautiful chapter called as registration. Very small chapter, very easy chapter. From exam point of view also an important chapter. MCQ questions or some theory question can come from that chapter. Next is documents under GST law, tax invoice, debit note, credit note, etc. Now in this, there are two parts. One part we have already discussed under time of supply chapter. What is that part, sir? When is the invoice required to be issued under GST law? So in case of goods, if you are making a supply which involves movement in goods, invoice is required to be issued on or before removal. If you are making a supply of goods which does not involve any movement, invoice is required to be issued on or before delivery. If it is a case of continuous supply of goods, then invoice is required to be issued on successive statement date or successive payment date, whichever is earlier. And if it is a case of sale on approval basis, the invoice is required to be issued on the date of approval or 6 months from the date of removal, whichever is earlier. Then in case of services, normally invoice is required to be issued on or before completion or within 30 days from the date of completion. In case of services, normally you should issue an invoice on or before completion of services or within 30 days from the date of completion. Next, types of documents which are there under GST law, we'll see one by one. First document is tax invoice. When is the tax invoice required to be issued? All these documents, this is completely theoretical chapter. Whatever we are going to discuss going forward is complete theory. Nothing practical is going to come. Except customs. Tax invoice, it is a document which is required to be issued by a person who is making taxable supply. If you are making any supply which is taxable under GST law, you will have to give a document called as tax invoice. Now, if you are supplying goods, issue 3 copies of tax invoice. If you are supplying services, issue 2 copies of tax invoice. Why 3 copies, sir? One for the supplier, one is for the recipient, and one is for the transporter who is going to transport the goods. And in case of services, because there is no transportation involved, either supplier or recipient, they have to issue. Contents of tax invoice. What are the different contents of tax invoice? Name, address, and GST number of the supplier should be there. Document number should be there. Date of issue. Then name, address, and GST number of the recipient should be there. HSN code should be there. Description of goods and services. Quantity, unique quantity code of the products, rate per unit, value of supply, tax amount, total invoice value, whether a tax is recorded or paid under revert charge, who is preparing the invoice, his signature, and QR code in case of e-invoice. Now, what is important is what is important is this invoice number. What is this invoice number, sir? Invoice number is the number which you gave on the invoice, of course. There are some rules with respect to invoice number. This invoice number which is there, no, they should be unique for every financial year. This invoice number which is there, it should be unique for every financial year, and they should be consecutively serially numbered and should not have more than 16 characteristics. Invoice number should be unique for every financial year. They should be consecutively serially numbered and should not have more than 16 characteristics. It can contain alphabets and or it can be alphanumeric, etc. Invoice number should not have any special characteristics. Like for example, you like hashtag dollar. You should not have all these special characteristics. It can have only forward slash and hyphen or dash. HSN code. HSN code is one more thing which is required to be present in the invoice. This is one more thing which you are supposed to give, or you are required to put it in the invoice which you are issuing. HSN code. Now, what about HSN code, sir? HSN means harmonized system of nomenclature. It is an 8-digit code which is used for classification of goods and services. Why is this used, sir? It is used for classifying different goods and services. Aggregate turnover is up to 5 crores. How many digits should I give, sir? Because it is a 8-digit code, how many digits I should give in my invoice? If your aggregate turnover is up to 5 crores in a year, in the year, then for B2B supplies which you are making, you should give 4 digit, and for B2C supplies which you are making, you should give 4 digit. But for B2C supplies, it is an optional. If your turnover is more than 5 crores, then whether it is B2B or B2C, you should compulsorily give 6-digit HSN code. Now, normally, whenever you are making taxable supply, you should issue an invoice. However, invoice is not required to be issued by you if supply is made by you to an unregistered person and the value of that supply is less than 200 and that unregistered person does not require any invoice. If you are making a supply to an unregistered person, value is less than 200 and that unregistered person is not requiring any invoice. Instead of issuing individual tax invoice, they are required to issue a consolidated tax invoice. So for whatever supplies you have made to an unregistered person, no, instead of giving separate tax invoices, you have to give one consolidated tax invoices and keep it for yourself. And no signature is required on the invoice if it is computer generated invoice. Now there is a new concept called as e-invoicing, concept of e-invoicing. What is this concept of e-invoicing, sir? E-invoicing is a system wherein all the B2B invoices which are there are required to be authenticated electronically by GST portal for further use of common portal. So whatever e-invoicing means, what, sir? E-invoicing is a system by which all the B2B invoices which is issued by you are required to be authenticated electronically by GSTN. Under e-invoicing, an identification number called as invoice reference number will be issued for every invoice which is generated on the invoice registration portal. Now, who is required to generate e-invoice? All the registered person whose aggregate turnover starting from the financial year 17-18 is more than 5 crore rupees. So if you are a person whose aggregate turnover starting from 17-18 is more than 5 crore, then you will have to generate e-invoice. There are some people who are exempt from e-invoicing, meaning these people will not have to generate e-invoice. Who are these people, sir? Government CPICs. Who are these government CPICs? Government department, local authorities, cinema halls, passenger transport service provider, insurance company, banking company, financial institution, GTA and SEZ units. So these are the different people for whom the provisions of e-invoicing is not applicable. Then revised tax invoice. This is one more document which is required to be issued for all the revised tax invoice is a document which is required to be issued for all the supplies made by you from the effective date of registration till the date of grant of registration. Meaning, from the date when you became liable for registration till the date of grant of registration, whatever supplies you have made, for that supplies you will have to give a document called as revised tax invoice. Next you have bill of supply. Bill of supply is document issued for exempt supply. So if you have any exempt supplies, it is a document which is required to be issued for making exempt supplies or for paying taxes under section 10. So if you are making any supplies which are exempt under GST law, for making that exempt supply, you will have to issue a document called as what, sir? Bill of supply. So bill of supply is a document which is issued by those people who are making exempt supplies. Where a registered person makes taxable as well as exempt supply, he can issue one document called as invoice cum bill of supply. Receipt voucher. If you receive any advances, then you will have to give a document called as receipt voucher. A registered person on receipt of advances for supply of goods or services or both shall issue a document called as receipt voucher. Now normally at the time when you receive an advance in case of services, you will have to pay taxes. Correct. If you don't know the rate of GST, then apply the rate of 18%, and if you don't know the nature of supply, treat the nature of supply to be equal to interstate supply. Then refund voucher. Refund voucher is a document which is required to be issued where any advance is received for supply of goods or services or both, and subsequently no supply is made and no tax invoice has been issued, then the registered person shall issue refund voucher to refund such advances. So what is this refund voucher, sir? Refund voucher is a So whatever advances you have received, if you are refunding, if you are giving back those advances, then for giving back those advances, you will have to give a document called as refund voucher. Then what is payment voucher? Whenever you are making a payment to those people whose supplies are liable for reverse charge. So you would have taken services from an advocate and you would have paid taxes under reverse charge. Now you should also give a document to the advocate called as payment voucher, giving a proof that you have paid the money to advocate. Then we have delivery challan. Very important document. What is this delivery challan, sir? Whenever you are delivering the goods from one place to another place, you will have to, along with that, the goods, you will have to give a document called as delivery challan. So when is it required to be given? Whenever liquid gas are supplied. For supply of liquid gas where the quantity at the time of removal is not known, or you are supplying the goods to a job worker for job work purpose, or you are moving the goods for any reasons other than supply. Now this delivery challan also should be serially numbered, should not have more than 16 characteristics just like your invoice number, and it should be issued in triplicate. Now what is important is this particular point. If the goods are supplied by you in semi knocked down condition or completely knocked down condition, if the goods are supplied by you in semi knocked down condition or completely knocked down condition, then what is the procedure of issuing invoice and delivery challan? So if you are sending the goods in batches or lots or installment, then the supplier shall issue a complete invoice before dispatch of first lot. So before the first lot is going, you will have to give the full invoice, complete invoice. And supplier will have to give a delivery challan for subsequent consignment giving reference to the main invoice number. And for each and every subsequent consignment, you will have to give what's a delivery challan. The copies of corresponding delivery challan shall accompany the certified copy of original invoice. So first you will have to generate a invoice. Now where each and every movement of goods you will have to give what's a delivery challan. As and when a delivery challan is going, movement of goods is happening, you should attach a delivery challan along with copy of invoice, and the original copy of invoice should go with last consignment. Now next we have credit note and debit note. Credit note is a document which is required to which is issued to increase the decrease the value of invoice which is already issued by you, and debit note is a document which is required, which is issued to increase the value of invoice already issued by you. So if you have given an invoice and if you want to increase the value of that particular invoice, give a debit note. If you have given an invoice and if you want to decrease the value of that invoice given by you, give a credit note. So what are the different cases when credit note will be issued? If the taxable value given in the invoice is more than the actual value, if the tax rate given in the invoice is more than the actual tax rate, if the quantity is less than the actual quantity which is given in the invoice, or if the quality of the goods and services are deficient, and if the goods are returned by you. Similarly, credit note are required to debit notes are given to increase the value of invoice. So if the taxable value given in the invoice is less than the actual value of goods, if the tax rates is less than the actual tax rates, if the quantity received is more than the quantity declared on the tax invoice. Next topic is our topic of e-way bill. E-way bill is what, sir? Again, this is also a theoretical topic. E-way bill means electronic way bill. Electronic way bill, it is a compliance mechanism by which your digital interface will happen. The lawmakers are going to check the goods digitally instead of checking it physically. So e-way bill is an electronic document generated on the common portal for evidencing the movement of goods. What are the benefits of e-way bill, sir? Physical interface will pay away with digital interface. It will help in faster movement of goods, and it will improve the turnaround time of trucks. Then, when is e-way bill required to be generated? E-way bill is required to be generated whenever there is a movement of goods whose consignment value is more than 50,000, or that can be for reasons of supply, for reasons other than supply, or due to inward supply from an unregistered person. Now, this any person who is causing the movement of goods will have to issue the e-way bill, and this e-way bill is issued in a form called as Form GST EWV01. It has two parts, Part A and Part B. We will see that parts in some time. Then, who causes the movement of goods? Now, lawmakers told e-way bill is required to be issued by that person who is causing movement of goods. But who is causing the movement of goods, sir? Now, if the registered person undertakes the movement of goods, then the movement will be caused by him. If the supplier undertakes movement, movement will be caused by supplier. Recipient is arranging for transportation of goods, movement will be caused by recipient. And if the goods are supplied by unregistered person to a registered person, then the registered person who is receiving will have to generate the e-way bill. What do you mean by consignment value? Please note, e-way bill is required to be generated only if the consignment value is more than 50,000 rupees. What is the meaning of consignment value, sir? Consignment value means the value determined under section 15, which is nothing but transaction value plus additions in transaction value. So whatever value you have determined under value of supply as per section 15, which is declared in the invoice, bill of supply, delivery challan, and it shall include the taxes under GST, CGST, SGST, UTGST, IGST, but it shall not include the value of exempt supply if the goods are issued for taxable as well as exempt supply. Now, e-way bill is required to be generated compulsorily even if the value is less than 50,000 in case you are sending the goods to a job worker who is there in another state, or when you are moving handicrafted goods. Now, in case of bill to ship to, no, e-way bill is required, one single e-way bill is required to be generated. In case of bill to ship to, how many e-way bill is required to be generated, sir? One single e-way bill is required. Sir, what is this bill to ship to? That normal example which I take, Karina told me to supply the goods to Nayantara. Correct. So I will supply the goods to Nayantara and give the invoice to Karina. So bill to whom, sir? Karina. Ship to whom, sir? Nayantara. How many e-way bills should I generate? Only one single e-way bill is required to be generated. Now, what are the different information which I am required to give in the e-way bill, sir? In the e-way bill which you are generating, no, you are required to give e-way bill will be generated in a form called as Form GST EWV01, which will have two parts, Part A as well as Part B. Part A will comprise your invoice details, which will have GST number of the supplier, GST number of the recipient, place of dispatch, place of delivery, and tax invoice, the number, tax invoice number, date of invoice, value of goods, etc. And Part B will have the transporter's details, the transporter details such as document number and vehicle number. Now, transfer of goods from one conveyance to another conveyance. Transfer of goods. Now, what happens, sir? Many times, what may happen is the vehicle in which you are sending the goods, there may be accident of that particular vehicle. So now the goods may be transferred from one vehicle to another vehicle. In such case, what is required to be done? Where the goods are transferred from one conveyance to another conveyance. Theoretical question: the consignor or the recipient who has caused the movement of goods in part, or the transporter shall, before such movement of goods is happening, update the details of the vehicle number in Part B of e-way bill. They may assign the e-way bill number to another registered transporter for updating the information in Part B. However, once the details of the conveyance is updated by the transporter in Part B, consignor and the recipient who has furnished the detail in Part A shall not be able to assign the e-way bill to another registered transporter. What does this point say, sir? For example, you are sending goods in this particular vehicle, accident happened. Now, even though accident is happening, you will have to deliver the good to your customers, no? So two possibilities are there. You are shifting the goods to another vehicle of the same transporter, or the goods are shifted to another transporter. For example, I sent the goods in SRS Travels, one more vehicle of SRS Travels, or I am transferring the goods in VRL Travel. So I sent the goods in SRS Travels. Now the SRS Travels, there is a accident happened. Now I am shifting the goods from SRS Travels to VRL Travels. I am transferring the goods from SRS Travels to VRS Travels. Lawmaker says, in this case, you will have to inform them. You will have to update the details in part B. EV bill has two parts now. Part B, you will have to update the details. However, if the transporter himself is a SRS Travels, the transporter himself has updated the details, you will not be authorized to update it again. Meaning, if the person who has met with the accident, that person has already transferred the goods to some other vehicle, then you again cannot assign the EV bill number to someone else. Then EV bill can, whatever EV bill you are generating cannot be edited. It can be cancelled within 24 hours. Then you can issue a consolidated EV bill in form GST EWB02 if more than one person's goods are going in the same conveyance. Then what is the validity of EV bill? Sir, EV bill shall be valid for 200. For every 200 kilometer or part thereof, it will be valid for 1 day if it is other than over dimension cargo. And for over dimension cargo, it will be for every 20 kilometers or part thereof, it will be 1 day. Now, can I extend the validity, sir? Normally EV will be valid for this number of days, correct? So can I extend the validity? Yes, you can extend the validity either 8 hours before or 8 hours after expiry of validity. Now whatever EV bill you are generating, no, that is required to be accepted within 72 hours. Then there are some situations where EV bill is not required to be generated. Which are the situations, sir? When you are transferring LPG, kerosene, postal baggage, jewelry, currency, coral, worked or unworked coral, where the goods are transported in non-motorized vehicles, where the goods are transported from customs port to inland container depot, where the goods transferred are alcoholic liquor or petrol, etc., where the goods supplied are not treated as supply under Schedule 3, where the goods transported are in transit cargo to Nepal and Bhutan, where the goods are supplied to central government, state government, etc. There are some cases. Then the person who is in charge of that vehicle, the truck driver, should carry along with him the invoice as well as the copy of EV bill. Other points with respect to EV bill: in case the goods are transported by rail, no, then the rail driver need not carry EV bill, but he will have to still what, sir? See, where the goods are transported by rail, there is no requirement for carrying EV bill along with goods. However, delivery of the goods will not happen unless until you give the EV bill. Then EV bill can be generated even if the value is less than 50,000 rupees. EV bill is generated in one state shall be valid in another state. EV bill is valid for movement of goods, is not valid for movement of goods without vehicle number. EV bill cannot be edited, it can only be cancelled. And EV bill, you can update the vehicle number any number of times before the goods are delivered. You will be blocked from generating EV bill if you are a composition dealer and not paid the taxes for 2 consecutive tax period. If you are a regular dealer but not filed your return, GSTR 1 is not filed by you for 2 consecutive months or quarters, and your registration has been suspended. Next is returns under GST law. So what are the different types of returns which are there under GST law? Who has to file it? How is it required to be filed? A regular dealer meaning normally a person who is registered under GST law. A regular dealer is a person who is normally registered under GST law. He has to file a return called as GSTR1 as well as GSTR3B. GSTR1 is the return for outward supply and GSTR3 is a summary return. GSTR1, the due date is 11th of next month, and for 3B the due date is 20th of next month. Normally this is the due date. Okay. Now GSTR1 and GSTR3B is required to be filed by whom, sir? All the types of registered person except non-resident taxable person, input service distributor, TCS person, TDS person, or OIDR service provider. Now what are the contents of the GSTR1? This is one theory question which they normally ask. The GSTR1 should have name of supplier details such as supplier GST number, month, trade name, legal name, financial year, due date. It will contain all the outward supply details such as taxable, exempt, interstate, outward state, B2B, B2C, and it will also contain the details of advances received and adjusted, HSN summary, document issued number, etc. Now the supplies can be of two types, B2B supplies and B2C supplies. B2B supplies you should give invoice wise details whether it is interstate or intrastate. B2C supplies you should give state wise consolidated details if it is within the state. If it is between the states, then if the value is more than 2.5 lakhs, you should give invoice level details. If it is less than 2.5 lakhs, you should give state wise, rate wise details. See, normally the due date of GSTR1 is monthly, 11th of next month. However, if your turnover is less than 5 crore rupees, you can opt for quarterly filing of returns. Okay. See, normally GSTR1 is required to be filed on monthly basis. However, where a registered person has turnover is more than 5 crore rupees, he should always file the return in monthly basis. If your turnover is less than 5 crores, you have an option to file it on quarterly basis. Okay. If it is more than equal to 5 crores, more than 5 crores, always monthly, due date is 11th of next month. But if you are filing it on quarterly basis, if your turnover is less than 5 crores, you have an option to file it on quarterly basis. In such cases, 13th of next month following the quarter will be taken as due date. Now, GSTR 3B is a summary return wherein it will take the information about sales from GSTR 1 and information about purchases from GSTR 2B, and they'll ask you to make the payment of taxes. The contents of GSTR 1 are your basic details such as GST number, legal name, trade name, month, year, outward supply details, 9(5), interstate supply, inward supply, etc. These are the details which are required to be submitted. Then due date of GSTR 3B, normally it is 20th of next month. However, in case you are opting for QRMP, then it can be 22nd or 24th of next month. You don't have to remember these dates. So GSTR 3B, if someone asks you what is the due date, 20th of next month. GSTR 1 due date is 11th of next month. Now, if a person is opting for QRMP scheme, quarterly return monthly payment scheme, he can file his GSTR 1 once in 3 months on quarterly basis by 13th of next month following the quarter. Once the quarter is over, by 13th of next month, for example, July to April to June quarter, he can file it by 13th of July. Now, monthly payment means what, sir? Quarterly return. QRMP scheme means what, sir? File return on quarterly basis, make the payment on monthly basis. Monthly payment means you will have to pay the taxes by 25th of next month for the first 2 months of a quarter. Okay. And for the last month of the quarter, while filing the return of GSTR 3B, you should make the payment of taxes. How much tax I should pay? Tax payment can be either on self-assessment basis or fixed sum basis. Self-assessment means you only determine what is your tax liability for a particular month. Or whatever you have paid in last month, pay 35% of that in first 2 months. Then invoice furnishing facility. It is a facility. It is not a return. It is just a facility given to upload the B2B invoices for those people who have opted for QRMP scheme. For this, the due date is 13th of next month. It is just a facility. Then, what is the late fee for delay in filing? If your return is a nil return, then the late fees is 20 rupees per day for a maximum 200 rupees. And if you are not, if that return is a nil return means what, sir? No sales, no purchases, etc. If it is not a nil return, then rupees 50 per day, maximum 2000 rupees. If your turnover is up to 1.5 crores, if your turnover is more than 1.5 crores up to 5 crores, 50 per day, maximum 5000 rupees. And if it is more than 5 crores, 30 per day, maximum 10,000 rupees. Then the other types of returns which are there, you just have to know the type of return and the due date. GSTR 4 is a return which is required to be filed by a composition dealer. 5 is a return which is required to be filed by non-resident taxable person. What is the due date of composition scheme GSTR 4, sir? 30th April of next financial year. GSTR file due date is 20th of next month or within 7 days from the last day of validity, whichever is earlier. Input service distributor has to file a return called as GSTR 6 by 13th of next month. TDS person has to file a return called as GSTR 7 by 10th of next month. TCS person has to file a return called as GSTR 8 by 10th of next month. Annual return is required to be filed by you by 31st December of next financial year. And final return, once your registration is cancelled, should be filed by you called GSTR 10 within 3 months from the date of cancellation or cancellation order, whichever is later. And you also have to file something called as first return to be filed for supplies made from the date you are liable to registration till the date of grant of registration. Within 30 days you should file this. Late fees is something which you have already seen. Okay, customs law we'll see now. No, we have payment of tax, one chapter. One more chapter called as payment of tax is there under customs law, sorry, under GST law, and then we'll see customs and close our discussion. Normally, this chapter is required to be studied with your input tax credit chapter, payment of tax. See, normally, whatever your output tax is there, no, that can either be paid by utilizing of input tax credit or by cash. You can use input tax credit which you have to pay your tax on sales, or you can pay it in cash. Now, in this chapter, you are going to learn about three ledgers: electronic cash ledger, credit ledger, and liability register. Electronic cash ledger is what, sir? It is maintained in a form called as form GST PMT05. Now, whatever deposit you make towards interest, penalty, late fees, etc. by net banking or IMPS, NEFT, debit card, credit card, UPI, that will go and sit in your electronic cash ledger. Now, you can make the deposit towards tax, interest, penalty, late fees, etc. You can make the deposit using a payment challan. GST payment challan is GST PMT06. Normally, whatever deposit you make in the electronic cash ledger, you can make only through online modes. But however, physically you can make over the counter up to a maximum of 10,000 rupees. Transfer of amount in electronic cash ledger. Now, if you want to transfer money from one electronic cash ledger to another electronic cash ledger from of one registered person to another registered person under same PAN, you can transfer it by using a form called as form GST PMT09. Any excess amount which is there in electronic cash ledger can be claimed by you as refund. Electronic credit ledger form GST PMT02. All the input tax rate which you are taking will go in your GSTR 3B will go and sit in this electronic credit ledger. And there is a manner of utilization of input tax credit which you know. IGST should be used for paying IGST first, and then it can be used for making the payment of CGST or SGST in any proportion. Then CGST will be used for making the payment of CGST first, and then CGST first and then IGST. SGST also will be used for making the payment of SGST first and then making the payment of IGST. Now, IGST can be used for CGST, SGST in any proportion. Entire IGST should be used first before going to CGST and SGST. SGST will be used for paying IGST only when CGST is not there. Electronic liability register. Whatever liability a person has, liability can be either tax dues or other dues. Tax dues means what, sir? Paying GST amount, tax amount, CGST, SGST, UTGST, etc. So whatever tax dues you have, you should compulsory pay. You can either pay through credit or you can pay it in cash. But whatever other tax dues can be paid through credit or cash. Other dues which are there, interest, late fee, penalty, etc. they should compulsory be paid in cash only. Following liabilities should be paid in cash only. Now please note, normally tax can be paid in by using credit, but however these are the different things which you should compulsory pay in cash. What are the different things? Interest, penalty, late fee, or tax payable under section 10, or TDS under 51, TCS under 52, or payment of RCM liability. They should compulsory be paid in cash only. Now there is a particular order in which you should discharge your tax liability. First you should pay the tax, self-assessed tax and other dues related to previous tax period, then self-assessed tax and other dues related to current tax period. Then you should pay your other liabilities under GST law, including the demand under 73 and 74. Section 50 talks about interest liability under GST law. If you don't pay the taxes within the time, if you don't file the return within the time, then you will have to pay interest. Interest for delay in payment of taxes. Interest is calculated. Interest for delay in payment of taxes is calculated at 18% per annum from the date following the due date of payment till the date of actual payment. Meaning what, sir? Interest will be calculated on whatever unpaid tax is there from what, say 20th is the due date. Normally 20th of next month is the due date. So date after due date, from 21st till the date actually you pay the taxes, interest will be calculated. Now interest will be calculated on the net GST amount. So if you have taken excess input tax credit, no, then also you have to pay interest at what rate, sir? 18% per annum. Now, if there is a delay in payment of tax, that delay can be because of two reasons: because you have filed your return only late, or because you have not considered the amount in the return. If you have filed your return late, then interest will be paid only on that amount which is payable in cash. But if you have not considered the amount and filed the return within the time limit, then you should pay interest on the full tax liability which is payable by you. Now let us go to customs. Customs Act 1962. So Customs Act 1962 is the primary act which governs the provisions with respect to import and export of goods and levy of customs duty. Section Entry number 83 of list 1 of Union list of 7th schedule of Indian Constitution talks about, gives the power to central government. Union government means central government to levy taxes on import and export. So Customs Act 1962, what is the importance of this, sir? It provides for levy of custom duty, import of export procedure, prohibiting or restriction of certain goods. So what are the different rules and regulations which you are going to study? Not everything is applicable to you, only valuation rules is applicable to you. Now, where does this customs law extends to? Customs law extends to whole of India, including the state of Jammu and Kashmir. Whole of India. India means what, sir? India will include territorial waters of India up to 12 nautical miles, whatever area is there, no. Up to 12 nautical miles, whatever area is there, no, that is called as territorial waters. And up to 200 nautical miles, the area is called as continental shelf. Exclusive economic zone, sorry. Now, India extends up to how much area, sir? India means up to 12 nautical miles. Then Indian customs water, again theory question can be asked about Indian customs water. Sir, what is this Indian customs water, sir? Indian customs water is the area which is extending up to 200 nautical miles. Okay, Indian customs water, it includes territorial waters and extends up to 200 nautical miles. Bringing goods in exclusive economic zone or continental shelves for mineral exploration, etc., are considered as importation. So if you extract any minerals at that location, then also it will be treated as then also it will be treated as import of goods, and therefore custom duty will be levied. Now, what are the different definitions, sir? What do you mean by goods? Goods includes vessel, vehicle, aircraft. Goods means what? Goods means every kind of movable property, and which will include vessel, vehicle, aircraft, baggage, carriage, and any other movable property. Import means bringing into India from a place outside India. Imported goods means goods which are brought into India but not cleared for home consumption, for which you have not yet taken delivery. Once you take a delivery of the goods which is imported by you, it is no more imported goods. Dutiable goods means those goods which are subject to custom duty. Importer, any person who is importing the goods. Export means taking goods out of India to a place outside India. Export, goods which are intended for export. Exporter, person who is exporting. Custom station includes customs port, customs airport, international courier terminal, and land custom stations. Customs port, airport and port, etc. definitions are not relevant. Customs area will include the area where imported and exported goods are normally kept. Prohibited goods means those goods which cannot be imported or exported. Stores means the goods which are used in vessel or vehicle, or which are used for vessel and vehicles, and it includes fuel and spares which are there in vessel and aircraft. Chargeability of Section 12. Section 12, custom duty is levied on goods which are imported into India or exported from India at the rates given in Custom Tariff Act, and it include and yeah, custom duty is levied on goods and not on persons. So custom duty will be levied on goods which are imported into India or exported from India at the rate which is given in Custom Tariff Act. Custom duty rates are given in Custom Tariff Act. Now, what is the meaning of transit goods and transship goods? Transit goods means goods pass through India to another country. Goods arrive at goods. Transit goods means what, sir? Let me take an example. Say there is a ship which is coming to India and then going to Australia. Now in this ship A, B, C, D, E, 5 goods are there. 2 goods are unloaded in India and remaining 3 goods are going directly to Australia. Now these 3 goods C, D and E are called as transit goods. They have not unloaded into India, but they have just come and went. They have not been unloaded. A and B are unloaded in India. Out of this, goods number B is there, no, that will be transferred to another ship and that will go to some other location. Now this goods which is unloaded and transferred to another ship is called as transship goods, and whatever is kept within India, that is imported goods. Transit goods means goods pass through India to another goods pass through India to another country. Transit goods arrive at Indian port and are retransferred in another vessel or aircraft. Movement moves through the Indian territory remains within the same port. Duty, no custom duty will be levied on both of these goods. Reimportation means what, sir? Bringing back the goods into India which were exported by you. Whatever goods you had exported before, now if you are bringing it back to India, then it is called as reimportation. Then pilferage means what, sir? Pilferage means stealing the goods in small quantities, petty theft. Now please note on this, all these different things which you are seeing, no, on that custom duty is not leviable. Duty remission or down damaged and deteriorated goods. If your goods are damaged or deteriorated, when they are damaged, sir, if the goods are damaged or deteriorated, then the goods should be damaged or deteriorated before clearance, and it should not be due to negligence or misconducted. If it is damaged or deteriorated, then you will get duty abatement, meaning you will not have to pay custom duty. How much custom duty, sir? Whatever custom duty was there applicable before damage into value of damage divided by original value. That is the amount of tax which you will not have to pay. If the goods are destroyed, then you don't have to pay tax at all. If the goods are destroyed when, sir? Before clearance for home consumption due to natural or accidental reasons, then it will not, you don't have to pay any taxes. Relinquishment of goods also will not have to pay any custom duty. Relinquishment means what, sir? You have imported some goods. Now you don't want to keep it with you, you want to give it back to them. Types of duties. There are different types of duties under customs law. Now this types of duties section, Custom Tariff Act will talk about this. Custom Tariff Act 1975 talks about all the types of custom duty. Now first is what, sir? Basic custom duty. Basic custom duty is the basic duty which is levied as per section 12 of Customs Tariff Act. It is levied on assessable value. Then we have social welfare surcharge which is levied at 10% on the total value of custom duty. Then we have IGST which is levied on assessable value, basic custom duty, social welfare surcharge. Together on this, what will be levied, sir? IGST will be levied at whatever rate, the GST rate applicable in India. Then anti-dumping duty, if the government feels like levying anti-dumping duty, it may levy this duty. Purpose is to protect the domestic industries. It is levied for when the goods are imported into India at a very lower price, the price less than its normal value if they are imported. Then it will be levied for a period of 5 years and can be extended up to 5 years and extended up to 5 years. Safeguarding duty, to safeguard injury to domestic industry. To safeguard the injury to domestic industry, they will levy this duty called as safeguarding duty. And when is this safeguarding duty not leviable? That part you please study from the material ones. Very important theory question will be asked. Safeguarding duty will not be levied if you are importing goods from a single country and the value of that import is less than 3% of total import. If you are importing from more than one country, then the value of that goods is less than 9% of the total imports of that particular product. It can be levied for 4 years and can be extended up to 10 years. Countervailing duty on subsidized article, section 9. It is applicable for it is levied by foreign government whenever the foreign company is giving subsidy to any product, and the duty amount will not be more than subsidy. Compensation says it is levied on demerit goods or luxury items such as tobacco, irritated waters, and it is in addition to the IGST. It will be levied for a period of 5 years, but however they are still now levying. Export duty, whenever you are exporting anything, then export duty will be levied. Normally on export there is no duty levied, only on some cases it will be levied, and it is calculated on what values are assessable value. Now comes the most important chapter in your customs law, which is valuation of customs. Please understand this format for valuation. Valuation of customs says what, sir? Custom duties are levied on assessable value. Custom duty will be levied on which value, sir? Assessable value. So you take us. So first we will see how to find the custom duty. Then we will find assessable value. Everything will file one by one. Okay. We'll go a little slow because this question, one practical question, normally it will come in examination. We are studying a chapter called as valuation under customs law. Custom duty is levied on what amount, sir? Custom duties are levied on a value called as assessable value. So you take your assessable value, on that you add custom duty. What are the different custom duties which will be levied? First you are going to levy basic custom duty. On what amount? Whatever assessable value you have, into the rate of basic custom duty you will apply, you will get your basic custom duty rate. Then on this basic custom duty, on this basic custom duty apply 10%. You will get your social welfare surcharge. After levying social welfare surcharge, levy other custom duties such as protective duty, stamp safeguarding duty, anti-dumping duty. Once you levy all this duty, the total of assessable value with basic custom duty, social welfare surcharge, and other type of custom duty will be called as landed value. On this landed value, you will levy IGST and GST compensation cess. Okay, on this landed value, you will levy what, sir? On this landed value, you will levy GST, GST, that is IGST and GST compensation cess. Now the total of this is what, sir? The total value of imported goods. Your assessable value plus all the custom duties which you have paid, total will be called as total value of imported goods. Now if they ask you what is the total custom duty which is paid by you, then the total value minus assessable value, the total value of imported goods minus the assessable value of imported goods, this is your custom duty which you have paid. Now sir, how will I compute assessable value, sir? You said custom duty is required to be levied on assessable value. What is this assessable value? Assessable value means what, sir? Assessable value is also called as CIF value. What is CIF value? Cost insurance freight value. This is the value on which custom duty is required to be levied for imported goods. Okay. Now, how will I calculate this? First, you take value of goods at ex-factory price. I'll just give an example and explain this. Let us say this is Africa and this is India. I'm importing goods. I'm in India. I'm importing goods from Africa. Okay. Now, there is this company who is exporting the goods. Okay. This is the place where they are going to send the goods port. And then this is the water region. Now, please understand. Wherever the goods are manufactured, from there these goods will go to which location, sir? The port area. Then these goods will be loaded in the ship, correct? And then this ship is going to come to India, and then I'm going to take the delivery of the goods. Now, what are the different things which are involved over here? So when I'm doing custom duty valuation, first I will take the value of the goods at ex-factory price. Value of goods at ex-factory price. Ex-factory price means what, sir? At the exporter's factory price, before the goods are going from his location, what is the value of the goods? So they will be loaded in this ship, in this truck, So this is the value of the goods at X factory price. Then he will incur transportation charges from his factory to his port. Correct? So I will add the transportation charges from factory to port. Then he will load the goods in the ship. Loading unloading charges will happen. So he will unload it from truck and load it to the ship. Loading unloading charges will be applied. So loading and unloading charges. So these amounts together are called as FOB value. Okay. If they ask you to find the tax on export, not on import, export duty, then export duty should be levied on this assessable value, this FOB value. Export duty is levied on which value? Assessable value. But normally in examination they'll ask you import duty. Okay. Now please note, goods have still at which location, sir? They are in the exporting country only. Now the goods are going to come from this location to India, correct? So when the goods are coming from that place to India, there are a lot of extra expenses which may be incurred by you. The common expenses, which even if the question is silent, which you should definitely take, is the expenses with respect to insurance and freight. Insurance, you should take 1.125% of FOB value for customs, and freight you should take up to 20% of FOB value for customs. This is the amount of insurance and freight which you are required to take compulsorily. Now please note, if this 1.125%, 20% should be taken only if the question is not specifying anything about that. Okay. So apart from that, he may incur some other expenses such as design engineering charges, commission paid, etc. That also will be taken into consideration. Now we'll read it from the this chart which I have prepared. Assessable value or computation sheet. You first take value of the goods at the factory price, exporter's factory price. What is the value of the goods? Add freight and insurance from his factory to the port. Then handling charges or loading unloading charges which is incurred by him for loading into that ship. This will give you FOB value. This will give you what, sir? FOB value. Now to this FOB value you are required to add rule 10.1 additions. As per rule number 10.1, there are different things which you are required to add. What are those different things which you are required to add? Those are, you should add commission, any type of commission which you are paying except buying commission or purchase commission. If the question gives buying commission, please ignore it. If the question gives purchase commission, please ignore it. Except this buying commission or purchase commission, any other type of commission is there, please take into consideration. Packing charges is there, please taking into consideration, except cost of durable and returnable packing, because these are required to be written back to by you. Now durable and returnable packing are not added in GST also, correct? So you take commission, packing charges, design and engineering charges. Anything which is incurred by you for designing the product, engineering the product, only if the design and engineering work has happened outside India, add that. Royalties or license fees which is paid by you. Free material supplied by the importer. If the importer has supplied anything free of cost to the exporter, then value of subsequent resale, which is, this normally will not be there. See, normally what will be there? These things will be there. You will have value, freight and handling charges at the exporter's country location, that will give you FOB. Then you may have buying commission which you should not take, but you should take any other type of commission. Then you may have packing charges. If it is durable and returnable packing, don't take. Design and engineering charges you should take, and you may have bought out accessories or free material supplied by the importer. Now the total of FOB value plus these additions will be called as FOB value for customs. This is very important. This will be called as FOB value for customs. On this FOB value for customs, you are going to add actual cost of freight and actual cost of insurance, and you will get what, sir? Your assessable value. It is this assessable value on which you are going to levy custom duty. Now, when you are adding this actual cost of freight and insurance, there are two things which you are required to keep in mind. Now, please note, this is called as assessable value and cost insurance freight value. What are the important points? Please note. With respect to freight, normally goods are imported through what route? Always see in the question whether the goods are coming through sea route or air route. If the goods are coming to Sri route, meaning goods are coming to you in a ship or in a aeroplane. That is not a shark, that is an aeroplane. Goods are coming in a ship or in a aeroplane. If the goods are coming through sea route, then normally freight charges, whatever actually they have given in the question, only you will take. If they are coming in ship, whatever freight charges they have given in the question, you please take that only. Sir, what if nothing is given in the question? Then take 20% of FOB value for customs. Then take how much? 20% of FOB value for customs as freight charges. Sir, what if the goods are coming by A route? If the goods are coming by A route, take your actual charges or 20% of FOB value for customs, whichever is less. Freight charges, what will you take, sir? Actual freight charges or 20% of FOB value for customs, whichever is less. Please note, in case of sea route, always takes actual value, but actual is not given, 20%. In case of aeroplane, take actual or 20%, whichever is less. Sir, what if in both the cases actual is not given? Then take 20% of FOB value for customs. Therefore, if freight charges are not ascertainable, not given, take 20% of FOB value for customs. Then insurance cost. Insurance cost also, normally whatever they have actually given, you will take that only. Take insurance cost how much, sir? Whatever they have actually given. But if they have not given the insurance cost which you have to take is 1.125% of FOB value for customs. Please note, 1.125% of what, sir? Am I talking about FOB value? No, FOB value for customs. Now, because you're importing the goods, the goods will come from outside India. You may have to convert. See, normally the goods may be in foreign currency value, dollars or euros or pounds, etc. Now you have to convert this into Indian rupees for calculating the tax amount. So at the time of conversion, what is the exchange rate which I should apply? What is the exchange rate which I should apply? So the exchange rate for conversion. The exchange rate for conversion of foreign currency into Indian rupees, the exchange rate which is notified by CBIC only should be taken. Problem will happen. Question will give you exchange rate as per RBI, exchange rate agreed between the importer and exporter. All these are useless. You should take export rate which is what is this exchange rate which is notified by CBIC, Central Board of Indirect Taxes and Customs. This is the board which is taking care of indirect taxes and customs. Now, for imported goods, you take exchange rate as on the date of submission of bill of entry. See, whenever you are importing anything, whenever you are importing anything, you are required to submit something called as bill of entry. So, whatever exchange rate is there as on the date when you submitted your bill of entry, that date's exchange rate should be taken. And in case of exported goods, exchange rate as on the date of shipping bill or bill of export should be taken. Imported goods, exchange rate as on the date of submission of bill of entry. For export, take the exchange rate as on the date of shipping bill, also called as bill of export. Now, sir, what is the custom duty rate which I should take for valuation? For finding the value, what is the custom duty rate? See, exchange rate I understood, but what is the custom duty rate, sir? Custom duty rate as on bill of entry or entry inward, whichever is later should be taken. Bill of entry which you submit or bill of entry inward which is given by the officer. So, custom duty rate if you want to take it as per bill of entry or entry inward, whichever is later. And exported goods, you take duty for export goods, please take the custom duty rate as on the date of let export order. Assessable value for exportation. For export, what is the assessable value, sir? For export, it is very simple. Whatever is the value of the product at factory price, add insurance from factory to port, and then loading and unloading charges at port. That will give you FOB value. On that custom duty you apply. Now let us take this question. Nice question it is. SA and Company Limited have imported a machinery from UK from the following particulars furnished by the company arrive at the assessable value for the purpose of custom duty. They are asking you to find the assessable value. Very simple question it is. You just have to find assessable value. So they have given FOB cost. They have given FOB cost, and now please note freight, they have given air freight. So whenever they have given air freight, we know our freight charges will be what, sir? Actual or 20%, whichever is less. Design and engineering charges outside India, I should take it. License fee relating to imported goods payable as a condition of sale, that also should be taken. Materials or components supplied by buyer free of cost, that is also required to be included. Insurance paid to an insurer in India should be taken. Buying commission, also called as purchase commission, should not be taken. Now please note, first FOB price they have given, then they have given 10(1) additions, then we have to add 10(2) additions. Now 10(2) additions are only two. Only freight and insurance is 10(2) addition. All the other additions which you are doing, no, they are 10(1) additions. If you see over here, so for FOB value, I add few things: correct commission, subsequent resale packing charges. So these are all called as 10(1) additions. After adding that, you will get something called as FOB value for customs. On that, you add freight and insurance, that is 10(2) additions. Now they have given exchange rate as per bank, CBIC notified exchange rate. So should I take exchange rate of bank? No. CBIC notified exchange rate is important for us for converting this. And importer has paid 5,000 rupees as demurrage charges. Now please note, demurrage charges should not be taken into consideration. You should take it only if it is ship demurrage. Here it is air demurrage, not required to be taken. And demurrage charges should be taken after FOB value for customs along with freight charges. Now how will I take, sir? I'll take the FOB cost, rule 10(1) additions, I'll get FOB value for customs, insurance. Now here 20%. Now please see, freight they have given some amount which is 3,000 rupees. Now 3,000 UK pounds is more than 20%. Therefore I will restrict it to what, sir? 20% of FOB value for customs to find the answer. So first 10,000 I multiplied by 102.5 rupees because that is the exchange rate. Then similarly engineering charges and license fee and free material supplied by free of cost, they all will be added, you will get some amount. Okay. Yeah. So let us conclude our discussion on this topic over here only. That is all which we have, and it is very easy. Definitely, I know you will score great marks in your examination. I wish all the very best from my side to you all. God bless you with all the success. Wish you to see soon in finals. Thank you for being so patient. Thank you for being such great student. All the very best for your examination. Tada, bye bye, take care, enjoy.